Alrighty, thanks so much. Welcome everybody to the biggest event of the year, Trading Prep 2026. My name is Michael Katz. I'll be your host for today, and I'm super excited to be here with you. We basically have 7 hours packed with everything you need in order to make the next 12 months your best year so far. And we have gathered the top in the industry to teach you, to guide you, to share their knowledge, so you can definitely expect to get a lot from this event today. Just before we dive in, and I'll share the timeline and the schedule for today, let me get to know you a little bit better. So if you can share on your chat and in the comment section, what type of trader are you? Are you a scalper, swing, day trader? And also, which market do you trade? Is it Forex, stocks, futures, options? Share that with me on the comments. It will be amazing to get to know each other. You can also add on top of that where you're from in the world. We have many countries here right now with us. So that will be amazing. And I'm going to share my screen and show you guys at home the lineup for today. So let me do that. Alrighty. So if you're looking at the screen right now, and the guys in the back, if you can do the transition. Alrighty, so first of all, what we have right now, just a quick opening. I will go with you on the timeline, understand exactly what you can expect. We have $2 million in prizes for the entire day, so make sure you stick to your seat because there's gonna be some surprises going on along the way. At first, right after me, they're gonna be joined by Mitch, Money Mitch as we call it at Trade the Pool, and he will be together with Richard, and they will teach you or guide you through how to set up the right goals for 2026. Make sure you write down every note that they share in. They've been in the business for a long time and they actually know how to do that correctly. So listen to that. That will be for 30 minutes. Right after that, I'm going to interview one of those untraditional, let's call it that way, analyst, senior analyst, Udi Jacoby. He will be with me here in the office, and I'm going to ask you some tough questions about 2026 and the economical events we can expect to see. He's going to share some very unique ideas and his analysis on how the markets will look like at 2026, and even more than that. That will be a shocking, for sure, a shocking segment. So make sure you listen to that carefully. Right after that, you will listen to Dan and Chris coming from TrendSpider and Trade Ideas, are good partners of ours, and they're going to share how to use their tools and techniques through AI systems. So make sure you listen to that. That will cover futures, stocks, and Forex. And generally speaking, everything we're going to talk about today is going to focus on all markets. So you can easily take, even if you trade in Forex, you can easily take the strategy or the idea that we're going to share here today onto your systems and onto your markets. And of course, if you're doing stocks or futures, etc. Right after that, we're going to do a quick commercial break and also a giveaway. And then Saul, the CEO of The5ers, will join and teach you guys his scalping method. For those of you who are familiar with Saul, you've seen him on the live stream many, many times. He's a master of scalping when it comes to currencies, Forex. So make sure you watch him as well. After Saul, I will be presenting my buy the dip system, which I very well known with. I thought that for many, many years and share that through webinars and live events as well. And then we're going to have 4 different funded traders, 2 from the The5ers, 2 from Trade the Pools, that are going to share their knowledge, the way they passed through evaluation all the way to the funded and the payout stage. So make sure you write the notes, everything they share with you. Then the big debate, are you want to focus on one asset to trade or multiple assets? This is something that all traders come across with, and at the end of the day, you will find your own niche and your own way that fits you. But there's a lot of debates around it. If you want to focus on just one currency or one stock, one asset, or actually try to grab every day a different asset to trade on, especially when it comes to stocks. So that will be a very interesting debate between Josh, our guy from Trade a Pool, and of course Stefan, our guys on The5ers. Later on, we will have the mix between the brokers and the prop firm accounts, and that will be led by Michael Noss and LJ. Both of them are going to talk and share their knowledge about how to handle a prop account and a broker account simultaneously. And that's going to be a very interesting conversation to listen to, especially in these days when you have your own broker account, but also a prop account, how you handle both. And lastly, at the end of the session, we are going to do a live Q&A or AMA together with Saul and myself. And on top of that, we are going to announce two huge opportunities for you guys at home. So make sure you stick till the end. I know it's 7 hours and that's a lot, and you got many stuff to do along the day, but make sure you stick till the end. Keep that even on the side just to listen to it if you need to do other stuff. But it's going to be a huge event for today. And for those of you who've been with us for a while, you know that we're always aiming for that special delivery and actually focusing on education, sharing really a lot of the knowledge and experience that we all gathered throughout the years. So without further ado, let me bring the first guest, Money Mitch and Richard. Feel free to join here. It's coming right up. We might have a few surprises along the way, so make sure you listen to each presentation, each segment, because we are going to ask you some questions about what you just learned. And if you will know the answer, you might get a reward on that. Alrighty, who's coming next? I see Richard in the back. You can already jump in, and then where is Money Mitch? Alrighty, let's start with Richard. Carlo, can you add him? Check in. Okay. Alrighty. Okay, so we can start with Richard first. I see Richard in the back. Carlo, if you can add Richard, that will be amazing. Richard, are you good to go? Alrighty. Carlo, this is your cue. Remy, Jonathan, let's do it. I know the guys at home are waiting to get it. And Richard is an incredible performance coach of The5ers. So everything that he's going to share with you today is crucial to your understanding the ideas behind goals and why you need to set them up to achieve them correctly. Because, of course, you can always add tons of goals, but if you don't have it correctly or within a structure, then it won't be achievable. So make sure you do that. Listen, write the notes, and here we go. Okay, gonna stop my screen sharing, and we'll do that.
My screen up here. All right, let's get this screen up right here. And how we doing, traders? Good.
Okay, while the guys in the back are handling it, let me see some of the stuff that you wrote in the chat. And the guys in the back, let me know when you are ready, because we are definitely ready. I see Richard. All righty. Here we go. How's it going, Richard?
What's going on, guys? Good morning. You guys got me here? Good morning. Do you guys got me here? Michael?
Okay. Like always, a few technical stuff. Alrighty. Let's see what's going on here. I'm scrolling through your chat through the chat. Day traders, stocks, futures, crypto, San Diego, East Coast, US. Okay, I like that. Forex. See some bonjour. Okay, day trading. Okay, gaming. You gave it all. Okay, chart analysts, all generally. Forex and crypto. Alrighty.
What's going on,
Looking
guys? Can
strong,
you hear me?
guys.
Hey, how's it going?
Hey, what's going on, man? Good morning.
Good morning.
All right, are we all live here? We ready to go? Michael, what's going on? How we
It's
doing?
always like that when it comes to technology, right?
Do you hear me, Mike?
I can hear you. All good on my side.
At least good on my side here, guys. So I guess I will take the reins here and
Here
bring
we
us
go.
into it. All right, you guys got me here. Let's party, guys. Good morning. How we
interesting.
doing to everyone out there? All right, Michael, I'll take the reins here. I'm going to start up here and get to the slide game here. Let's start it up. First one up we're going to talk about, guys, is the real game. Of course, my goal here is to tell you guys all about having realistic expectations for the goals that you're looking for. And at the end of the day, guys, trading is not a marathon, right? We all know this. It's just the way things is. We wish it would be a little bit different, but of course, it's not a sprint. It's something that you have to really start getting under your belt, getting used to it, and becoming an everyday kind of approach, right? You know, that's one of the things that we really do at Trade the Pool. And of course, the 5ers team kind of follows the same kind of strategy: is come in with a professional mindset, right? Even if you're retail, because this is a business, right? And you need to treat it that way. And no one, very rare, does someone come into business and just completely kill it the first week, right? It takes a little bit. There's going to be some ups and downs. So I'm excited to get into different kind of conversations about this, and we can go a little bit back and forth. But Richard, what do you think specifically about trading as a marathon?
Trading as a marathon is something that we always talk about in the coaching calls, you know, that tortoise and the hare approach. Typically, I like to think of it like driving a car. You give it way too much gas, all you get is wheel spin. And so many times I see the traders that excel really quickly, it's unsustainable. Typically, it all comes crashing down as quick as it's gained. So from myself, my own perspective, I had to manage my expectations, bringing it all the way down from I want to make 10, I want to make 20% return a month, just to what would it be like to make 2%, maybe 3%. So definitely a lot of realigning expectations and looking at trading as a long-term perspective. But what about yourself? How do you approach your trading from a marathon or a sprint?
Yeah, the way that I like to think about it is that, you know, one of the things that I think traders always get into is a focus of, I need to be green today, you know,
Yeah.
and I think that that's one of the hardest things to kind of have a mentality on. I know when I first started trading, that was always my focus. It was just, can I be green? Can I be green? Can I be green?
Yeah.
It was this endless search for green. And then I realized at the end of the day, there's no way that every trading day is going to be green, right? And I think that the more that we're kind of realizing that and going to be honest with ourselves about that, I think we start to open up to the reality that, okay, so yes, I might have a losing day a week, or maybe it's two, right? But I need to understand that so that by the time I actually run into that day, I don't compound those losses those days, right? Because that's what a lot of traders will do. They run into the red day, and then now it's, I need this to be a green day. So they, bite down, start trading harder and harder, probably oversizing, going into the second area here, right? Oversizing, start forcing, chasing trades just to make back what you lost and then some. And I think that's the key there, right? Is that a lot of traders will go for the then some. And that's the problem, right? Is that you just usually, even on a day like that, that's a red day, you got to go and think, okay, how do I make this a marathon? Well, let's make this a survivor day where I'm not necessarily trying to get into the profits, but I'm just going to try to either hone down this loss or bring it back to zero. And if I can bring it back to zero, celebrate the day. I did my job, right? So I think that's the way that I like to approach it a lot of the times.
Yeah, let's quickly dive into a little bit of myth busting around this. So it took me 2 years to understand, in my perspective, what a profitable trader was. I thought a profitable trader was a trader that never lost. If you knew how to make money in the markets, why would you lose? So I did everything I could for the first 2 years to try and never have a red day. I would average into losing positions. I would trade without a stop loss. I would try everything I could, hedging, and it got to a point where after a couple of years, I could never find the holy grail I was looking for. I could never find this 100% winning day system. And so I had to frame the idea of losing into, is this a good loss? Is this a loss that I can take where I follow my plan? And some days we do that. We can do everything correct and we still end up with a red day. But it's super important to make sure that we're not trading our emotions and we're not putting the P&L before the process. And as traders, it's always a really good reminder to just breathe, catch ourselves and say, am I starting to trade my sense of self-worth? Mitch, you must have had this where you've been in a trade and you're like, I need this trade to win right now. I really need this trade to win. It could be, this is the trade that passes a funding account. It could be the trade that gets you a payout. Like we feel this sort of elevated sense of pressure on it. And it's really good as a trader, and a skill that is very, I'd say powerful as a trader long-term, is just to concentrate on, am I starting to trade my sense of well-being, or am I still trading my process? And I love to frame that in just good losses, because red days, hey, I have them, but at least they're filled with good losses. And they're the kind of days that become way less tilting, where as a byproduct, I'm less likely to revenge trade, oversize, and stuff like that. So that's something that's been super helpful for me, is just framing a trade into, this will be a good loss.
Yeah, I always talk about that when you do have a good loss, and a lot of people can't do this, but you got to also give yourself a pat on the back, right?
Yeah.
You got to, you got to give yourself that pat and be like, I did it right. You know what I mean? I lost the right way. And I know that sounds crazy, but the more that you admit to that, you'll at least be disciplined in your losses. And that's all we really need to do a lot of the times. That what defines a lot of the times is and we're going to get into this, guys, is stages of a trader. So get ready for this. I think what really defines traders in between, let's say, a non-profitable trader and a really profitable trader is a lot of the times just at first, just honing in on the losses, just minimizing that, right? Because usually they've already learned how to win. It's just more, how do I start really kind of milking this, right? And not just destroying my account with random trades because all of a sudden I see this and now I want to get out of my process, out of my approach and take a trade here. And those $50 are adding up. Those $100 are adding up, and they're taking away percentages of our potential yearly return, right?
Yeah. It creates a huge gap between the result we should have got if we followed our plan and the result we actually got. And knowing how to categorize those and look at the two objectively, that is one of the most powerful tools I realized, is when I can look at the result I should achieve if I follow my system versus the result I did achieve, That frustrated me and upset me more than anything else, because I'm like, I am a profitable trader if I stop doing all this stupid stuff. So much the same as
Exactly.
you said, it was just a case of trimming off the bad behavior because I already knew what to do right. It was just I was adding in some bad stuff which needed to
Some
go.
Sometimes we got to trim the fat, right? So focus
Literally.
on quarterly growth is also very important, guys. You want to focus on things a little bit bigger in time frame, right? Because if your a focused approach is to get maybe yearly returns of, let's say, 20%, 30%, 40%, which are really beautiful goals within itself, right? I mean, you being a 30% return trader, you'd be one of the best. And I think that a lot of traders sometimes forget this, right? We focus about 30% on this one trade,
Yeah.
right? But the truth is that 30% even in a year is still an amazing return if you can do that year in, year out. I mean, it's just going to be a matter of having the right money and buying power behind you. And of course, Trade the Pool provides that for us, that there it is. The returns will come. And I think that that's what sometimes a lot of traders get lost in, right? Even the 2 to 3% a day can really add up in a quarter.
Yeah. Yeah, definitely. That back full circle, tortoise and hare, right? Is just
Yeah.
taking up time and focusing on the process.
All right, guys, let's keep things going. Let's go to the next area. I really like getting into this area because this is something that I've really kind of constructed some information here. Let's go to the next one here. And this is what I call the stages of trading, because at first you really need to look at where you are in trading, right? So if we're going to make goals, we got to know where we are, right? Because I think a lot of times if you have to set the realistic expectations to begin with, right? So I think a lot of traders, we all first start in that losing stage, right? No one likes to be in that losing stage, but the truth is there's a lot of traders out there, right? Where it feels like every trade they take, they just lose. They're almost like, if I just took the opposite, maybe I'll win then, right? But that's the loser stage, right? No one loves this stage. This is the stage where you're just frustrated. You probably are trying to just find a system that can even trade well, right? And that's the losing stage. It's not the fun stage. But then really we move into the survivor stage. And I think that this is an important transition. And I'll let you talk about losing in survivor, Richard, in just a second. But I think the survivor stage is really where a trader starts to make the turn, right? And then now they're just trying to start to get to the green, right? Now they can probably trade where they win some, they lose some, they win some, they lose some, they win some, they lose some. And a lot of times it's playing the survivor, right? You're trying to survive the day and keep the marathon playing, right? So let's take a second and a little bit, maybe we can expand a little bit on the loser and the survivor stage, and then we'll go into the lunch trader and the thriving stage.
This is the area that we all want to get to. When we first get into trading, often what we'll see is the lunch trader, the surviving trader. But we have to go through this base camp first. We have to do all that kind of groundwork. And I guess it's really good to recognize, where are you today? So if you're hearing this in chat, where are you in your trading? In your opinion, where do you think you sit? Because I'm gonna bust a bit of a myth here and say,
Mm.
when I come into trading, I thought I'd get this knocked out pretty quick. Now, for 2 years, we're talking 500 trading days, I lost money. Not every day, but it took me 2 years as an unprofitable trader to stop losing money. I did everything. I watched everything online. I did everything I could possibly think of. I was randomly copying strategies. I tried everything. After 2 years, I had a whole year in this survivor stage, break even. And I can tell you now, that milestone, that chapter of my life was more frustrating than the losing period, because I was so close. I was like, I've just had 3 winners in a row. Surely this is the breakthrough. Then I would have 3 losses. And I'm like, come on, what is it I'm missing? And then finally, that mirror, I held it up and I realized that I was the person that was just still introducing these bad behaviors within my trading. And that was the thing that stopped me from moving from survivor to lunch trader. So if you're trading and you've been at it for 6 months or 12 months, and it's all about asking, are you getting better than you were last month? Because if you're doing the same thing, then we're treading water. As traders, we don't want to tread water. We want to move forward. We can do that through great processes. We can do that through networking, or rocking into these kind of calls that we got here. I'm curious, how long did it take you to get through that losing stage?
Oh, do you got me there? My mic's
Yeah.
being a little bit weird.
No, all good.
You hear me clear?
I can hear you clear.
Okay. Well, if my mic's being a little bit weird, chat, I know the chat will keep us honest. But it took me a little bit of a while at first, right? Because, I came in like everybody. I was looking at different gurus and furus and different chat rooms and the different strategies out there. And I did this when I was first coming out of college, and I struggled at first, right? I didn't find a winning strategy for a while. And when I did, it would be big winners and the kind of the boom and bust game, right?
Yeah.
And I think that that's really where a lot of traders first start, right? And then I started to kind of make my way out of this and started to kind of hone in a little bit closer on 2 or 3 strategies and moving into more of the survivor stage. And the survivor stage was, still a little bit tough because, you see everybody, with their Lamborghinis and everything out there. And for everyone, I think that, it definitely affects them. Right. So I think that this is something that I think everyone needs to kind of learn at first and kind of get through. Right? Get through the ruts of trade, get through your own mental process of how you're going to get through and get to that lunch trader stage, right? Because I think that that's really important too, is making your way through the stages. I'm seeing everybody in the chat really kind of excited about this, talking about the different strategies now and talking about how they're in the survivor stage. And don't worry if you're in that survivor stage because we're all have to go through these stages, right? There's very rare trader that just starts and just moves to the thriving stage. I'll tell you that it's probably like 1 to maybe 2%. I wouldn't even give it to 2%. I would stick it to closer towards that 1% of traders can come in and just go straight to the thriving stage, right? So I think that let's move closer towards talking a little bit towards the lunch trader because everyone wants to get towards the lunch trader, but really it's all about the thriving stage, right? So the lunch trader, what's this, right? That's when you start to actually hone in on your strategy to the next level, where now it's kind of more about, consistent money starting to come in, but it's not enough to maybe quit your job or make this your full-time income, right? This is where it's just enough where I like to say you can go and buy some lunch every day, right? Or you could maybe buy yourself a good steak meal every day, right? Which wouldn't be bad. I don't think anybody would be mad about eating some good steak. Maybe Mickey, but uh, you got to enjoy some good steak and get to this stage, right? And then when you're at this stage, usually now it's all about kind of bending the equity curve, right? And you guys see here this line, right, on the screen. And I think it's very important to understand why it's kind of like a bend, right? We're trying to do this to our equity curve, right? We're trying to bend our equity curve and get it to the upside. And I think the important part there is how am I going to do that, right? Because everyone's equity curve kind of comes in and kind of fluctuates, right? It's all what I've realized, all about just controlling the trough area, right? This area, right? If I can minimize the losses, this is what really signifies between the lunch trader and the thriving trader. The lunch trader, this kind of curves closer down to here. And then they get kind of closer back to break even and they're giving up gains, right? A lot of the times. They're starting to get that strategy in the right direction, but then going and falling off or breaking some rules or things like this that are causing them not to get towards the thriving stage, right? So I think that this is what we're all at the end of the day looking for. We all don't want to be in that area down here. We're all just trying to get towards that area where we start to actually take off and get to the next level. So I think that you really have to look at yourself. What is keeping me to that next level to get to the thriving stage? And then when you're at that stage, right, the key of staying and thriving and not going back to a lunch trader is just really kind of staying towards your what your rules that you've now established and are following on a daily basis, right? Because I think that once you get to the lunch trader stage, you've already created the rules. Now it's, can I follow them?
Hmm. Yeah. Just quickly, while we're getting a little bit of feedback on a bit of audio, and I can see we're
Yeah,
just sort of.
let me
I want to talk about something quickly as we go from these stages. So loser, survivor, lunch trader, thriving. It's not always this linear, beautiful curve that just goes from point A to point B. Sometimes when we go from survivor to lunch trader, we start making a little bit. And it's in that very moment where we make a little bit that we try and push just a little bit too hard. And we can actually plateau or drop back into the survivor. So many times as a trader, we actually hit these little milestones, and there's just ebbs and flows. We can go through phases where we can get funded pretty quickly and then go through drawdown periods where it feels like we're doing everything right, or we up our risk at exactly the wrong moment. These are just kind of stories and cautions, I guess, from a trader of 8 years who's been going through this kind of stuff. So if you are struggling just to move from one area to another, just always take an opportunity to reflect. Are you doing things better than you were yesterday? Always do your weekly review, and just be conscious. The mind needs time to level up. We can go from trading a very small account risking $5 a trade to trading a very large account and risking $1,000 within the space of one day. Can the mind mentally jump from $5 risk to $1,000, even though the process is the same? So sometimes it takes just a little bit of time as we go through these phases and we move from survivor to lunch trader. But it is a very exciting moment when we start to see a little bit of green, and sometimes we can make a few mistakes and still get paid for it. That's a beautiful place to be as a trader, just making a little bit more than you lose.
All right. Is my audio a little bit better there?
Fantastic. Your audio is really good at the moment.
Okay. All right. We'll keep rocking and rolling, guys. Let's go towards it. Let's get out of the stages of trading and kind of move into a little bit more conversations. And I see some comments and questions in the chat about like getting over FOMO and things like that. We can talk about that coming up here, especially in what I call the prop reality, right? And I think this is an important area to really kind of get into and kind of talk about, guys, because at the end of the day, we're all in kind of joining the prop game, right? I think this gives us a lot of benefits, right? Because we have these kind of guardrails, right? And we're going to look at this kind of like the bowling analogy you guys can see here on the picture, right? And so this is kind of like getting your bumpers up, right? I don't know about you guys, but if they let me play with bumpers, I think that'd be pretty unfair advantage, right? And so these are the type of things that we have, right? And we need to kind of build what's our safe zone, right? Where is the area that we can maybe risk where we're not getting towards that max loss, but still finding an area of, an ability to put on risk, right? Because that's the truth, right? To trade, you got to put on risk. And to put on risk, we need to understand where is it going to be in our safe zone, right? So our main goal is to be staying eligible, right? Controlling the risk, right? Controlling the down draws, right? Controlling the decision-making process, right? Because a lot of traders try to pass props, evals, by playing the hero, right? By just playing the one day, I'm just going to shoot for the moon and see if I land on Mars, right? Well, the truth is the odds of you landing on Mars are pretty slim, right? And our job really is just to keep it in the lane, right? Just to find a way to stay on this marathon, right? Get to the safe zone. And you got to know where your safe zone really is, right? So if you can't follow the rules, really, that's where you really start to struggle, right? And you got to start developing whether it's your daily stops or what's your true max drawdown, right? Because it shouldn't also just be on the program, right? The programs are the bumpers, but we don't want to hit the bumpers, right? And we want to kind of even create our own program within our program, right? Because then this is what's going to really keep us in that equity curve. Those small bends down and big moves back up, because that's what we need to do. Just need to limit the down action, especially if you're in that lunch to thriving stage.
Yeah, it's that cut losers short, let winners run, isn't it? Just allowing those trades to breathe. And it's easier to do that when we use smaller risk. And I will hand on heart say prop trading made me a better trader, because just like the bumpers that we can see on your screen right now, prop trading gave me a set of rules. Even if it was maybe a 5% maximum daily loss, at least I had this number that I'm like, I cannot go near this 5%. And then I love what you said about creating like rules within rules, because then it's like, okay, well, maybe I've got this 5% a day. I don't want to go anywhere near that. So that's the prop rules. But what are my rules? Well, maybe I don't want to lose more than 0.5% in a trade, or maybe 1% in a trade. Maybe I become super emotional if I have more than 2 losses in a row. So we create these rules within rules to identify when are we likely to tilt. I see a lot of questions, how do I handle FOMO? How do I handle revenge trading? If you can work out where your triggers are, then we can create a simple process. And it could just be one beautiful process that's been shared with me in the coaching calls that we do is a trader has a best of 3. They say, you know what, if I take 2 losses, I'm going to stop for the day, because not only am I not reading price action well, I'm more likely to revenge trade. So kind of focusing, even if you land on Mars, you said this hero trade, even if you land on Mars, what are you going to do? Like, you still have to exist. You still have to trade.
Yeah.
We can't go through life hitting home run after home run after home run. And so
Mhm.
it's about what you practice becomes permanent. And if you're practicing this lack of discipline, these trying to hit home runs for the sake of getting funded, it will hurt so much more when that funding just falls away. So typically it's just about building great processes and then scoring yourselves. How well did I stick to this process every single day?
Yeah. Yeah. And then giving ourselves a pat on the back, not necessarily on the results, but more the execution of strategy,
Yeah.
right? Like hone that in, put that down right there, a sticky note in front of yourself. Let me judge myself today on not the results that I get, but how effectively I followed my strategy. And if you can give yourself that every day, trust me, you'll make improvements, right? And that's the difference of a focus trader and someone that's getting towards the next level and really trying to develop their own decision making skills, because that's what we're doing. We're developing our decision making skills. And especially if you're a subjective trader, you need to try to get in as close effectively to your strategy, right? Because if you're a subjective trader, you're probably no one's trading at 100%. But if you can get to 95% of what you want your strategy to be, right? In
Yeah.
the 90s, that's what you're trying to do, right? Just get as close to the strategy that you're building outside of the market. Intraday is always going to be tough, but bring that strategy and bring it to the game plan, right? It's like I always refer to a lot of things as sports, right? You make a game plan, then you go into the action. It's always going to be different when you actually go to the action, but you want to stick to the game plan, guys. Stick to the game plan. Let's go to the next one, which is the math of success, guys. So let me show you the math behind realistic goals and why trading isn't just about being right, but it's more about the expectancy, right? So this is all about like just kind of win rate and things like this. I think it's very important to kind of focus on this. One of the things that I like to focus on, right, is just to try to think about things in risk to return, right? Because at the end of the day, if we can do this for a lot of people, we can really kind of adjust the way that we're going to start to trade, right? Because I think that that's what really kind of helped me when I first started coming in, is just trying to think about it in a math sense, right? If I can focus it in math, I can make big changes in the way that I look at things, right? Because let's say if you're doing about 1R, right? 1R is $100, right? If I hit my stop loss, I lose that 1R, right? But if I take profits and let's say make 1R, right? Make 2Rs, that's $200, right? And then at that point, I don't need to be so accurate, right? It's all about understanding where your win rate's going to be and what's your return going to be. And doing this math, I think, is very important as you first start. I am focused, I would say my bread and butter is in swing trading. Why? Because I get such extreme risk to return and can actually stick to that, right? And that's the key there, is that I've looked at my swing trading and I've realized, well, guess what, guys? You know what? I'm not going to be these guys that, pitch on different websites about how I'm 95% accurate and I got a 98% accurate strategy. And this is the strategy for you guys. Because the truth is, I've traded a lot of those high percentage win rate accurate strategies, and they're very hard to execute. So it'd be probably more of for your systematic traders or traders that are just that good at being fast, right?
Mhm.
So I started to dip my toes into things like lower win rate strategies, right? And the reason why is because it just helps my average and my kind of mental process when I'm taking trades, right? If someone would tell me, hey, guys, if I just win 20 or 30% of the time with the win rate that I'm at, even on my funded account, I'm over 4.2%, 4.2 for every $1 that I'm risking, right? That means that even at a 20% accuracy, I'm still going to be in the green, right? So I can be wrong 8 out of 10 trades and still be in the green. Well, this is going to help my expectancy, right? The way that I think about the trade, right? And we all need to have that mentality, right? And it needs to be all about kind of working the math in your favor. What win rate are you? And this is all I think I'll have to do with more about understanding personality and
Yeah.
then creating the right math for your personality, right?
Yeah.
So, what do you think about this, Richard? I know you can expand on this all day long.
Absolutely. I'm just conscious on time at the moment, but we will glaze through this ever so quickly. So I love what you said about finding the win rate that suits your personality. Each strategy has a different win rate and a different expectancy. Now, the rule of thumb here for a trader is the higher the win rate, the lower the risk to reward. You can't typically have both. A trader who's going to go for a 1 to 10 risk reward is not typically going to have a 90% win rate. They're going to have a much, much, much lower win rate. So it's about just finding, how would I feel if I lost 8 out of 10 trades? How would I feel if I won 8 out of 10 trades, but I won a little bit less? Myself, I'm completely the opposite end of the spectrum. I'm a negative risk to reward trader with a very high win rate and a scalper. So very, very different. And I think that's more down to just personality types. I don't do well when I have a low win rate. I get in my head about it and I start to overthink things. I like a high win rate. I like sort of that feedback that I get quantity of trades and a lot of opportunities for a small edge to play out daily. But yeah,
Love it.
just conscious with time on this. I don't want to cut into anyone
No,
else.
let's do it. Let's do it. We'll wrap up here with just that. I love how we're on the opposite side of the spectrum, though, Richard. It just shows to everybody, right? Last thing, just real quickly, guys. At the end of the day, create your trader's process, right? If you want to have realistic goals, create that process. What's the plan? How am I going to execute it? I'm going to review and adjust and look into journaling, because if you're not journaling, this is what's going to define you the next year. So if you're looking at yourself and you're wondering, how am I going to get these realistic goals? How am I going to really get to the success? A lot of it is creating this cycle: planning, executing, reviewing, and adjusting, and of course, journaling. Then you'll be able to look at your quarterly goals and creating the right growth steps to finding the success. I wish you guys the best of luck on your journey in 2026. Richard and everyone out there in the chat, I know trading isn't easy, but I can tell you right now, as someone that has done this from 2018 and continued to push on, take it one step at a time. Find the habits, especially habits that you're doing wrong. Focus on improving one habit a week and watch how your year turns around. Wish you guys the best of luck 2026.
Absolutely. Pleasure. Thanks a lot. Just while we're waiting for the screens to adjust, that if you want one takeaway from this, that trader's process is the blueprint. Plan, execute, review and adjust, journal. And journal doesn't have to be this massive therapy session. It's about just gaining a little insight and seeing your behavior from a different perspective. Audio journals, written journals, it helps us lay it out so we can look at our behavior patterns and say, what is it I'm doing that's secretly sabotaging me? So loads and loads and loads of little takeaways in this. Shame we don't have a little bit longer, because many of this stuff we could have expanded on and talked about for.
Oh, you know how it is, man. I'm sorry I expanded all day on a lot of this other stuff, but I'll tell you what, guys. This is what you go to our streams to learn, because we talk about this on an everyday basis, right? Whether it be the 5ers, whether it be Trade the Pool guys, that's what you see us doing. And the fun part is we've even been doing more of this even live on Trade the Pool, showing, especially for the systematic traders that we have on Trade the Pool. We're doing this live. We're showing the numbers. We're showing the results. We're showing the journaling. So if you guys want to check out that process and learn from more of it, yeah, definitely check out our YouTube, right? Both of us are going to be going into different areas and expanding more on this and showing you guys the process, because that's really how we can teach you guys, right? You know, we can't give you guys the copy strategy, but it's all about just looking at you guys and teaching you guys from that professional approach. This is exactly how professionals do it. Figuring out maybe even a worksheet that's in front of you every day, right? So like maybe working up, okay, this is my plan. This is my executing strategy. This is my watch list. This is how I see the market today. Because I always think it's always about understanding the current environment also. So for anyone out there that's really kind of struggling, if you can understand your current environment and create like a worksheet to go off of every week and just keep doing that worksheet, you'll see last week's worksheet and you'll be like, okay, this is what was working last week. This is what's working this week. What's the difference? Understanding that is really how you start to kind of hone in.
Yeah, and engage with it. Engage with this wonderful event here. I see in chat somebody wrote plan, execute, review, and adjust, and journal. This is how we learn at a deeper level. We don't just watch; we engage with it. So if you got any comments, any questions, put them in chat as we go through this presentation throughout the day. There might be opportunities where they get picked up, but it's also as much for your own benefit to engage with it as it is just to watch it as well.
All right, we'll be ready to kind of switch over here in just a second. I'm sure that we'll be switching over, guys.
All righty. Thanks so much for Money Mitch and Richard. Make sure you stay tuned when it comes to the live streaming on the 5ers and Trade the Pool. They are all there every single day, and they share their knowledge. Hope you guys enjoyed this session, because the next one is going to be mind-blowing, to say the least. First of all, go ahead to all your social media guys, friends, WhatsApp, Telegram, you name it. Send the message and send them the link. Share the link, the YouTube link right now, because you do not want to miss this next session. I got with me here in the studio, here in the office, a guy that's been in the market for 17 years, a veteran, and he's been analyzing the markets ins and outs throughout the days, investing in very interesting and unique assets. And he's going to talk about this today, and of course, what to watch for 2026 and above that. Make sure you bring your guys, your friends right now. Send it in Discord, Telegram, WhatsApp, you name it. Everyone should listen to the next session that we have here. So without further ado, let me bring him on. Udi, thanks for coming, buddy.
Hi, thank you very much.
Yes, for sure. So like I said, Udi been in the market 17 years now?
Yes, since 2028. This is when I began in the financial markets. Till today, I was a chief analyst with several different companies, hedge funds, investing house, and I developed some kind of a new approach to understand the markets, to look at the markets and understand that in the end of the day, this is a jigsaw puzzle, and you need to understand how to connect all the dots. And if you're going to see something happening, for example, in the let's say in the region of the West, okay, it's going to have an impact on the East, also on Europe, on all of the rest of the world. But you need to understand how to connect the dots.
Right. And this is what we came for to do basically today,
Exactly.
right?
Yes.
So guys at home, pay attention to what Udi is about to share with you from his experience. And again, you mentioned, we talked about it before the event. We talked a little bit about what you're doing and how you do that. And you said you have many trading or investing tools that
Yes.
you correlate with them and play with them in order to analyze better.
Yes, so usually when I'm looking on the financial markets, I'm not just looking on the chart, okay? Because we told you the respect to the chart and technical analysis, yes, it's good, but it's not so accurate, and you cannot understand the big picture. To understand the big picture, you need to understand the geopolitical events, the macroeconomic events. Okay, you need to understand the cybersecurity, what is happening in this field. You need to understand the patents, how to read the patents, to understand the claims, the property that they have, the management, what the management is doing.
Yeah.
Okay, once you're going to understand everything, and you're going to understand that you can connect the dots between them, and then you're going to understand not just for one company, but you're going to understand the big picture that this is regarding for all the regions around the world, and you're going to understand the story, because there is a story.
True.
And I'm here to reveal the story. I'm the storyteller.
Okay, so let's reveal it, guys. We will start by dropping a bomb, and this is it. We start from the top and then drill down. So first of all, Udi, let me ask you this, and I wrote down the question, so I'm gonna have it on my iPhone. If you had to identify an event like a black swan or even a gray rhino that could have happened in 2026, what would it be in the markets? And also, what are the signals to show the traders that this is about to happen?
Okay, so the biggest event that I think that is going to move all the markets around the world, it's going to be the invasion for China to Taiwan. Okay, now before we're going to enter, we need to understand the history. Okay, in the financial markets, once you're going to understand the history, you're going to understand how it's going to impact on the present and how to prepare yourself to the future.
Okay.
So let's dive in and let's understand, okay? After 2028, we have the crash in the United States in the mortgage, okay?
Subprime.
The subprime, what happened over there. Then we had a new president, Barack Obama. When Barack Obama received the American economy, he understood something, that they have a problem because the people, after they lost everything, okay, they took they have mortgage, they have debit to the credit cards, they have a huge loans that they cannot pay off, and it means that they cannot buy nothing. So he said to himself, okay, let's think about this and let's understand, okay, a common employee in the United States charging per month $2,000. And he found that on the east, in the far east, on China, for $2,000, he can have 10 different employees that they know to do the same thing as the one employee in the United States. And with his advisors, he thought about this, and they understood that even if the Chinese will build a markup on the prices, the margin profit is still going to be very, very high for the Chinese. So they decided to move out all the factories from the United States into China. The rest of the world saw the same thing and said, okay, if the Americans doing this move, maybe they know something. So let's do the same. So suddenly you started to find yourself that China is the biggest factory in the world. China is just exporting everything for the Middle East, for Europe, for North America, center of America, South America. And then they started to have some kind of an appetite, the Chinese. They said, okay, if we are the factory for the world, so why we cannot be the owner. Let's replace the United States. So they thought about this, and then they understood, okay, if we want to control the world, we need to control the new oil. The new oil is the chip. Because today, everything have a chip inside. If it's your laptop, if it's your car, if it's your smartphone, your TV, your air conditioner, your car, everything.
Yeah.
So they understood that if they're going to control the chip industry, they're going to control the world. And they figure out that TSMC, this is the Taiwan Semiconductor, is located in Taiwan. Taiwan, it's very close to China. So if they're going to take control of TSMC, it means they're going to control everything. But here we have a problem.
Okay.
If China is going to invade Taiwan, United States is going to protect them. And then we have a problem because United States have the biggest army in the world, the most advanced army in the world, with the biggest budget in the world. So it's not fair. You cannot fight with them.
Yeah.
Okay. So they decided, let's find other countries that they're going to share with us the same idea to remove the United States from the region of the world. So they started to build a coalition with North Korea, Russia, Iran, China, of course, and Qatar. All of them together, they thought about this, let's build it, okay? So we're talking right now since 2008 till today. So what happened? They decided that the only chance to China to take control on TSMC and to take control on the Western technology blueprints is by the invasion. But they don't want to have a direct conflict with the United States, so they need to divide the army of the United States. How to do it? 3 years ago, Russia received for the first time the green light to attack and to invade Ukraine. So we need to understand, once Russia invade Ukraine, because Ukraine want to join to the NATO allies, if you're going to open and read chapter number 5 of the agreement that they have, it said that if one country is going to the war, the rest of them must participate.
Yeah.
United States is one of the allies in the NATO. So 3 years, this is what happened. 2 years ago, Iran received the green light. So they started the massacre in Israel to the Gaza Strip on the 7th of October. Okay? Right now, the goal is to divide the American army so they can start the invasion. Once they will start the invasion, then all the markets around the world is going to be impacted.
Okay. So I'll stop you here because
Okay.
everything that you just shared isn't. I'm sure the guys that listening right now are asking a lot of questions, having a lot of questions in their mind. So let's start with, you talked about the invasion that will affect, of course, Taiwan. What are the chances, according to what you see, that it's going to happen in the next 12 months, right? 2026. Do you see it happening, or do you think it's going to be later throughout the years?
Look, let me be honest. The only one that knows exactly when China is going to invade, it's the president of China. He's the only one.
Probably, yeah.
Okay? He's the only one. Also, if you're going to look last year, on the 1st of January 2025, he said that this is what they are aiming for. They want to take over Taiwan because Taiwan is part of China. This is what they said.
So what you basically said, you mentioned you emphasized the word when, right?
Yes.
Because you truly believe that this is something that is going to happen, but you don't obviously know when,
Exactly.
but you understand that it is going to happen.
Exactly.
Okay. So going forward, looking at ahead for 2026, what type of macro trends do you see that right now are underestimated? And yeah, do you believe that the consensus could be wrong on them?
Yeah, look, I believe that the majority of the people and the economists around the world, they don't think, or maybe they don't believe, that China is going to do the invasion. Now we need to understand, once China will start the invasion, we need to understand what is going to happen. So the first impact, the first wave, going to be that TSMC factories is going to be destroyed, okay, or take over by the Chinese. So it means that all the technology around the world, because TSMC is generating today, as we speak, for 90% of the technology companies, they are the clients of TSMC. Among them, you're going to see Apple, Nvidia, AMD, Qualcomm, Toshiba, Sony, and on. Think of this, 92% of the technology industry is clients of TSMC. So the first wave going to be all the technology industry. So think of this, right now you're a CEO of a company, okay, a public company, not a private.
Yeah.
You have shareholders. So first thing that you don't want to lose them. So you want to calm, look, this is what we're going to do. I'm going to fire 50% of the employees, okay? I'm going to shrink all the operation. And if usually for one department we have, let's say, 6 different people, so we have just one guy that is going to do everything. So you're going to see a huge amount of people that is going to be fired from their work. So this is the first wave. The second wave, once they're going to start the invasion, immediately United States is going to impose embargo on China. Now, for all the people that's sitting at home and looking at what we are saying right now, I want you to make a small test, okay? Choose whatever you want, okay? I don't care if it's going to be your glasses, if it's going to be your chair, your shoes, your soap, you name it. Just, I want you to look on the ticket, made in, that's it. Now think about this, made in, complete the rest, okay? It's going to be in China. So think of this, what is going to happen? You have a huge embargo on China. Nobody can make business with China because in the end of the day, nobody wants to be like Russia outside of the SWIFT platform, and you don't have the ability to send money or to receive money, okay? So right now we need to go back to the year 2020, once we have the virus of the corona, okay, the corona-19. Think of this, what happened? The majority of us sat at home, okay, because of the lockdown, the isolation that we had. We cannot go to work, and we want to consume on the same level. But nobody is generating something new or producing something new because everybody at home. So what happened? This is the first rule of economic, supply and demand. The demand stay on the same level, but the supply dropped. So what happened? The prices started to rise up. And this is the definition of inflation. When the prices of all the goods and services starting to rise up, this is inflation. So the first thing that we're going to see is a huge, okay, or hyperinflation, because think of this, you have money, okay, you're going to the store, you said, okay, I need, for example, a new table, okay? So you want to buy the table, the guy that is the owner of the company, he want to sell you the table. The problem is that in his inventory, you don't have nothing, because a lot of people bought until today, and he cannot bring new stuff because there is no factory. So we're going to see a hyperinflation. On the same time, we're going to see a huge or a deep depression. Why? Because a lot of factories, a lot of companies is going to fire their workers.
Yeah. And that basically what you just mentioned is
That's the inflation.
exactly, and it's completing my third question, which is how do you see the shifting in the political alliances, such as the BRICS, right? The U.S. and China conflict or tension, the Middle East. How is it going to change the structure of global capital flows, right?
Okay, so in my opinion, we're going to see the world is going to be divided into two blocks. We have the Western bloc and the Eastern bloc. On the East, we're going to see, of course, all the BRICS companies, okay, including North Korea, China, Russia, Iran, all of them. And on the West, we're going to see Europe, we're going to see Australia, we're going to see Canada, some of the center of America, and of course some of the countries in the Middle East going to be on the Western bloc. Okay, now you need to understand the Eastern Bloc is going to be cut off from the SWIFT system, and then it's mean that they're going to bring their own new currency and new method to send money, while the rest will stay with the SWIFT.
And let's talk a little bit about, we had a conversation before we started the event about Intel, right?
Okay.
Because you mentioned semiconductors and everything that might be with China and Taiwan, and how it's going to affect NVIDIA, how it's going to affect Intel. Let's talk a little bit about that, because I know even if you guys at home are trading Forex, you're probably investing in stocks, at least for the long run, and that should be very interesting to hear your thoughts.
Okay, so you need to understand, okay, the United States, they know exactly what is happening. This is why, since 2020, Intel started to close a lot of projects, fire a lot of people, because they invested more than $20 billion in Nevada. Over there, they started to build the biggest factories that is going to replace TSMC. Okay, this is what they understood. Now, I want you to see two things that happened during this year. The first thing that is very, very important, as you can see, United States bought 10% of the shareholding of Intel because they believe they understand what is happening. Also, during this year on May, when Donald Trump went to the Middle East to visit Mohammed bin Salman in Saudi Arabia, he brought with him all the CEOs of all the technology companies, weapon industry, banking, financing, but just one company didn't have any representative over there. It was Intel. Why? Because the United States understood that Intel, this is the national security of the United States, so they cannot share it with no one else. Also, the United States, they're understanding right now what the Chinese is doing, and they are pushing them to do this move. The question is why? What is the reason? They understood that once China will invade Taiwan and take over on the TSMC factories, it means all the clients of TSMC is going to be the clients of Intel. And the debt that China have, because they bought bonds, it's a loan, they bought bonds. Right now, it's around $890 billion in bonds. That it means this is a debt this is a loan that China gave United States. So the United States, once the invasion will start, they tell them, okay, you know what, you think that you have a debt, but it's not. And you can do whatever you want because we are not going to pay you nothing. So the United States is they have their own reasons why they want it, because they understood. And also you can see right now, Apple started to sign on a deal with Intel because the next iPhone is going to be in the United States. And also Trump said, if you're going to bring everything home, okay, and create everything in the American manufacturing, it's mean we're going to give you some discounts on the taxes. Okay, so they are preparing everything, and this is exactly what is going to happen.
How long till we have everything settled and everything set to go? Because it takes time. We're talking about top of the line, right? We're talking about countries. We're talking about huge companies. It takes a lot of time to move things around, right?
Yes, usually to build this kind of a hub, you need to understand this kind of a factory. It's mean that the walls, they are the machine. It's not like, okay, this is the wall, I'm going to put here the machine. No, the wall itself, it's the machine. So usually it's going to take approximately, let's say, 10 years till it's going to be ready. And also don't forget, until today, Intel usually generated all the chips for themselves. So right now, they need to open a new department because for all the clients, this is the companies that is going to come to work with them. So it's going to take a while. This is why we're going to see a stagflation just for the duration of time till Intel will be in full capacity.
Nice. So mind-blowing for sure. It's a great story, and if it will align together with everything, it will be interesting on one hand to see that, on the other hand kind of scary, but we as traders and investors, we gotta know how to take advantage of that and also how to protect ourselves. And I guess my next question will be the last one. How for 2026 at least, how are you going to hedge your account? How are you going to protect yourself from crisis or any big move on that case?
Okay, so if I'm trading on stocks, I will take the GLD. This is an ETF on the gold. If it's Forex or the gold itself, because you need to understand the gold, it's not a asset that you're going to invest to generate money. It's an asset that you're going to use it to hedging yourself and to protect your money, because once everything is going to collapse, the gold is going to rise up. I believe that we're going to see the gold around $6,000 per ounce, but it's going to take a while. The boost will come once we're going to hear about the invasion. Regarding to the...
What about Bitcoin? Because you mentioned gold, so...
No, Bitcoin, to be honest with you, I don't believe in Bitcoin at all. I believe that...
You don't believe in Bitcoin? Share that, because it's an interesting one.
So if you're going to make an investment, to investigate, to make the Bitcoin, you're going to understand, first of all, who is the owner of the Bitcoin, and you're going to see that the SHA-256, the owner is the NSA, because they say, let's start from the beginning, okay? SHA-256, okay? This is the encryption of the Bitcoin and all the cryptocurrencies, okay? The SHA-256 developed by the NSA. In 2001, they registered the patent on it.
Yeah.
Okay? So right now you understand who is the owner. Now, if you're going to look back in history, let's say 2019, okay? It was the first time that the United States paid the ransom. Now you need to understand what happened. There was a cyber attack, and someone just take over control on the pipeline of the oil of United States. So it means that if United States want to move oil from south to the, for example, for the north, or from the east to the west, okay, so somebody just took control and told the United States, okay, if you want to take control back on the pipeline, pay us $200 million. And this was the first time that the United States paid the money. Now, something amazing happened. 3 days after the United States, the government paid the ransom, nobody was arrested, but all the money came back to the United States. What happened?
What was that? Yeah.
The United States, with the new technology back then, okay, with a company that we called, the name of the company is D-Wave. They used the technology of D-Wave. Back then it was around 1,200 qubits. Today they have more than 7,000 qubits, okay? But what happened back then, they, with D-Wave, with the quantum computer of D-Wave, they access to the ledger and reverse engineering it. So it means that they started to pull over the money back. So what it means, that all the cryptocurrencies and all the story that they told us, it's a fake. Because you can find exactly who is the owner, when you buy, when you sell it, to who, what is the amount, the exact time, even the exact second. You can see it. You can understand everything. Why? Because the NSA, they are the owners of the SHA-256, and also you can break it. Okay? Now, they thought about this. Let's upgrade to SHA-512. The problem that when they did it, today you have two Bitcoins. You have the cash Bitcoins and you have the regular. Why? Because this is a fork that happened. Because once you're going to upgrade the SHA-256, it means that you're going to lock all the access to all the cryptocurrencies.
Okay.
So you cannot upgrade the security. And this is why I don't believe, yes, I believe in D-Wave.
Yeah.
Okay, D-Wave, by the way, this is the second company in the world that achieved quantum supremacy. The first one was Google.
Got it. We're not gonna dive into Google yet,
Okay.
at least not today. But guys at home, we do have 5 more minutes. I would love to get some questions from you guys. Let me try to jump to that section, to the chat, and see if we have a few questions coming for Udi right now. Anything you want to ask Udi, feel free. Alrighty. So just drop them in the chat, and Udi would love to answer a few of the questions. We do have just not more than 5 minutes, so we will try to answer those. So Udi, you can pick, as you can see here.
Choose what you want.
It's running kind of fast. What about money printing going on now in the US?
Okay, regarding to the money printing, yes, because right now they have a huge debt. What Donald Trump is going to do, okay? Right now we have a huge fight with Jerome Powell, the head of the Federal Reserve, because the bonds with duration to 10 years, the yields, it's 4.85%. Before the interest rate cut, okay, the interest rate in the United States was 4.5%. And in the end of the year, all the bonds with the duration of 10 years is going to be expired. It means that they're going to bring back the loans. Donald Trump wants to make refinancing. What does it mean refinancing? It means that you're going for a country A. The country A is going to buy again bonds for 10 years, when with this money is going to pay him back to the same country. The problem is that if the bonds yields it's 4.85 and the bank interest rate it's 4.5, it's not so appealing. So he insists in front of Jerome Powell. He's starting to fight with him to reduce the interest rate, but he needs a huge cut, not by 0.25 or 0.5. He needs
bigger.
something more than bigger, let's say 2%, okay, something like this. So he said, okay, if you are not going to do exactly what I want, I'm going to do something new. Okay, I'm going to take your monopoly on the printing of the American dollar. How? I'm going to open a new exchange in the United States. This is going to be only for stable coins. It means each stable coin that want to have the license to be traded over there, okay, to achieve the license, he needs to buy the American bonds.
Okay.
And if you're not going to buy the American bonds, you cannot be listed
or listed in the exchange.
In the exchange, so it's when you don't have a regulation, you are abandoned, it's illegal. Now think of this. If everybody's saying that the Bitcoin, for example, it's something free, there is nobody behind it, so how the Bitcoin going to have license?
Interesting. Okay, we're going to stop here. First of all, Udi, it was a pleasure. Thanks so much for this.
No problem. Thank you.
I see the comments, guys. You leave in tons of comments and questions, so we'd love to see that. And that means that Udi is going to be with us later on, if not today, then in the next event, definitely. And maybe we'll do a specific session, talking about that, because macroeconomic is huge, and there is definitely a big story behind everything. And it's always amazing to listen to and learn from. So I appreciate you coming, Udi. Thanks so much.
Thank you.
Guys, we are going to take a 5 minutes break. Get yourself a coffee or maybe a tea, Coca-Cola, or go to the bathroom. And once we get back from the commercial, we're going to have Chris and Dan. Chris from Trade Ideas, one of our partners, and Dan Rishman from Transpider. They're going to share their knowledge and experience about how to use their tools, Trade Ideas and Transpider, the AI tools, and generally their unique softwares in order to trade the next year, the coming year. So make sure you stay tuned. I'll see you in the next 5 minutes. Let's go to a commercial break. See you then.
Yes, sir. Awesome. Should I get started? Awesome. All right. Thank you guys for being here. My name is Dan Ushman. I'm the founder of TrendSpider, and I'm here to talk about AI and the good ways and the bad ways that you can use it as an investor. And I thought this was a good topic because this has been the big buzzword for the last, I don't know, 4 or 5 years. Everything has moved in the direction of AI. And a lot of investors have started to lean on language models to do their research, to help them do their work. And some of them have leaned on it a little bit too much, and some of them haven't touched it at all. And I think it's a topic that is very, very timely and very, very important for traders to understand. So in this presentation, we're going to talk about practical AI use cases for practical investors, and we're gonna cut out some of the fluff and some of the BS around it, and dive into what it really means and how to really use it. So with that said, let's jump in. The first thing I want to touch on is the ways that AI is misunderstood. Because a lot of traders and a lot of investors look at these AI tools as a shortcut. They think they can throw a prompt at ChatGPT and get trade ideas, and this can be a path to ruin if you don't know what you're doing, because these tools have a tendency to hallucinate. They can straight up make things up, just like kind of a person can. But they can do so unintentionally, where they are insistent that what they're telling you is true when it really is not. So I wanted to take a moment before we dive into the right ways to use it and talk about what it is not. AI tools cannot reliably do your job. Anybody who's telling you that AI is going to replace you as an investor just doesn't know what they're talking about, because that's not going to happen anytime soon. But these tools can make you better, and they can make you more efficient at your work. Public AI chatbots like ChatGPT and Claude, they're not all knowing. They can and will and often do make big mistakes. They make up, or we call hallucinate facts, and they will give you bad information, especially when it comes to math. A lot of people don't realize it, but a lot of these tools, they don't actually do math. When you ask it 2 plus 2, it doesn't actually add up 2 plus 2. It looks in its training and says, when I've seen 2 plus 2 in my training, it's often followed by 4. So I'm going to answer 4. But it's a pattern match. It's not an actual mathematical operation. And that's something that's very common across most of the big models. And that's something that as an investor, where you're dealing with money and numbers, you should be really aware of. And for those reasons, you should never take output from a big public LLM as a decision. You should always verify what they say. And that adds a lot of work and kind of defeats the whole purpose, because a lot of people are trying to make these tools do work for them. And if you lead on them in the wrong way, you end up having to do a lot of that yourself anyway, as you double check what the language model has spit out to you. So just to summarize, AI language models are tools, not shortcuts, and blind reliance on them introduces noise and risk and fragility to your trading. And that's not good. There is, however, a good way, the right way to use AI tools in your trading. And that is to integrate them in your process as an efficiency and accuracy enhancer, but not to defer decisions to it. You should lean on AI tools as an analyst. They should be there to help you move faster. They should be used to automate and streamline the time-consuming, tedious, and error-prone tasks that make up the workflow of trading, but they shouldn't be there to replace your judgment. And this is the big point. A lot of people make this mistake. I've seen this happen quite a bit. If you use them correctly, you can process information faster and build better understandings. You can summarize and understand large amounts of data much more easily and more quickly. And if you use a specialized AI that's trained on financial data and uses vetted market data, you can use them to help you make decisions while reducing the risk of it hallucinating and making things up for you. So I wanted to just touch on some of the practical ways to use AI. I'm not going to read through all this because there's a lot of text on the screen, but I believe that if you use AI tools in your market research, if you use it in deep dives into particular symbols, if you use it to assist you in identifying opportunities, validating strategies, and supporting your decisions, you can enhance your trading and enhance your analysis quite a bit. The trick, though, is to use these as a tool and not to lean on them too much. And I'm going to show you how you can do that with TrendSpider in a second here, because TrendSpider has a lot of built-in AI tools that are specifically designed for trading. And what I mean by that is they will not hallucinate as much or at all because they're not connected to the public internet. They are connected only to vetted market data. So you end up getting much cleaner and much more useful responses, and you can use AI tools throughout your investing without so much of the risk of it making things up and throwing you on a loop here. So as I, in a second, I'm going to flip my screen and show you some of this stuff. So I'm going to walk you through those 5 areas that I just touched on. If anyone has any questions, drop them in the comments, and I'll definitely get to them and answer them. So hopefully you guys can see this. Let me make it a little smaller so you guys can see a little bit crisper. Oops. So this is TrendSpider. Some of you might be familiar with this tool. If you're not, this is the TrendSpider platform. It's our all-in-one trading platform, and this features everything from scanning to charting to backtesting to alerts to some pretty advanced, sophisticated machine learning capabilities, such as building your own algos and building your own automations. So I'm going to walk you through some of this stuff, and if you guys have questions, and just drop them in the chat. So first thing I want to show you is how you can use AI to do market research for you. And we're going to do that in a couple different ways, but I'm going to start with our Sidekick chatbot. And Sidekick is a chatbot, a lot like ChatGPT and Claude and some of the other tools that you've seen there. But it's different because unlike most of the other tools out there, Sidekick does not access the public internet. It's restricted from being able to go online. And instead of Google, it's fed all of TrendSpider's market data that your account is entitled for. So that means it's not going to just look at a bunch of text and guess stuff for you. It's going to actually pull real data as you're doing your research and then analyze that. And it's going to pull that data from official sources so you know that it is high quality. So let's just give you a quick example. We can say something like, compare Google and Microsoft's balance sheet and focus on them. So what it's going to do here, you're going to see if you watch here on this thinking area, the next thing it's going to do is it's going to actually go and download the fundamentals for those 2 companies, right? So it's going to go and pull the actual fundamental data. This is already different than what a language model like ChatGPT would do, because Sidekick isn't going to rely on anything that isn't official. So it's not going to get clouded with a news article like ChatGPT might. It's not going to get clouded by posts on X like Grok will. It's actually going to pull the real data and compare that data for you. And because it sometimes takes a moment to work, so you can always minimize it. Oops. But it will pull and download and generate data for you. And you can go deeper into it. So you can say something like, which company has the strongest financial position in the AI data center build-outs? Right, so you can just keep talking with it, and it can keep downloading data and analyzing it for you. So that's one way that you can use Sidekick, is to chat with it and have it pull data for you and compare things for you. And that's, again, a very unique thing about this, because most AI chatbots aren't going to actually be able to access official data. They will only be able to access data that's public on the internet and do everything from there. So while it's thinking here, I can minimize it, throw it aside, and walk you through some of the other ways that you can use AI in your analysis as you kind of browse TrendSpider throughout. One of the cool things here is if you're a technical trader, you can use pattern recognition, right? So if you want to identify patterns on a chart, you can use automation to draw them for you. You can do the same for identifying trend lines. So if you want to identify trend lines or Fibonacci's on your chart, these are automation tools that you can use. And you can use Sidekick to analyze what you see. So like you might say, oh, this is really cool. Let me actually go look at Google's chart, right? So I'm going to pull up Google. And then you can say, hey, Sidekick, look at my chart for me and see and tell me what you think about it. Is it bullish or bearish or neutral or something else? Lay it on me. So when you do this, it's actually going to download the chart, right? So it's actually going to look at the chart with its computer vision. And it can actually then identify levels. It can draw on it if you ask it to. But it'll actually dig into it. And while we're doing that, we can just minimize this and kind of move along and do other things. So we can like throw on candle patterns or chart patterns, and then we can come back to this later if we want to when it's ready. So this is how you can use AI in your actual trading workflow. And I hope you can see it's a little bit different than if you're doing it using just like a chart on one screen and ChatGPT in another. Because here you can say, let me hide these levels really quick. Here you can say, highlight some key levels for me on this chart, right? And again, it's going to actually draw on my chart for me. So again, I'm not doing anything here myself. I'm telling the AI to, hey, look at the chart, and it'll take its context window here, and it will then generate that and put it on your chart for you. So this is a tool that we've spent over a year building. It's very, very cool because it's integrated into your charts. It's the only AI out there that can see charts, access pure market data, and is unlikely to hallucinate for you. And you can use it in other ways too. So instead of just having it draw on your chart, you can then have it run scans for you and do so in an agentic way. So you can start a new chat here. I'll do that just for fun. And you can say, I don't know, find me stocks in the S&P 500 that have had 3 quarters of earnings growth, have a bullish technical pattern on the intraday hourly chart, and have a recent analyst upgrade. So what if you watch this, and I'm going to move this so it's a little smaller, but if you actually watch this, it's going to open the scanner. It's going to take my prompt and translate it into a prompt that the scanner's AI can process. It's then going to actually run the scan multiple times if necessary until it finds something that actually fits it. And once it does, it's going to analyze it and then give me a summary. So you can see here, it generated this scan, but it didn't find any results. So now it's regenerating the scan from scratch, and it's going to keep doing this automatically as it searches the market for stocks that fit my criteria. And here it's updated the scan and it's found some stocks, and now it's going to dig through them and give me a little bit of a summary of that. The reason I wanted to show you this is this saved me a ton of time just now, because if I was doing this by hand, I would have to go in and tweak my conditions, and I would have to add and remove conditions and maybe modify my numbers and run it by hand a bunch of times before I would find something that I would like. And then once I did, I would have to go through those all by hand, one by one. That's a lot of work. Instead, if you use a language model to do that part of the work for you, you can save yourself the headache and get to what you need a lot faster. So I think that's a really cool use case, and it can be incredibly helpful if you're trying to move fast and make decisions quickly and identify opportunities in the market, more rapidly with less of your own work involved. And the beautiful thing here is you're not outsourcing your decision making. You're outsourcing your grunt work, the time-consuming, tedious, headache stuff of comparing numbers, of searching and building scans. That's the part that AI can really help you in. And in this case, it's an idea generation. But you can, of course, do this in other areas as well. And you can say stuff like, there are too many results, narrow it down. Or conversely, you could say, dig into one of these, TT, and tell me about its fundamental and technical situation. Right, so you can use this as a helper, almost like an assistant or an analyst sitting next to you. And you can have it do the heavy lifting for you so that you can do what you want to do, which is trade, right? Actually place trades when opportunities come up. So that's how you can use Sidekick in scanning. I'll minimize this and show you some of the other ways that you can use AI to move faster and get more done as you kind of navigate the market. One way is if you flip over to the custom code editor. A lot of traders have ideas for, let me switch charts because there's been a lot of drawing on it. A lot of traders have ideas for custom studies, custom indicators. A lot of people have a system, right? Like you might have a set of conditions that you look for. There's all kinds of stuff that traders kind of look for in a market. And sometimes that involves indicators, sometimes that involves price action. What you can do here is you can actually generate an indicator using AI that takes what you look at and combines it into a visualization for you. So I'll show you something really, really simple here. But if you want to generate an indicator that does something really complicated, you can do that too. But we can say something like, generate an indicator that is like a moving average, but colored red when price is above it and green when price is below it, and lags by 10 candles, right? So I don't know if that makes any sense, but you can simply have it generate the code for you. And this code will generate an indicator, and that indicator will become visible on your chart. But it'll also become accessible in the scanner. It'll become accessible in the backtester. It'll become available in alerts. So you can use it throughout the platform. And you can see it actually wrote the code for what I just described and put it on my chart. You can see this line right here is a brand new indicator that we've developed in about 2 seconds here. This is, in my opinion, one of the most powerful ways that you can use AI as a trader, because you can use it to take your system, the things that you look for, and build tools that help you look at those things much faster without doing as much work. If you use 3 or 4 indicators together, maybe use MACD for momentum, maybe use Bollinger Bands for volatility, maybe use volume or something like that, and you have something that you specifically want to see, you can generate an indicator that simply puts a buy and sell label on your chart, right, using your system. And then you can use that and you can backtest with that. So you can see how your system would work had you traded it in the past. And that's what I'm going to show you next, is how you can use AI in backtesting. So you can determine if your strategy is a profitable one or needs to be modified or tweaked in order to perform a little bit better. So if you click on the strategy tester here, you get to that. And here you can use AI to generate your conditions. So let's say my strategy is buy when price is above the 200-day EMA and the 50-day SMA, and also RSI is above 40 and MACD has curled up from the lows, right? So we can generate conditions this way. So we'll generate that. And while that's happening, we'll go over here and we'll add our exit condition. And we're going to do something really stupid for the exit condition of just exit after 30 candles have passed, right? So we're going to enter when these conditions are true, and we're going to exit when these conditions are true. And we're going to test this going back 2,000 candles, right? So, and that shows us what it would have looked like had we traded in this way going back 20,000 candles. We would have traded 192 times, right, across 33 years of data. And our mean return per trade would have been 0.9%. So we wouldn't beat buy and hold, right, but we would win 66% of the time. And we could probably tweak it and make this a little bit better, given that was during a bull market, but nonetheless. And then we can look at this and we can say, that looks really cool, but I don't understand what a lot of this stuff means, right? Like, these are a lot of metrics here, and you might not be like an experienced backtester. So again, here you can rely on AI to explain your backtest for you. And you can simply click the explain button and it's going to pop up Sidekick. And then it's going to download all of the backtest metrics so that you can then get a summary of what worked and what didn't work and what you can improve and what you should, drop or add to this strategy. And this is a really powerful way for you to enhance and improve your trading, because you're back testing. So you're testing with real historical market data what would have happened if you bought and sold at certain times, right? But then you're optimizing and analyzing with AI so you can actually get some insights from all the data collected in the back test so that you can then improve your strategy before you place your next trade and hopefully perform a little bit better. So that is how you can use Sidekick. I'll minimize this while it's thinking here. And that's strategy validation, right? But if you end up liking what you see here, you can then also deploy it as a bot. And this is one of the most unique things about TrendSpider, because it's a custom strategy using conditions that I've developed, right? But you can click deploy as a bot, and you can have this become a bidirectional position aware alert. You can even connect this to a brokerage account, or I think you can connect it to trade to pool, right, using webhooks. And that can automate the execution of your trades. So it can identify when your signals go off, but then it can also ping an outside system and perform an action when that happens. And some people connect that to brokerage accounts, some people connect that to Discord chats, but you have the ability to do that using the trading bots feature here. And it's point and click. So you'll notice at no point during this presentation have I actually done any real work. I've just prompted and had AI generate conditions, generate indicators, and then here I would take that and convert that to a bot that would actually trade on my behalf, or alert me on my behalf, or post to my chat room, or whatever that might be. So we can check back in here and see what it did. It analyzed my back test and gave me a whole bunch of information about it. I would read this if I had time. But that's one of the ways you can use AI to improve your strategies. Here's another way. If you click on AI strategies here, and this is an advanced feature, right? But this allows you to actually train a machine learning model, a custom machine learning model, and then use it as a signal generating tool for yourself. So I'm not going to spend a whole ton of time configuring this for you, but I will add some markets. Like the Qs and SPY. Right. And I'm going to show you how this works so you can see how you can tell it to find conditions in the market and try to predict them for you. Right. So what I'm going to have this AI try to do is find trades that within 50 candles can return 1% with the risk of a 0.25% loss. Right. So it's going to highlight in yellow when that is possible on this chart, not when it happened, but when it's possible to get such a signal. So those are these yellow areas here. Right. Then I'm going to click next here. It's going to ask me to pick a model. It's technical. I'm going to skip this part. We're explaining it. But if you're technical, you can choose a different type of machine learning here. Right. And then I'm going to just tell the AI to be adventurous and find a strategy. Right. So it's now going to generate a list of inputs, and then it'll generate a strategy based on it. And then I can utilize that strategy in my charts and my back tests on my screen and in my alerts. While it's doing that, I'll just show you. This is it's ready. Start training. This is like an example of a strategy that we generated. The bottom axis is the probability, or I'm sorry, the return of the trades that the strategy developed, and then the vertical axis is the AI's confidence in that signal. So you can see, like, when its confidence was 100%, it tended to return about 53% on average for this particular example. Training can take some time, so we'll bounce over here while that's happening. But when you have a model that you've added, you can just add it as an indicator, right? So you just type AI model, you select it here, you choose which one. I just picked this one, right? And then it'll calculate it and give you these little markers that give you the model's confidence in its buy signal at that point. So you can see if you should require a certain degree of confidence before you rely on it. So that's about it for the presentation. I could go on for hours, but I'm trying to stay limited in this time frame that I've been given. Should I go through some questions, or what should I do next here? Michael? Oh, he stepped away. Got it. Okay. Got it. Okay. So let me jump through some of these questions here. Someone asked, did I make this platform? Not personally. There's a team of 15 engineers who build TrendSpider. I'm the founder of the company. I built this because I'm a trader and I wanted to build something for myself. But then I realized when I got the MVP that I cannot be the only person on the planet who wants this stuff. So, and yeah, the idea is that it should be like a mid-market Bloomberg terminal, but unlike Bloomberg, it shouldn't cost 5.5 figures a year. Someone asked if practical AI tools are becoming available to everyone, how do I find a unique edge that isn't already being exploited by thousands using the same algorithms? So what I was talking about is using language models to assist in your style of trading. So it's not that practical AI is being used to develop strategies, right? It's being used to help traders do their thing. And this is really common among institutions. I mean, I have some close friends at some of the big wirehouses, and they have internal AI tools that they built or hired other companies to build for them that help them do research, help them dig through client portfolios, help them dig through financials, generate fancy PDF files to share. The thing is, retail traders have been disadvantaged in every way since they become able to trade. Right, they're disadvantaged before they place their first trade because the tools that we rely on as retail traders are what the institutions had a decade ago, right? Like they've had things like Bollinger Bands before Bollinger Bands were a thing. They've had all of the backtesting and scanning capabilities that companies like TrendSpider and our competitors build decades before you guys did. Right. And they've had machine learning and AI models well before ChatGPT became a public thing. They did it using machine learning, not language models, but nonetheless, they've had that kind of automation and you haven't. So that is one of the things that really inspired building TrendSpider is the fact that retail traders have been disadvantaged. And we thought there was a chance to level the playing field and give the retail world some of the same tools that institutions have used. Let's see what other questions are here. If anyone has questions, drop them in the comments. Someone asked how to access it's the trade. Could you upload a trade?
Hey Dan,
I'm sorry.
how you doing, buddy?
Hey, what's up, Michael?
I'm great. Everything is okay. Love the presentation, and thanks so much doing that. I know it's super early for you. Is it snowing out there?
It is starting to melt finally, but it has been. Yes.
Amazing. Alrighty. So again, thanks so much for coming, Dan. We have my next guest. You already know him, probably Saul, the CEO of The5ers. He's gonna share with
fantastic.
you. Yeah, and he's going to share with you his scalping method, scalping strategy. So let me bring him over. Thanks so much again, Dan. And of course, those of you who are not familiar with it, every time you join Trade a Pool, you can get access to TrendSpider for free for 45 days. So new user to Trade a Pool, you can actually access TrendSpider and all the tools that Dan just mentioned here for free. And of course, we have a lot of tutorials about it, so you can easily learn that. And TrendSpider been a good partner of ours for a long time. So I appreciate that as well, Dan. Thanks so much for coming.
Thank you. Appreciate it. Everyone take care. Bye-bye.
Alrighty, guys. So I'm going to bring Saul with me here. Come along. Yeah. Here we go.
Hey. How are you guys? How are you doing? Hey, traders. Hi, Michael. How's everything?
It's amazing. Would love to hear your story and, of course, everything you have to share with the guys at home. So the stage is yours. All you got to do is...
Oh, mine?
Yeah, let me bring you up and share the screen. And, of course, you can leave comments in the chat for Saul, and he would be happy to answer that during the show or even after that. Right after Saul will finish, I will be joining you and share my presentation as well. So here we go, sharing the screen.
Let me know, meanwhile, guys, how you guys doing? How you enjoying? Excited to be here. I wanted on the training room last week. Was excited to be there and to see you all guys. And I've prepared a methodology or explanation of the steps that you usually see me doing and explaining them during the training room for everyone to use it. So yeah, excited to share this.
Okay, so guys in the back, if you can bring the screen, the shared screen, and I'll let Saul take it from here. Good luck.
Thanks.
Yeah.
I'll take it. So I got, yeah, excellent. So camera here, PC, myself, Celestine, Arun, Joeb, great to see you guys. Great to see you, everybody. Exciting. Okay, guys, so, wait, where's this? You know, as you know, I'm always trying to during the training room, we're doing a lot of things, and it's sometimes it's complicated, you know, to stop and manage the trade and explain you. So I wanted to take this presentation to do a little bit of a framework of the process I follow during the training rooms. Okay, I'm gonna be talking about scalping mastery. I just want to make sure you can all guys see my screen. Yeah, I think we're good. Okay, so we're going to be talking about scalping, and we're going to try to put to explain the different steps to put a scalping strategy together. And of course, you know, when you go out there to the internet and you start reading about what scalping is, it's very common to see comments about being in trades a couple of seconds, a couple of minutes, or trying to trade off the tick chart or 1 minute chart or 5 minute charts. And you know, in essence, scalping, or the way I understand scalping, is very different from that. Okay, scalping is in essence trying to go from a certain key level to the very to the closest key level available. Okay, so if you're buying, you want to get into a certain key level or pivot point or support or whatever it is, and to get out at the very next available key level. Okay, so that's the essence of scalping. Now, this same principle, you can use it on every time frame. Okay, you could be aiming to go from key level to the next available key level on the daily charts, and you would be performing scalping just on a long term. Or you can try to do that on the 1 minute chart, which is what you see me doing usually during the training rooms. So I will present you the way I trade on an organized way, to go from, you know, from the daily charts and understanding the bias and what we're trying to accomplish on certain trading session, all the way to lower time frames, which are the ones I use to executing. But just take into account that you could apply these same principles on every time frame. Okay, if you're not suited, and I know a lot of people who struggle a lot doing a lot of trades and trading off the 1 minute charts, for example. So they wanna you can always try to use these same principles and trade and use it, let's say, on the hourly chart. Okay, and then as long as you're trading from a certain key level, you're getting in that key level and then getting out at the next available key level, you're performing scalping. Okay, and then swing trading would be when you're holding your trades over different and multiple key levels. Then you're swinging across multiple key levels. So what we're gonna do here, let me go through the presentation. Okay, wait. There you go. First, to go through the 4 pillars of every scalping strategy, okay? Which is, number 1, understanding the bias. The bias will give you direction. And usually we're gonna try to get these biases from larger time frames. So in my case, I do this from the daily charts, but you could do this from the monthlies or weeklies if your execution is going to be on higher time frames than the 1 minute chart. But for myself, I do my bias, or I get my bias on the daily charts. From my bias, I want to understand, you know, the big picture. Where am I on the higher time frames? Am I at a key resistance, key support? What is more likely on an expansionary phase on the dailies? That will give me more likely to understand the market context and to understand what I need to look for on the daily charts. So my bias will give me like the direction if I want to overall try to go long or short or neutral. So I'll do that from the bias. Okay, I'll get into more details to that. Then I want to go to lower time frames to get my levels. Usually I do that on the hourly time frames. I want to mark up my key levels. Okay, where are these key demand areas or key support levels? Because around those levels is where I want to be more active, and that's where I'm expecting the market to go from one key level to another key level. So I mark those key levels, key demand areas, support areas, supply levels, resistance levels on the hourlies. Okay, those are my key levels. Then I look for a setup. Usually my setup, I try to get it from the 5-minute chart or the 1-minute chart, which is usually, the different signals you want to get, okay, from these lower time frames. Might be a breakout or a retest or a breakout and retest, a contraction. There's different setups we can get from, okay, if you're using indicators. So that might be, your signal, okay, your indicator setup from your indicators on the 5-minute chart. And then the execution and the management, which I do usually on the 1-minute chart, but it's essentially understanding where or how are you exactly getting into the trade, where's your stop loss, where's your take profit, what you do in between. That's execution and management. So I want to go through the slides, and then I'll open up a trading chart and I'll do this exercise with live markets. Okay, so let's go over here. So we spoke about the bias. Okay, the bias, I wanna do it on larger time frames. I do it from the daily charts. And basically, what you want to understand if the overall large money is on a bullish trend, on a bearish trend, or in a neutral market. Okay, and you wanna ideally try to align your execution and your setup to this larger bias. Okay, so if you're in a long trend, in a bullish market on the dailies, ideally your setup on the 5-minute chart, you want to get let's say a bullish breakout. Okay, so something aligned with the bias, the overall bias. Same for bearish. A neutral will give you, I'll give you an example, but if you get a neutral bias, if you see the charts on the dailies going sideways, so you have the opportunity to do both long and short opportunities. So from the bias, you're also going to get like the market context. Okay, you will understand if the market is going sideways, and then from sideways or ranging markets, you can try to get more fake outs, more failed breakouts, more bounces from support and resistance, counter trend trends. And on trending markets, if you see a clear bull trend or bearish trend on the daily charts, then you want to align yourself to breakout continuations, pullbacks and continuations, momentum trading, breakout and retest and continuation. So that's what you want to do. You want to be able to understand from the daily bias if you're trading on a sideways market or on a trendy market, and then you will adapt your setups and your execution to those contexts. Okay, so this is the important takeaway. I have 2 examples I'll want to show you on the markets, on the happening as we speak, and we'll be able to do this exercise together. Okay, continue. We go to the hourlies. Okay, I'll go to hours. You can see me doing that on the trading rooms every Wednesday, and we want to mark the key levels. Now, what are these key levels? A lot of people understand the key levels are support or resistance. Myself, I speak on terminology of supply and demand, but you could be order blocks. And basically, the key levels is where important impulses, important movements were initiated in the market. Okay, so many times you recognize it, and it's very easy to spot them after news, after high impact news, because you get the high impact news, and you see a very large candle, for example. So those areas, those levels where important movements were initiated in the market, those are our key levels. And usually the market will move from these key levels to key levels. So let me give you an example here. We have this chart, for example. And on this chart, we can see we had a consolidation period, and then we had a gap to the downside. Okay, this was a couple of years ago. We had some news or over the weekend trading or something like that, and there was a big drop, and we opened the market with a gap. Okay, now that gap, okay, for that to happen, there's behind the scenes, there's billions of dollars being pushed to the market, or any currency being pushed to the market, and the market will tend to retest these areas. And when the market retests these areas, there's usually a reaction of that area, okay, from that level. So in this example, for example, this on the hourly chart, this is my key level, okay. So I'll wait for price to come back from that key level to that key level, and then I'll decide what I do. So on the hourlies, consolidation, I see, for example, a gap, could be a news train, whatever it is, that where this important movement was initiated, that is for me the key level. So I mark it on the chart, okay? And then I wait. Let's move on. Now the setup. And the setup is what sometimes on real time is hard to explain, but the setup is kind of the signal you're waiting for, okay? So the setup can be a compression channel approaching those key levels we just marked. The setup can be a consolidation. Okay, let's see the price comes back to one of these levels and consolidates inside that key level again. So the breakout of that key level or that consolidation, that can be a setup. If we're picking on a trending market, so a break and retest and then a continuation, that can be a setup. So when you hear if you like chart patterns, for example, okay, the double tops, double bottoms, head and shoulders, all of those are the setups we're looking for, and there's a lot of those, and all of those valid. We just want to to align those to the key levels and to the bias. Okay, so for example, in this trade, in this presentation, the setup is a compression, a channel retesting the key supply. Okay, so we had the chart, we had the drop, we have marked our key level, and now we have price action, a very weak price action. Okay, if we understand what's going on behind the scenes of this compression, we see there's no strong movement towards the key level. It's a very slow and weak movement towards the key level. So when slow momentum, slow price action retests or revisits a strong selling area, in this case, we anticipate to have a strong reaction. So in this case, the compression channel approaching a key level, that's the setup I'm looking for, okay? So now I go to execution. Now, execution is where and how am I going in? To execute a trade, you can use sell limits, sell stops, market orders, and everything comes down to how much confirmation you're looking for. Because sometimes when you're looking for that confirmation, okay, the confirmation might be a candlestick pattern. Okay, let's say you're looking for engulfing pattern, engulfing candle, bearish engulfing candle when you inside this key area. And after the engulfing candle, you go short, okay, which is valid. But when you're looking for confirmation, you give up on price, okay? Usually the engulfing candle might be a very big candle that gives you more confirmation, more clarity, or more win rate potential, but you're giving up on a very better entry price, which is also always good as long as you understand the difference between getting in with confirmation and without confirmation, okay? So in your strategy plan, you need to understand when and why, or your preference, individual preference, if you're going to be getting into the market with confirmation or without confirmation. In each case, you can use pending orders or just getting into the market. If you're available to be in front of the charts, then you can use market orders. If you're not available to be in front of the charts, you might want to go for pending orders. So you just wait for the trigger, or you set an alert, and then you wait. You let the price revisit your key area, and then to trigger you in. we want to make sure we know where are we getting out of the trades. The stop loss is you want to place it always above or below the key level. Okay, so in this example, if we're attempting to go short, we'll want to place all our stop losses above the area. Okay, we will see that in a moment. And finally, where are we getting out? Where's our take profit? And remember, because we are scalping now, we want to have our take profits at the very next available key area. Okay, so let's see how that looks. Okay, so we get in around that area. Okay, so if you get in without confirmation, so when the price came to visit the key area, you short, and then you go a little bit into drawdown before you get into profit. Or if you do wait for confirmation, then you might want to go in after a candle or two when you're already in the money, and then you go short. Your stop losses need to be above the key area, okay? Because many times you might have revisits of stop loss and all of that above the areas before having the movement in your favor. And the take profit needs to be at the very next available area. So in this example, we have a strong support here or demand area here. So for scalping purposes, this needs to be our take profit. If you want to swing, then you can have lower targets. But technically, if you place your stops here and here, then you're swinging the trade, okay? Because we're speaking of scalping, then we want to have our take profits at the very best or closest available area. So if we continue here, okay, we can see what happened afterwards. So we had trigger without confirmation, trigger with confirmation, bit lower here after the candlestick pattern. In any of the cases, we got the price action to our next take profit, and then the market did the things and continue. But by this moment, we don't care anymore about the trade because we already took our profits. And that's the beauty of scalping. When you see me scalping, I keep a very high win rate because I'm constantly putting money into my accounts, constantly taking profits, and then waiting for the next setup available. Okay, so this is the explanation. Now let's go to live markets to practice, okay, or to do the exercise together. Just remember, scalping is it's a technique, okay, or an approach to trading where we want to be looking for entering and exiting from a key level to the very next available key level, okay. Because we're going to be holding our trades relatively shorter period of time, we need to be very disciplined and very patient, and we need to practice this a lot to keep our statistics healthy and in our favor. Now let's see. Let's bring my trading platform. Okay, I think we can see my trading platform. Okay, so I got two examples today. We have, I'm going to start with gold. I know gold is a very popular asset for traders worldwide. So I want to start with gold, and I'm going to start from the daily charts. Okay, so first I have a look. Before anything, I have a look at the market, at the chart. I zoom out a little bit, and I see the overall movement from gold, okay? And you can even zoom out and you can see, okay, we're on all-time highs. So that already gives you like a hint of, okay, this is most likely going to be a bullish bias, okay? In this case, it's very clear. Not always is so clear on the daily charts. If we were, for example, on the same chart, if I was here, okay, in this area, then probably the bias would be neutral, right? Because on the dailies, we were back then, we were like in a sideways market. But as for now, it looks very, very bullish. Now, I want to zoom in a little bit to understand most recent price action, okay? Because we did have a older high. Okay, let's walk that together. Okay, we had this movement, this previous high, and that will always create a certain resistance level. So up until that moment, we could say, okay, maybe that's the moment we're going to get a bounce or something like that. So when getting your bias or when getting your potential next movement on the dailies, you need to take that into account. But then we can see where, as from today, we're breaking through that all-time high, previous all-time high. So that might be establishing a new bias or a new expansionary phase that we want to take advantage of. Okay, so I zoom in a little bit. I go to the hourlies, and I want to see how that breakout is looking like. Okay, so now I want to remark. Let me get rid of that. I want to define my areas. So I zoom into the hourlies, and I want to mark my key levels. So I got one there, okay, which is the most recent one. So now I already established my bias is bullish. So if I revisit this key area, this key demand or key support, okay, we can see from this point we have the impulse being created, being generated. So when we revisit that area, I want to look for price action or a certain setup to try to go long. So that might be a compression, okay, like in the one in the slide, a very weak price action towards this strong bullish area, or maybe I'm gonna get a strong impulse and then consolidation and then a bullish breakout, or I don't know, a strong impulse and then bounce, retest, and then continuation. So there's different setups, but I want to be aligned to the daily bias, which is currently bullish. Okay. Other than that, I also have another demand area here, and I also have, you know, this bit older one, but it's also in there. So I have multiple demand areas where important movements were initiated. Okay, you can see from these points there was like important bullish movements, and we haven't revisited those areas. So when the market goes back to revisit this area and this area and this area, we expect to have some kind of bounce of these areas. Okay, and that's where we want to be active. So for example, and it's just giving you, you know, a potential scenario. Okay, let's say that, just imagine we consolidate. We're on the hourlies. Okay, we consolidate. We consolidate here. Okay, and now we go back. Okay, and revisit this area. If we go long, if we decide to buy off this area, this would be our very next available area. Okay, on the hourlies. So that would be the scalping, okay, where we wanna get our targets. So let me get rid of that. Now I wanna go back. I wanna go to the 5-minute charts, and to make sure and to try to refine even more my channels. Okay, so from the 5-minute chart, I already have a bit more information. Okay, I also have this level right here, and I can now refine also the previous level I mark on the hourlies. A bit better. Okay, something like that. Okay, you can see where's there important bullish candles, important movements created. So now when the market goes back in the future to those areas, we'll try to take advantage of those. Okay, so that's on the 5-minute charts, and the execution I would do it on the 1-minute chart, but now we're not there yet. And I want to bring Euro Yen. I also saw something nice over there. Let me bring it up. Euro Yen. Okay, so we'll do the same. Okay, we start on the dailies, and if we zoom out, we can see also in Euro Yen, we see we're kind of, you know, trading all-time highs. So looks like we want to be on a bullish bias. On bullish bias, remember, we want to then try to get setups to go bullish. If we're trending on the dailies, we want to get continuation patterns and things related to trending and not counter trending. So I zoom in a little bit on the dailies. Then I go to the hourlies and I try to refine my key areas. Okay, let me zoom out. Okay, so I see on the hourlies, I see this area. Okay, I will mark it and then I'll refine it on the 5-minute charts. But you can see we had from these levels, we had a very strong impulse to the upside. Now we're kind of slowing down, but whenever we go back to revisit these levels, then that's where you want to be active. Now let me go back. Let me go down to the 5-minute charts to try to refine this. Okay, and on the 5-minute charts, I want to refine my levels. Yeah, something like that. Okay, you can see at this point we had the strong impulse to the upside, and since then we just continue to the upside, and we haven't gone back to that level. So that's our key level. Okay, so we got bias, bullish bias. We have a very nice demand area mark now. We don't have any supply areas yet. So now we want to wait on the hourlies, on the 5-minute chart, whatever time frame we want to use to trade. We'll want to wait for the market to go down to this level. And when we go back to that level, we want to make sure we have a setup. Okay, might be a compression, might be a breakout, might be a retest. And when we go back here, we want to make sure we take advantage of that potential bounce to the upside. What can we do? We can either go with that confirmation, then you just you set a buy limit. Okay, because you never know when is this going to go back to the charts. You don't want to wait. It's far from that level, so it's not even close to the level. So you can set the pending order, or you can set an alert. Okay, you set an alert on your platform. Whenever price reaches that level, you get a notification. Then you go back to the charts and you see how price came back to that level. Okay, because going to that level and the way it went to that level is similarly important. Okay. Okay, let me get some questions until now. Let me go back to the stream to see the questions. Just flip the lens. It's been jumping up like crazy. Gold view. Okay, so gold, we just did gold. How do we know if there's going to be a breakout down to those levels when prices go to those levels in the box? Yeah, so that's a great question. Okay, real time, you never know. Okay, you just need to be prepared for those bounces because price might come to this level and just continue down, right? So first, you want to see how price comes to that level. So, and we said if it comes in a weak way, okay, we know we have already a strong demand area. So if we see the market will come in a channel, okay, let's understand what happened in the channel. Okay, in the channel, we have these small fluctuations up and down. So the supply and demand are being consumed already. Okay, all the little orders are being triggered all across the channel. So when the market reaches a strong area of reaction, there's no resistance or support in order to prevent a good reaction. So you already putting the odds of a strong reaction in your favor. You're aligning with the bias. You have a good demand area where a strong movement in the past was initiated. So at that level, okay, at that price, there was a lot of interest from institutional movement to move the market up. So next time we come to these levels, there might be the same interest of moving up. And then we have the setup, which is the weak channel. Okay, so also in terms of order flow, we have that in our advantage. And the last thing you can do is wait for confirmation. So as we discussed, whenever the market comes to this level, instead of going without confirmation, you wait for a price action reaction, for tails on the bottom, for example, to tell you, okay, there comes the buyers. Okay, there's tails on the bottom. There's pin bars forming. There's engulfing candles forming, or those patterns that will help you understand there's a reaction coming. Please come, every 2 weeks I'll come to the trading room and I show this live, and then I can show you also the management of trades. But that's the way to have like a clearer image if the market will react or not. And of course, if it doesn't, if it breaks to the downside, then you have your stop losses. So we always set our stop losses below the boxes, right? Okay, let me guys know if there's more questions. Yeah. So as we mentioned, we have we said we always want to have our stop losses below. In this case, is below the box. If that was an opposite trade, it was a shorting signal, then you want to have your stop losses above the signal. So let's have a stop loss set here, and I'll walk you through risk management also a little bit. Okay, so we have a stop loss, and when we have when you already know in advance where your stop loss is going to be placed, okay, now you can measure. Okay, in this trade, I'm going to be risking 67 pips. Now, how heavy I want to go in this trade, right? What's my account size? How much I want to trade? Do I want to risk 0.5%, 1%? I run the numbers, and then I know I need to divide that by 67 pips I'm risking within this trade. Okay, or 60 pips I'm going to be risking. So then I know I'm certain I'm not going to be risking more than necessary. Okay, guys, stay tuned. Okay, I'm gonna take some more questions, and stay with us because we're gonna give an important announcement now. Now Michael's gonna join me again for his strategy. Ends up in overtraining, isn't it? So it's not always the case. I know the opposite, because if you're scalping and you manage to start your session and then to scalp properly and end your session, then there's no need for overtrading, right? Because you set yourself a time limit and a price limit. Okay, how much you're gonna lose and how long you're gonna lose, or so you have your framework and your time work, and then there's no need for overtrading. Okay. What is the risk reward for this setup? Okay, so the risk reward is something important, and it's important to know about scalping that you usually have a lot of wins. Okay, because you're gonna have very quick reactions to the levels you're trying to aim for, and usually your take profit or your next area is close enough to have multiple wins. But take into account that you might have also the losses, and sometimes the losses are going to be bigger or larger than the wins. So in my case, and I've shared my my stats, in the trading rooms, you're going to have like a break-even risk-reward ratio, but you will be able to manage a very high win rate. Okay, you will have the ability to make multiple wins. So you can keep your 70, 75, even 80% win rate. But when you lose, usually your wins are larger and you have like a break-even, slightly negative risk-reward ratio. That's important to know and acknowledge, because that's natural for scalping. So don't get too stressed for that, okay? Okay, I think we're good, guys. So let me welcome back Michael, and he has his presentation. And do stay here because we have very exciting announcement
For you guys.
in a moment.
That was great. So thanks so
Thank
much
you,
for
Michael.
that. If let's stop the. Alrighty, stay with me a little bit longer because right now, guys, we are going to do our first giveaway, and that's actually the 5ers giveaway. We're gonna give 10 accounts of the 10 high stake account, right?
Yep.
And then 20 accounts of the 20K high stake account. So I'm gonna share my screen for a second. You can watch it together with me and Saul, and we can do this, the first giveaway of today. After the giveaway, I'm going to do my presentation, and then Saul and I are going to present to you with our exclusive offer for today, both for 5ers and Traded Pool. So stick around for that. If you guys in the back can bring out the screen, I'll do that. Alrighty, we are good to go. First giveaway, the 5ers side. Here you go, drawing the winners. 10 of you guys that taking on the 10K high stake. Alrighty.
There you go. 10 total winners.
We have 10? Yeah, we got 10 winners. You get in, guys. You will get it within 48 hours. 10K high stake for all of you guys. And we're going to do another giveaway with the 20K high stake for 20 guys right now. So
20 lucky winners.
yeah, let's see that.
So guys, we got these emails recorded.
Yep.
So you will get them by tomorrow.
48 hours.
48 hours. If not, just reach out to support. We'll help you out, guys.
But definitely wait 48. Alrighty. Here are the winners.
We're seeing the winners right now.
Looking good. 20K high stake. Make sure you trade it properly, and you can actually use the strategy you just learned from Saul to do that on currencies or generally on CFDs. Use that. So we got the 20, right? Yeah, we got 20. These are you guys. Hopefully you're in one of those names. Thanks so much, Saul. I'm going to take it from here to my presentation, and then we'll see you
Absolutely
in 30 minutes or so to talk about our special offer for today. Alrighty. Popping up on the screen. And let's do this. Oh, and thanks so much. A quick reminder. So just before going into my presentation, let me do this. I'm going to enter the 5ers website. And for those of you who didn't see it yet, on the 5ers website, you can see futures soon, a button of futures soon. And this means that on the 5ers, we're going to bring the futures to you guys. So basically, funded accounts on futures. All you got to do is just click on it and click on the email here, add your email. It will be basically your early bird access. We're going to send you a few information about what we are planning and the work that we're doing on the future side. It's going to be an incredible one. And if you're familiar with what we do on Traded Pool and the 5ers, you know that whenever we do something, we bring something different to the industry and changing it and taking it to the next level. This is also something that we're doing right now on the future side. Is yet to be out there. We are currently working on that, but I can promise you it's going to be a game changer on the futures industry. So make sure you sign in the email here. You will also get a survey. And of course, we'll start getting some information about what we are planning and what will be in the future, the near future. One more thing about that, we already have our socials set up for the future side, so you can go and register for them as well, follow, subscribe, and of course our Discord community on the 5ers Futures. So make sure you follow and stay up to date. It's going to be an incredible programs, and generally everything around it will be very unique and new to the industry of the futures side. So if you trade in futures, or if you want to do that, for sure check it out. We do have 2 pages, long pages, that will prepare you to trade futures in case you're not familiar with that. So if you are trading Forex, we have a full explanation about how to move from Forex to futures, or maybe not necessarily move from Forex, but actually just using it to extend your arsenal of trading, and the same for stocks to futures. All the nuances, all the stuff that you need to understand about the futures market, we will explain about it and teach you along the way, so it will be an easy shift or an easy expansion of for your trading. So make sure you do that. Go to the 5ers website, click on futures soon, leave your email in the early bird access, and you will be up to date with everything that we do. Alrighty. So now let's jump to the presentation that I made. And what I'm about to talk with you about is basically buying the dip. For those of you who've been with me for the last 4 years in Trade a Pool, and maybe even before that, you know I'm a buy the dip trader. I've been trading for 17 years, stocks and futures. And this is by far my main and top strategy that I'm using, buying the dip either intraday on a 1 minute chart or an hourly chart as well for a few days of holding. So in that case, this is my bread and butter. And if Saul mentioned his scalping strategy, mine is the buying the dip. And I added here by 2026 dip because, as you know, we already seen it in the last good few years, and especially this year, 2025. Whenever the market is dropping down, it could be a major drop or a small drop, but at the end of the day, we will see the bounce. And we had it a week ago when the market really, the Nasdaq really dropped nicely. All the tech companies dropped as well. But then once we reach that main liquidity level, we bounced up until today, basically. So the idea of it will probably remain the same for 2026 as well, meaning whenever we will see a drop, you can of course try to take the short side as well and look for that drop. But in my eyes, it will be smarter move to just buy the dip. But, and that's the main issue when it's come to buy the dip, a lot of the guys at home, a lot of the traders are actually catching a falling knife, right? Instead of that, and instead of going into really charting and the indicators, we need to shift our mind or change our perspective about buying the dip. And that's what I want to talk with you about in the next 20, 30 minutes. And I'll bring up the chat on my side just to see if you have any questions. Feel free to drop them in the chat, so I will see it along the way. But the concept is simply that buying the dip is not really an entry point. It's not about the charting part or the indicators. It's actually about the way you think, right? Once you understand that there is a psychological aspect of trading, and of course we all know that, and a psychological cycle, then we can identify it. And once we identify the right psychological period, then we understand that this is the time to buy the dip. So it doesn't mean that you need to click the mouse here right on the dot. Of course, it's amazing to catch the tail, right, and really see that you bought the dip, like literally the last low. But in the idea of it, it doesn't really have to be that way. You can easily buy the dip even if you're missing a little bit from it before or after the low that was created. So try to think of it of that way, of thinking when it should be happening or what's going on behind the chart, and only then jump into the chart to really analyze it. Now, of course, buying the dip is a common knowledge, right? A lot of traders heard about it, probably studied it or watched many videos on YouTube talking about how to buy the dip. But at the end of the day, most traders will fail and catch a falling knife at the wrong place and the wrong time. And once you understand that there are phases to buying the dip, then it will be easier for you to jump from the failing side of it to actually understanding, okay, this is the area, the moment I actually need to buy. So let's dive into that. And again, you can easily write your questions below. Feel free in the chat. So 3 types of dips. That's the main thing we need to remember. We have the panic dip, we have the hope, and then we have the expectancy, right? So the panic dip is where fear is real, meaning we see a forced selling, the price is declining rapidly. This is what happened at the beginning of the stage of the dip. But this is also the moment when no one is reactive. A lot of the traders will see a major dip. We will see it in a chart in a second, a major dip. And once they see that, they stop. They're not participating really. They're not buying the dip because they see something is off, right? Major force in selling will cause a stop, like a freeze. What's going on here, right? Second thing will be the hope dip, which is a lot of the times after a major drop, you will see a bounce in the price. But this bounce will be actually sort of like a pullback where traders will go earlier to buying the dip. They will think this is it. But in most cases, that will be too early to jump in. That's their hope. They're hoping it will turn from this area. And the last thing will be the expectance dip, which is after the bad news is observed and all the drama, all the chaos is starting to observe or relax, get into that relaxed moment, relaxed stage, then we can start buying the dip truly. And in most cases, we will see the turnover of it. And in a second, I'll show it to you in the chart. So one of the lines that I really love is this one: read the emotional state of the market. Because the market is just participating, right? It's a market of us traders all around the world using the same knowledge, the same experience, some more or less, and we're just acting upon it. But if you understand the emotional stage of each one of us, right, then we can understand where should the market move. Because if everyone is in panic, and this is a classic one, you can see it. I'm sure most of you guys been around COVID time. The market dropped rapidly. Everyone got into a panic stage, forced selling like crazy because everyone thinks that the world is about to collapse. And that was the place where another push to the downside, bounce, a little bit of bounce. That was the hope dip. And then when we got to that point when the bad news observed, everyone already knows about it and it's not a panic stage, then there was the turnaround on COVID, and you can easily see it in many other cases throughout the years. So once you understand the emotional aspect of trading, what's the stage or level that a trader will be in, then you understand what is going to happen in the market. And it's amazing to see it every time. If you shift your mind to that stage, to thinking about emotional and not about necessarily the candle that you see, you will immediately see a different approach in your staging, in your understanding of the market structure. Alrighty, so in order to do that, you have the 3-question buy the dip filter. Before entering a trade, ask yourself this. Okay, so it's not about really numbers or where your stop is. It's a logical aspect to it. Who is in pain right now? Who is being forced to sell? That's the first question you want to ask yourself. And of course, the first guys that are willing to sell are those guys either forced to sell because the brokers close their account, margin calls, right? It's mostly on stocks, but generally or futures. But there is a time where if I'm in a loss, then I need to close the position, or I need to add more money to the account. So forced to sell, that could be something that is automatically generated by the broker. Guys that are seeing the market is dropping down and they bought it just as a minute ago before that, that means that a lot of the guys are in a loss and they're forced to sell. They gotta get rid of their shares or their position because they're in a big loss. Those guys, that could be automated stops, right? Hard stop in the system will trigger the stop losses, which will trigger the forced to sell moment or idea concept. So ask yourself this at first. Then go to the second stage, which is what has already happened that the chart knows, right? Because we have Charles Dow with his theory. So Charles Dow talked about the fact that the chart already showing everything that we as traders or investors needs to know about it, right? So in that case, what already the chart, what happened on the chart, and the chart already know, and of course we're talking about the news. The news are already out there. People are aware about the news. Do they understand what's going on? If you're taking again the COVID time, then the price dropped dramatically. A lot of the people are selling even without knowing what's going on. Then the news came out, Corona, the craziness of the world. That's the second drop. And then ask yourself this, because you do need to manage the risk. If I'm wrong, where am I immediately proving wrong? And that will be something that you can use in two ways. One, throughout the news, as I mentioned before, observing the news. So if the news are already out there, you don't want to see the panic. You want to see the calm. You want to see the chaos becoming something more flatter. So not a lot of drama going on. That will tell you that the news is already out there and everyone observing it and understanding what's going on. And then you need to tell yourself the second part will be, because we are traders, we are using main liquidity levels, right? So in that case, we want to look at the chart on a higher time frame in most cases. Depends on the time frame you are trading. For example, if you trade in a 1 minute chart, you will go for the hourly chart, right? You will look for a major level on the hourly chart. That could be also a 4-hour chart. Or for those of you going all the way, you can go up to a daily chart. But in most cases, if you trade in a 1 minute chart, you can definitely stay around the levels of the hourly and the 4-hour chart. If you trade in a higher time frame, for example, if you're executing on an hourly chart, then you can take the levels from the daily and even the weekly chart. So once you understand the concept or the psychological aspect of it, ask yourself, where do I stop loss from it, right? Where do I stop the position and take in the loss? Because, and that's one of the most important things when it comes to trading in general, not even just buying the dip, you want to have the right size for your trade, right? Not going oversized. And second thing, you want to know that you're not going to blow the account, and you got to take the punch, and that's totally fine. But take the punch without taking the knockout, right? So in that case, if I have a major liquidity level on the hourly chart and the price is dipping down strongly, even more than what I expected, I need to close the position and I need to take that loss. Simply as that. Sometimes it won't be as easy, it's easier said than done, of course, but this is something that if you put, and and this is something that helped me a lot, because again, I've been buying the dips or selling the top for many, many years. If you have it in front of your eyes, literally with a page that says, okay, let me ask those questions. Who is the pain? Who is in pain right now? What has already happened? Where do I see that I'm wrong? Once I have those three and I can mark it with a checkbox or just write down the answer right next to it, then it's easier for me to commit to that stop loss and take myself out of that position. So these are the main three questions you want to answer to filter out the dip. So let me ask you this. Now that we're watching the chart, one decision, okay? Like I said before, you have three questions. Try to answer this. Where is that? What is that stage that we're looking at right now on that chart? We're looking at Tesla on a 1 minute chart. Again, when I'm trading stocks, I'm trading mostly on a 1 minute chart. Let me know here, where is that stage? What is that stage? Is it the first one that we talked about, the one that everyone is selling super strong, or is it the hope dip, looking for that bounce, the pullback, or it's actually the expectance of the dip and then we need to go higher from there? Try to answer in the chat. Don't worry about being wrong on the question or the answer. That's totally fine. Feel free. Let me know what you think. And by the way, yes, for those of you who asked before, this could work definitely for futures and for Forex as well. I can easily tell you I traded 3 of them throughout the years. I had like 5 months that I only traded Forex. It was great and also profitable, but to be honest, a bit boring. Sorry, so for me, stocks and futures are more exciting, so I got to stick to my guns. But it's the same concept. You will see the drops. You will understand where the market, where the participants are actually occurring. What's the psychological aspect for each one of them, and then you will need to buy the dip correctly, which will, if we're talking about the technical side of it, it should be around the area of major key levels. So like I said, the hourly chart, if you trade in a 1 minute or a 4 hour, that could work as well. Okay, you can vote through the poll right now. Feel free to do that. I'm gonna vote as well, although I know the answer. In that case, so yeah, wheat could be boring, I guess. Yeah, for sure. But that's good that you will mix between boring and excitement, because at the end of the day, we want to have it boring, so to speak, but also interesting and good for our pocket. So in that case, I'm going to share it and look at the chart here. Oh, let me do this. Going to remove this. And this is basically the chart that we just looked at. So we had the drop, major drop that started, the selling force, right? The force that's selling right now are actually occurring right here in this drop and the second drop. Then we have the area of the pullback. That's the hope. Everyone expecting or hoping to see the price bouncing up from those levels. And only then, when we dropped and those guys jumped here earlier, only then we actually see the bottoming and you can buy the dip. And again, it doesn't necessarily needs to be like a specific point, right? You can see it's basically accumulating the position, right? In most cases, it's not going to be just one candle and that's it, we're going up. It's going to be an area, so you can easily buy around it. Just make sure you have your stop losses at the point where you said to yourself, okay, that's it. I'm wrong. I'm going to be out of that trade let's see another two examples, and then we can go from there to our exclusive offer of the night. Okay, in this case, another major drop. That's the TQQQ, meaning the Nasdaq, the leveraged ETF of the Nasdaq. Look at the drop here. First selling pressure coming in, right? Then you can see the bounce. That's basically where a lot of the guys are jumping in and saying, that's it, that's the bottom, let's buy the dip. But that's in most cases will be just a pullback, then another drop, and the accumulating the position and changing or shifting the trend. Like I said, you can easily cut it to three phases. So now or today or even tomorrow, when you look at the chart, try to cut it to those three pieces, right? One, the force, the selling pressure. The second, the hope, and then the real buy the dip, the expectance, basically. And you can see the same idea here. And from today, you will see it over and over again. And this one is a bit tricky that I want to share with you. Major force coming in, dropping. Then you have the bounce. Here it is, right here, the pullback. Another drop, accumulating. But in this case, you can see that that was a red day completely from beginning till the end. So even if you bought the dip, maybe it took a few partials out, but even if you bought the dip and it didn't work, you need to understand where you're going to exit the trade. As you know, you're never going to get 100% of success rate. But if you go through those three stages, I can assure you, because I saw it for my trading and others as well, you will see a dramatic increase of your success rate, pushing from 65 and even above that. So make sure you have your stop loss, you understand where to exit at least. And of course, those three phases, ask yourself those questions. All righty. Okay, before jumping to our next stage, I want to bring back the man, Saul, 5ers CEO. Come right up. Gonna take, let me remove the share screen. The guys at home, if you can put the guys in the back, if you can put us, Saul and myself. Who's with me? Okay.
There we go.
All righty.
How was it? Yeah, it was good.
For me, it was great. I hope the guys listened and took some advices. I mean, it's amazing. You know, we've been trading for a while now, and we're doing roughly the same. We do have the same
approach.
Yeah, the same approach on the market, right? And even if you're doing forex and I'm doing it on stocks and futures, it's amazing to see how the chart will react.
Correct.
Because as we talked about it many times, it's a psychological aspect to the trade.
Psychological, right? And big money looking for bringing money to from a level to another level. So. Yeah.
Incredible.
It works the same on all markets. So it's fascinating to see and to trade it. And hopefully you're getting the best insights, guys, there at home. So what are we doing now, Michael?
Okay, it's time to present our exclusive offer. Both of us have it for the 5ers and trade a pool. You've been waiting for a long time, so we'll do that. Then we'll go for a quick commercial break, and then right back into our funded interviews or our funded panel where they can share their knowledge about the evaluation and the funded and the payout, everything that you need to know in order to take it to the next level. So let's start with that.
Yeah, let's do it.
All righty.
Let's do it.
So
what we got? I'll take it.
Let's start with you.
Yeah. Guys, we prepare an account that's going to be available only for a few days. Until January 2nd, we want to give you the opportunity to prepare yourself for the next year. So as you know, we got at the 5ers a very popular account, which is the two-step, the high-stakes account. And there's a lot of demand, a lot of requests for small accounts on the high-stakes account. Today, the smallest account is the 5K account. and we constantly have questions and requests for smaller accounts than that. So so more traders can get advantage of accessing the market. So we've done that only for you guys. We opened the account from today. In a couple of minutes, you will see that on your hub available for purchasing, and we're also giving it on end of year exclusive price. Okay, this is a price that is not going to be available in the future. So we've opened a 2.5K account, high stakes account, for only $12. Which is
amazing.
Yeah, which is a good opportunity to take for everyone. You can add that account for on top of accounts you already have on your active accounts. You can get up to 4 of these accounts at any given time. So it's a great way for preparing for the next year. A lot of you guys watching there, you're thinking on doing this step into the prop market, or the 5ers or the forex market, whatever it is, and this is a great opportunity to get an account and get your toes in the water without risking or investing a lot of capital. Just get an account to get prepared, to to practice, to set your levels, everything to get started for 2026. So 2.5K account, high stakes, for only $12, starting now until January 2nd. You can go to your hubs and you will see that account available up for grabs.
Yeah, that's incredible. So, and of course, a trader pool, we cannot sit aside and just see the 5ers is doing a promotion. So what we are going to do, we do have the 5K account on trader pool. It's bypassing the PDT rules, so you can definitely day trade with the 5K. We're going to do a big discount, probably the biggest that we ever did, 50% off till the end of the year on the 5K account. So it's practically $29. You can buy a few of those, no limitation on that. Go ahead and do that. And a lot of the times, I've been talking to many traders, interviews, webinar and such, and I'm definitely not recommending to start with the bigger accounts, right?
Absolutely.
Start with a small one, build it, understand that you know the rules, you see that you're making a progress, and only then go for the higher
Absolutely. The same way you would do on your brokerage account, right? You start on a demo, you deposit a little bit of money, you get used to the platform, you get used to the rules. We got the daily limits, we got the risk management guidelines, we got the targets, we got the leverages, all that. So get used to the prop rules and prop environment on a small account. This is the best way of doing that, the best moment of doing that. And then when you experience success, when you experience consistency, only then go and scale your accounts.
100%. Alrighty, guys. So go grab it. It will be available in the next 2 minutes, basically. And then right now we're going to go to a commercial break, 5 minutes. Go grab a coffee, a tea, or a pee, and we'll see you in a few minutes. We're going to talk with our funded traders panel. It's going to be an amazing session, so make sure you tune in. See you in 5 minutes.
See you shortly, guys.
All right. Thanks everyone for coming back to us. This is it. We reached the moment of the funded stage, the panel. So first of all, I'll introduce everyone quickly, and we will dive into the hard questions. Thanks for coming, guys.
Absolutely.
Sam
Yeah.
is with us, funded trader of the 5ers. Will, Kevin from Trader Pool, and Justin. How is everyone is doing?
Yeah, I'm
Good.
good. I was gonna say who
Doing
goes
good.
Two thumbs up. Two
Who's
thumbs
gonna
up.
start first?
I'm good. Yeah, I'm not too bad. I'm super excited for this. Nice nice event to start the week off with.
Amazing.
Yeah, there were great questions. I wrote some down in chat. Some people were asking, so I'm excited to dive into it. The passions to help traders find their edge and to find success, get that equity curve going in the right direction. So let's dive into it.
Amazing. So I guess, first of all, the guys at home, you can definitely write some questions for our funded traders through the chat, and we will answer that along the way. But I guess I will start with the first question, probably the hardest one. You know what, Kevin, let's start with you and then go to everyone else. What was the hardest mental challenge on the way from getting to the funded stage, from evaluation to the funded stage? So what was the hardest part on the mental side of it?
It's a great question. I think ultimately, traders, it's about adjusting your expectations in trading. We all want to win and succeed every trade we take, but that's not going to happen. It's unreasonable to expect that. Ultimately, in trading, you have to detach yourself from the outcome entirely. It's different than anything else. Michael, imagine a mechanic, a car comes in, and you're like, oh, like I may or may not fix this car this time, or a surgeon says, okay, I got to do open heart surgery, but this time I don't know if it's going to work out or not. In trading, it's exactly like that. We don't know if we're going to be right on this trade, and that's okay. Risk says more things can happen than will happen, and if we can create a state of mind that's unaffected by what the market's going to do, the struggle will cease to exist entirely. So the best traders, what they do is they manage the uncertainty. They don't have a magic crystal ball that says, I can see into the future. What they do know is what they're going to do. My reaction, I got to know traders. Traders, you have to know your reaction to the market. You don't necessarily know if the next trade is going to work out because in trading, there's a random distribution between wins and losses. It's random. You don't know, but that's what creates an edge. We're trading probabilities. We're not trading predictions. And when you understand that and say, I don't know necessarily what's going to happen on this trade, but I know what I'm going to do in the face of that uncertainty. Imagine a bird on a branch. Does the bird trust the branch or does it trust its wings? So we as traders, do we trust the market or do we trust ourselves to know what we're going to do in the face of that uncertainty? But you have to have an edge. That's first and foremost, Michael. You got to have an edge ultimately, but you have to know what you're going to do because the market can be random. It can be irrational. As Mr. Mark Douglas says, it can be irrational longer than you can be solvent. So just make sure you know what you're going to do.
Yeah, I love the bird and the branch thing. I like that. I'm gonna take it definitely.
Yeah.
The wings. What you say about that, Will?
Do you know what I love? Like what you said about Mark Douglas, the markets will be a lot more patient than you can be. So, it's 100%. The mindset is the biggest thing when it comes to profitable trading.
Mm-hmm.
And if you do not have that mindset and if you do not have the ability to understand that you cannot control the market, but the market can control you, then if you don't realize that quick enough, then you'll quite easily fall down that slippery slope. Whereas once you start to understand that it's a probabilities game, and as long as you are sticking to your plan strictly, then therefore that you can 100% be able to gain profitability in the market due to the fact that you're following your processes and understanding, a bit like you just said perfectly with the bird and the wings, you're trusting your strategy, you're trusting your abilities in the trading market over what the trading markets are going to force you to do.
Nice one. Sam, Justin, you want to add on top of that?
Yes, for me, yes. For me, it was realizing that the markets are going to be rational and waiting for your setups to arrive. Markets are going to be rational. Your perfect setup could be there, everything could be aligned, and it could still hit a stop loss in 5 seconds. You never know. Or maybe a Trump has tweeted or something. Markets will be rational, and it is for us to be patient with it, to manage our risk properly, and
Yes.
play our cards safe.
Yep.
if we are going with the expectation that the markets are going to be rational and and it's going to take time for you to pass the evaluation and you're not going to pass it in a day or two, you will be more often than not on the right side of the markets. But if you want to pass your evaluation in one day, in a week or so, you'll probably blow the account. For me, I had to learn that patience, that you're not going to be a millionaire in a day. Rome was not built in a day. It is going to take time. Accepting that it is going to take time, accepting that it is going to take time to get those payouts, accepting that it's going to take time for you to pass the evaluations. Once you accept that it is going to take time and the markets are going to be rational, you start to build the confidence on your edge, and then everything goes smoothly for the most part.
For the most part, definitely.
Yeah.
Justin, I'm gonna jump here to my next question, and this is about a good trading day, right? How does it
Mhm.
look like for you? Even if it's a loss or slightly negative or slightly positive, how do you define a good trading day, and what do you do when you have those?
Yeah, I mean, it's not really about whether you made money or not having a good trading day. If you have a strategy or an edge that works, then as long as you're following that and you're not deviating from that, that is your good trading day because just like a casino, when someone comes in and they're playing and playing, they may be winning, but the casino knows in the long term they have the edge and they're going to win. So as long as you stick with what you know and what you know works and you don't deviate from that, even if you have a losing day or you say you have a max loss day, as long as it was within the confines of your trading plan, it's completely fine. So for me, even if I have a max loss day 2, 3 days in a row, it's completely fine because I know through years of trading my process and my strategy that that's fine. It's just the variance of when it comes, not if it comes, and I'll be fine in the long term.
Yeah, and that's definitely for someone as experienced as you. But let's maybe dive in a little bit for the guys at home that may be trading for only a few weeks or few months, right? How do you handle that? You have 2, 3 days of losing in a row. How is your how do you handle your mentality part of it in order to bounce back up?
Yeah, I mean, when you're new and you're learning, that's the hardest part is the emotions. But you have to really, the only way that I found through the years to be able to get through that is to experience it. Because until you actually feel what that feels like and experience it, once you get that feeling of, having those losses and maybe you did something wrong, then you don't want to feel that again. And it's going to push you forward more towards, okay, last time I did this mistake and I had this big red day. I don't want to feel that way again. I don't want to see that big red number again. So I think part of the reason that I was so interested in trade the pool and the funded side of stock trading is because it gives people the opportunity that maybe have only been paper trading to now have some actual equity involved that will bring some of those emotions into play. Because in my opinion, the emotions are the hardest part about trading. And until you get actual equity involved, if you're only paper trading, that's great to learn a strategy and see if there is a feasibility behind it. But until you have the emotions assigned with it, you're not going to know for sure if you can make it work. And so you need to go through some of those days where you have a bad day, a bad week, a bad month to know if, one, does my strategy work with my personality and my emotions? And two, now that I've experienced that and felt that, now I know what to avoid in the future.
Right. Will, you want to add on that, or Kevin? Yeah.
Yeah, no, 100%, man.
Oh yeah.
I actually want to add
Trusting
on that.
your. Go on, Sam.
Okay. So basically, I have been really struggling with identifying good days or bad days in trading, and Fiverr's performance coach the Fiverr's performance coach Richard Wells, he tells that any trade that follows your plan is a good trade. There are four types of trades: a good trade, a good loss, a good win, a bad loss, and a bad win. Bad losses and bad wins are the trades where you do not follow your plan. So as long as you're taking good trades, it does not matter whether they are losses or wins. that defines a good day for me. It is those days when I do not follow my plan and take some random trades which are not part of my plan. That is when I would describe them to be bad days. It might be one of the best days in terms of numbers, but if I'm not if it is not a part of my plan, then it is supposed to be a bad day. And I really believe that if you are able to follow your plan, then at the end of the day you should be proud of yourself that you followed your plan. It is a loss, does not matter. I am proud of this loss because I have followed my plan, I've stuck to it. I did not chicken out and stop it in between. In As long as I'm taking the trades that I'm following my plan for, I'm proud of those trades. And I feel those are the good days of the trading. It is more often than not when I do not follow my plan. Those are the days where uh, you start losing the trust in your edge, and you start second guessing yourself, and then it's a downward spiral from there. So all in, you should follow your plan, and regardless of the result, it has been a good day.
That's amazing, and that's the moment when you want to put a big shout out to Richard Wells, our guy on the 5ers. He's doing a great job. He's also a great dude. I met him in London. Will, you want to add on top of that?
That was an absolutely perfect explanation, Sam. To be fair, yeah, 100%. A good day is when you follow your plan, even when you lose. Just to give you a live example of that, earlier on in the beginning of 2025, I believe it was, I actually gained one of my biggest portfolio equities, and all due to not following my plan. And I thought, oh, this is super cool. I was like, oh my god, like I've managed to gain one of my biggest portfolio sizes, and then about a month or two later, I lost it. And the reason I lost those particular accounts was because I gained them through going outside of my plan. So therefore, it's the world has a funny way of coming back on itself. So therefore, if you gain something that you didn't deserve, you'll quickly lose it. And I'm a big believer of that. Now, the same goes with these accounts. When you go outside your plan, you will potentially earn some fantastic money, but it'll put the wrong mindset on you. It'll put the wrong attitude on you, and you'll have a different outcome than what you are, in theory, could have been anticipating, whether it's more or less money when it comes to whether you're in blue day or a red day. But either way, following your plan is absolutely key, because even if you blow the account, even if you blow the account, as long as you have followed that plan, then there's longevity in that. Whereas if you go outside your plan, the uncertainty becomes a lot higher.
Absolutely. I think you guys nailed it. I love it. Process-oriented versus results-oriented trading is what I talk about a lot. That is, results says, oh, was it red or green? Then the result is based on if it was a good trade or not. But it's process. It's process-oriented, whether it was green or red, if you stuck to the plan. You guys hear it all the time, the cliche, plan the trade the plan. But amateurs, I'm telling you, traders out there, they adjust their risk parameters mid-trade. They never predefined it prior. They're saying, actually, Michael, I loved your buy the dip. It's like maybe they got involved in the hope, and now the stock keeps dropping, and now they're saying, oh, let me bring my stop down a little bit lower, a little bit lower until the account's gone. You never want to adjust it mid trade. So predefine it, guys. It's very expensive. It's very expensive to try to prove to the market that you're right. And that's an ego problem. That's a big ego problem.
Don't play a game of ego with the market.
Right, exactly. So good trading, guys, ultimately is money's going to be a byproduct of good trading, and you're going to lose in trading. That's part of it. There's some great quotes out there. You got Michael Jordan, who's like, he lost a lot of games, right? He lost a ton of games, and he said the only reason he won is because he lost. So losing is part of it. Honestly, finding the edge may be one of the easiest things to do. There may be controversy with that, but over my experience, I think finding the edge is probably the easier thing. Now, what's more difficult is how traders lose, and not only how they lose, but their response to those losses. So Write
Right.
that down, traders out there. How are you losing, and your response to those losses? That's what's really going to define you as a trader, because if you're not losing well and you take that shovel and you just keep digging and digging deeper and deeper into your hole, rather than saying, you know what, today's not my day, put the shovel aside and revisit the next day, because everybody is going to have drawdowns. Like, the market's not going to favor your edge some days. It's just going to happen. And just because you had a red day, just like Sam, Will, and Justin are saying, that doesn't make you a bad trader. It means you're sticking to your process, because you've already predefined this plan regardless. And so the loss is just, it's inevitable. It's going to happen that day. Just set the day aside and revisit the next day.
And yeah, totally agree with you guys. And it's amazing that you share the knowledge here. It's a process, as you all said. But let me ask you this: you talked about discipline, right? So first of all, let's talk a little bit about how you build that discipline, and also how you know when not to trade, right? Because there are times in the market when you understand that maybe afterward that you shouldn't be taking that trade.
Mhm.
But how do you know in advance? How do you build that discipline or that plan to
Yeah.
not trade on the bad days or the bad trades?
Well, you
Justin.
got to hate losing because when you trade on those days, generally that's when you're going to lose. And I've done it a million times. And for me, a day to trade, a bad day to trade, it could be several things. It could be the market conditions aren't right. You didn't get enough sleep. You're having crazy things happen in your life, which is when I took the biggest trading loss of my career, when I was going through a divorce and everything and lost $25,000 in one day. Shouldn't have been trading that day because I was not in the right mental state to be accepting all the emotions that come with a regular day of trading. So you have to, and this is, once again, it's just one of those things that you're not going to just be able to know. You have to experience it and see it happen a couple times to you to actually understand what it is. It's like that saying, you don't know what you don't know. Well, you don't know what you don't know until you've actually done it and be like, oh, that's what that feels like. That's why I shouldn't be doing that. I shouldn't be trading when, I was up all night with the kids, or I was up partying all night and I'm hungover. Shouldn't be trading those days until you take that loss. I would never do that.
Yeah, none of us have ever done that.
Because the market's an ever-flowing river of opportunity, new traders just think, oh, I can cannonball in this at any time, right? It's like, if there's opportunity, that means there's trades. And if there's trades, that means I should be involved. But more trades does not equal more money. I think ultimately that's what it is, traders. That's very hard to grasp because, like GDT, Justin, when I went over to offshore and I was like, oh, I can trade as much as I want now because I'm outside the PDT. Oh, let's just keep pressing the button. More button pressing equals more profits. That's not how it works. You have to stick to your edge, stick to the. You guys have heard it from professional traders very often. It's the uncommon discipline, uncommon patience that we spell with a PAY that separates the best from the worst. You have to trade the edge, B, have the discipline to just trade that, because random trading is going to equal random results. So stick to that. Have the risk management to protect and preserve that capital. And 4, you have to have the consistency to compound it over time.
I love that as well. I love that you said as well, when it goes into, there's 2 ways that you can look at trading. And that's why journaling, there we go, got there in the end. Journaling is so important, because you do not know unless you know. And that sounds almost contradictory, and it almost sounds triggering. But I love it when you said you do not know unless you know, because you've got to experience it. But then once you've experienced it, how do you know? Because then a lot of traders will go through a massive loss. They'll go through a massive psychological day where they really shouldn't be in the market. But then they'll go and do it again. But then you're like, well, hang on a minute. How have you done that? You know what's going to happen because you've done it before. Like it's almost contradicting what you've just said. And that's where journaling kicks in. If you can journal, and people laugh at me a lot when I speak at events. I say about dear diarying. And a lot of people laugh and be like, oh, I can't dear diary. God, I'm not a 13-year-old girl. And it's like, well, no, yes, you've got to dear diary. You've got to write how you feel. How did you sleep? What did you eat? What did you drink? Were you partying? Have you gone through a divorce, a breakup? Has your pet died? Has something psychological happened in your life that's causing you to look at the markets in potentially a more compromised way? And that's the emotional side. But then you've also got, like you mentioned, price action isn't price actioning. You've not got the markets doing what you want it to do. Well, you've got to explore that. You've got to dive into that and take that loss to understand that you really shouldn't do that again. But you're not going to know to do that, not to do that again in the future unless you journal it and write it down.
100% agree with you guys. And I've been interviewing hundreds of funded traders on Trade Pool, and it's incredible to see the one that you mentioned, Justin, about the divorce, for example, right? And Will, you mentioned that as well right now. And I experienced that myself as a trader. Every time someone is sick, move into a different apartment, getting divorced, breakout, boss is yelling at him at the workplace, anything like that will automatically affect your trading. You got to trade when you're 100% clear in your mind and focus on that trading part and not something that affecting your day-to-day life. So this is definitely a key to remember. It's not easy task because Kevin, you mentioned that, right? You see the market active, you gotta be active, right? You feel like I gotta click the mouse key to jump in a trade. So you gotta be disciplined in order to stop you from doing that, and be aware of the fact that you're not 100% clear for that day. So talking about those things, any juice on a big loss? Justin, you mentioned the 25K. Anyone want to jump in and share the story, the diary?
My biggest loss in a week was, I think it was like 60.
Actually, when I started trading,
go ahead, Will.
Go?
Yeah.
Yeah, I was just saying. So I think it was about $62,500, $63,000 in a 5-day trading week, and that was about half my portfolio. So 62 and a half was at like a 10% drawdown. It was like $500,000 in funding, just over, and I lost. So technically, that's my P&L loss. I lost over $500,000 in funding in the space of 5 days. And again, that was because of psychology. There was a lot changing in my life at the time. Market conditions. A certain U.S. president was speaking a lot at the time as well, and so there was just so much going on. I really shouldn't have been at the markets, and but like you learn from it. And then actually a couple months later, I went into a massive drawdown, and in fact, I did this all live on stream with the 5ers. So from September onwards, I managed to claw out of a 7% drawdown. I think I'm about 1.4% away now from break even.
You have a separate monitor now, separate news feed for that U.S. president. Like, okay, just have like Truth Social sitting right there,
everything up.
Yeah, exactly. But yeah, exactly like you. It blown many small accounts really doing similar things where it's psychology. It's always psychology where you're focused on less probabilities and more what is this singular trade doing. And that's we've talked all in here about that. How you're learning through the losses. You learn in the drawdowns, traders. I mean, hardly any traders learn in the wins. It's always the pain that sears into your memory bank where you're like, oh, this I'm going to remember. And why do you remember? Because we remember things when our emotions are heightened. So when the emotions are heightened, that's when it's seared into the memory bank. And in trading's very interesting, right? Because most of our lives, people try to avoid the psychological demons that we face. But in trading, it's a mirror. The psychological demons will stalk you and haunt you. And that's what happens. And that's how you can blow. It's all psychology. You just got to remember that you have to be very strong. That's why Michael said, everyone he's interviewed that's had huge losses, it always has to do with things going on in their lives, things going on in their personal lives that bleed over. And honestly, Michael, that works too with discipline. You have a very disciplined person in life that bleeds over into their trading where they're actually very disciplined with trading. So your life outside of trading has a lot to do with how you're going to perform day out.
That goes two ways as well. Like we've just spoken about the negative side of psychology in trading. Where if you look at the positive side as well, the comfort zone. You get a partner, you've been dating him or her for a while now. You get comfortable. You stop going to the gym as much. Once you start going to the gym, you start losing discipline. You start losing this. Maybe your diet goes out the window. Once your the gym goes out the window, you start negative compounding. You start downward spiraling almost. And then you'll actually find, and this happened to me quite recently, actually, I started realizing that my trading wasn't quite on point. And I was like, what is going on? I'm so happy at the moment. Like, me and my partner are great. My business is doing great. Trading's going great. Why am I just not quite at my peak performance? I looked at myself. My diet went out the window slightly. I got into the comfort zone. My gym started taking a bit of a slow turn. I thought, oh my God, wow, those small, I think it is Stephen Bartlett, Diary of a CEO, he says it, stress the little things. And it's important to remember that even a positive psychology in life can be a negative downward spiral.
For sure. Sam, you want to add?
Yes, I think how you do anything is how you do everything. You have to be disciplined all around in your life to be disciplined in trading. If you're not disciplined all around your life, it will bleed in your and it will bleed in, and you have to be careful of when you're not at your 100%. Maybe you did not have a good night's sleep, so it will affect how you look at the markets and all. Yeah, I think that sums it up. How do you do something? Anything is how you do everything.
I like that.
Good. Alrighty, Justin, you want to share the 25K story?
Yeah, I mean, I was doing my normal stuff, but because I was going through divorce and all that, I was like, well, this money's not maybe really mine anyway. Who cares what happens? So I went a little bit crazy with the sizing, and I think about 25 minutes later, I think the stock was EXAS, I believe. I just kept hitting it, and it was one that never stopped, and it stopped me out though. I had to take a lengthy break from trading after that and get my life back together until the time where I was mentally okay to come back and start hitting it again.
Nice one.
Pretty savage.
So guys, you all been around in the game for a long time. Let's go back to the beginning of it, right? The genesis of your trading. So, what would you do differently than if you would go back? So, anything that you would change or a different approach, maybe focusing on something else. This is for the new guys that listening right now.
Yeah, that's the main one for me is an easy one. Is when I first started, I went full-fledged in, didn't really paper trade at all, didn't test anything. I was just like, I'm going to go in and I'm going to make money. And I went in with all the money that I could afford to go in with. And that was absolutely the wrong thing to do because I lost everything doing that, trying to figure out what I was doing. So if you are new, and if this something like Trade the Pool was more available back then when I started, this would have been a much greater way to get started because, like I said earlier, then you can actually start testing your strategies. You can start testing with real emotions because you have money involved, but you're not going to be risking your entire savings or doing crazy things like taking a loan to trade or anything like that, which you shouldn't do ever. But
wink, wink, wink.
But yeah, so if I were to restart everything, because part of me is like I had to go through what I had to go through to learn and become profitable, but part of it is also I could have avoided a lot of headaches along the way had I not tried to skip right to the end result without paying the dues and going through the actual learning process.
Nice one. Who else?
Yeah, I mean, I want to piggyback off of that too. I ago, it would have saved me a lot of money because again, we have to lose. The best offense is defense. I mean, you got to lose to learn your edge, to discover what not to do, to know what to do. And I would stop looking for holy grail indicators. When I first started, I'm like, there's got to be some holy grail indicator. My chart would look like air traffic control because I'm trying to find like every little trend line you could possibly find and moving average. But ultimately, less is more. I mean, the more you traders are out there listen to us, you're hearing us really echo a lot of the same things. And in trading, what mainly matters is you. You master yourself, you master the market. It's less Bollinger Bands, MACD, RSI, VWAP. It's less all of that and more What am I doing? What's my reaction to the winners? Am I letting my winners run? Am I just stopping well? I'm handling the losers well. So it's more has to do with you. So I'd stop, Michael, if I had to go back, I'd stop spending so much time looking for holy grail indicators and focus more on me and my improvement as a trader, what I can work on.
That's
Yeah,
super interesting because I was the complete opposite. So I came from a background in psychology. I loved psychology. It was something that I wanted
Yeah.
to go off and become a clinical psychologist. So psychology for me, it was one of those things that I don't want to say I mastered because I still don't think I've mastered it, and I don't think I'll ever master it. But it's one of those things I was very aware of at first, and I thought, okay, so I need to be this in psychology. I need to look at, I need to do this. You know, I had a step-by-step process I needed to look at to try and give myself the best step forward going ahead with my career. Now, what I wish I did was trusted my process a lot more. Now, because I was so obsessed with psychology, I got over obsessed, and I thought that I could out psychology the market. And I don't know why I thought that would be a good idea, but it caused me to lose a lot more than I probably should have.
Yeah.
But not so much. It wasn't so much the monetary or the financial loss that bothered me as much. It was the time I'd wasted thinking I could outsmart the market, thinking I could be better than the market. That really annoyed me because I was like, right, okay, I need to do this. Why can't, if I do this, I should be able to become successful in trading. But what I wasn't doing was actually trying to create some god strategy that was going to be the next holy grail of trading, and it just wasn't going to work. What I should have done instead was pick a strategy, make it work, trust it, backtest it,
And
live it,
simplify it. Yeah.
Yeah.
Narrow in focus. Yeah. Narrow in.
100%. And in the end, my biggest thing now is psychology first and a simple strategy second.
Yes.
Simplicity
And the discipline to
in
stick
trading.
with it. Yeah. But the traders out there, their biggest problem is going to have to be the discipline to stick with that. That is the key. That's the holy grail, if you will. But you got to have the discipline to not keep button smashing. Don't button smash. But yeah, early on. Like you just said, I would be there too. I'm like, I'm going to be smarter than everyone else. I'm going to wake up at 4 a.m. and be on the phone with like the earnings calls. And it's just like me and the CEO in there on the earnings call. There's like nobody else listening in. I'm like, I'm buying this, but then no volume comes in. And so you gotta follow volume. You gotta see where the volume is in price action. Price action is key. And you gotta be objective, traders out there. You gotta be objective with what is happening. Not what you want to see happen, but what is happening. That's what I'd go back to, Michael. I'd be like, okay, I don't care how irrational this is, because we all discussed here too how irrational the market can be. You get a ticker with phase 3 news that comes out and it's just selling off, bleeding all day. We see that all the time. Well, I'd see that and be like, oh, this is great news. I should buy this up. No, I mean, the saying goes, buy the rumor, sell the news. So oftentimes you'll see like tickers with great news, they bleed all day. And then you get some irrational junk ticker that's in debt, just going straight up all day. And you're like, what is going on? But you got to be objective with it because the market can be irrational.
Yeah, 100%. I love that.
Yeah. Anything to add on that, Sam?
Yeah, the process is that once you start trusting the process, once you start believing that the process is greater than the results, that is when things starts to shift.
Yes.
That is where that is where me personally started getting my getting profitability from trusting the process, believing in the process. You should believe your strategy enough that you are willing to not take any other trades apart from your strategy.
But I'm gonna, Sam, on this one, I'm gonna challenge you just a little bit, if I may, because I'm looking back at my career when I started, and in the first few months, you don't really have a strategy, right? You don't have a process. You cannot trust something that you don't have yet. How do you handle that? I mean, how can you understand that? Okay, this is my process. This is what I need to do.
First, right now, I think that you can find enough resources online, especially from the fivers themselves. Else, to find to get to know in the initial months, itself, I think you can find out enough resources online and build a rudimentary process also. But more or less, pretty much everybody learns from losing. You lose long enough that you're fed up for long enough that you start that you are like, this is it. I am fed up of losing. I'm fed up of over trading. From now on, I'm gonna trust this process, believe in the steps that I've laid out. It's either that you if it's either that you develop a process soon enough that you don't have to go through that much pain, or you will go through that much pain and develop a process. But at the end, it all comes down to the process.
Got it. Alrighty. I guess we have a time for one more question. So I'm going to ask this. If you could give just one rule for a trader preparation for 2026, what would it be? Will, let's start with you.
One rule for a new trader in
One rule.
2026.
Let's go.
Oh, where do I start, man? There's 100. The best rule I can come up with is trust the process. And I know that sounds like a pretty boring one. You're probably looking for something sexy, but just trust the process. Like I wish I looked at myself and thought, don't worry. Time is only, time is something that you can work with instead of fighting against. I always wanted to be, I thought by 25 I'd be the biggest multimillionaire in the world, but here I am in my own home office. I don't have a job, should we call it. I'm a full-time trader. I'm traveling wherever I want to travel to, work whenever I want to work. It's super, super nice. But I'm not a super multi-millionaire. But what I am is financially free. What I am is what I do have is the ability to do what I want to do, when I want to do it, where I want to do it. Now that, to me, I wish I looked at as more of a goal at the start than it was a monetary value. So therefore, the one thing I got to say to green traders or like newer traders coming through is trust the process. Money isn't absolutely anything. The money will come in time. Just trust yourself and chase the correct goal.
Nice
I
one.
think the one rule that I would suggest people is journal. Once you're done with the trade, journal that trade, only then move on to the next trade. Because while you're journaling a trade, what do is you self-reflect on the trade. You sit down and you think what was going in your mind, why did you take that trade, what was going in your mind while you took the trade, how were you handling the drawdown while of the trade, how were you handling when it was near the TP. Journaling and self-reflecting on the trade avoids a lot of overtrading, avoids a lot of pain. It even if you took a bad trade, even if you even if you overtraded, if you are able to journal those trades, you self-reflect on it, you can only get better at what you measure. So you measure all your trades, and then you know that these are the trades, these at this state of mind I'm not doing well, at this state of mind I'm doing better. So journaling, and after every trade journaling, and only going to the next trade after you have journaled the previous trade. That is the rule I would suggest new traders.
Yeah, I think for me, it would be a lot of traders, especially when they're starting, they focus on risk reward, which is good, but risk reward by itself means nothing. You have to know what your win percentage from your strategy is, and that may change as you go. So for me, you have to apply risk reward, but to your win percentage, because one by itself doesn't do anything for you for your strategy or for your overall profitability. But when you combine them, you know what you need to get out of a certain amount of trades, and then you can adjust your risk parameters by them. But if you do it separately, it's never going to work. So for example, if you are using like a one-to-one risk to reward, well, you have to win over 50% of the time to be profitable. Now, on the same hand, someone could be using a 2-to-1 risk reward, but if you're only winning 25% of the time, you're still going to be red. Whereas I win 90% of the time, but my risk reward is extremely the reverse of what everyone's doing. So you just have to know and apply and learn as you go, and use them together combined to make sure that you are using sizing and numbers that are going to work together in conjunction with your strategy, instead of only focusing on a set risk reward. This is what it's going to be. Well, maybe it's not working out. You can then change it a little bit to whatever your statistics are showing you and your journal is showing you. You can then adjust your risk reward to your win percentage and make it work for you, even if it hasn't been working yet.
Yeah, I love that. And I love what you said too earlier, GDT, on traders finding a trading style that works for them and their personality, because you traders out there, you can't trade somebody else's edge. You're gonna have to do what try find an edge that's congruent with your personality, because that's what's gonna keep you sustainable in the long run. And I'll leave you guys with this too. Just don't think on, I mean, I'm gonna reiterate it, don't think on a trade by trade basis. Okay. Take the trade in 2026. Take the trade. It's going to manage your expectations in a positive way, which ultimately is going to have a great implication on your bottom line performance. To take the trade, set your levels, and move on. If it works, it works. If it doesn't, it doesn't. Don't fight the trade, because ultimately you're fighting your equity curve. You're fighting yourself. But traders out there, I mean, again, like Michael said, I wish Trade the Pool was here when I first started. I'm not saying that just because I'm an analyst and I heard the great deal they're offering here with the 50% off on the 5K. So take advantage of that. And anyone in here, we all stream in here. So if you guys, if I'm going to give my book away to you guys for free too. Anybody in here, I'll give you an ebook for free, averydaytrading@gmail.com, if you want it, to help get you jump started as well with this 5K that you're about to get involved with over at Trade the Pool. So thank you, Michael. This has been awesome. And Justin, Sam, Will, this has been a blast.
That's amazing, Kevin. First of all, thanks so much, guys, for participating and sharing the knowledge. I do want to add on my side, and Will, you actually said it perfectly. Change your mindset, not to look for those Lamborghinis and Ferraris, but actually be financial free, right? Because you don't have to be a multimillionaire trader. You just have to make enough money or good money in order to have, for your expenses, to cover your expenses on those months. And that's, for me, if you do that, if you shift your mind to not looking for a big multi-millions from trading, but actually just as an income, you will automatically have the right goals as well, and that will align with what you do in the process and everything you guys touched on. So good, 2 times up so for that. Thanks so much, guys, for participating in that. I'm sure the guys at home would love to hear more, and we will probably do more of those in the future. But right now, we got to go for that giveaway, another giveaway that we have before the next session. So thanks so much, guys. We'll
Thank
see
you
you
very much
next
for having me.
time.
Thanks, Michael.
Absolute pleasure. Nice one, guys. It's been
Yes,
awesome
thank
to
you.
jump on with you guys as well.
Oh, it's been great. Thank you.
And of course, you can always go to the 5ers and Trade the Pool live trading room. You can see Kevin there. You can see Will. Justin had a great interview as well. And of course, Sam, more than welcome to join. So let's see if we are ready on our side with the next giveaway. Basically, this giveaway is, again, sponsored by Trade the Pool. You're going to get, we have 2 giveaways. So one is 10 accounts of 50K evaluation, flex 50K. That's a big chunk to trade with $50,000 of buying power. And we also have 8 accounts for the 25K. We're going to start with this. Let me run it, see that we're good. Let me know if we are ready, and if we are, we can show it to the guys. Let's see. Are we ready in the back, Carlo? Let's see if we're ready for it. And I'll share my screen. Alrighty, here we go. All done. I'm gonna share my screen. Here we go. My screen is shared. And let's see the winners for this one. So we're talking about, it's actually 10 accounts, 50K. Here we go, guys. These are the new accounts. It will take 48 hours till you get it, but you are basically getting, if you've seen your email right here, it means that you won a 50K account trading with Trade the Pool. $50,000 is great amount of money to trade with. You can buy Tesla, Amazon, Google. You can play with the small cap. So definitely use that wisely. It's 50K. Again, as the guys before talked about the risk management side of it. Make sure you have a set of rules and the discipline and the trading plan in order to actually execute it on a big account. So here are the winners, 10 accounts of 50K. And let's go to the 8 accounts, 25K flex. The 25K flex, for those of you not familiar with, it basically means that you're trading 25K with no time limit to pass the evaluation. So you can easily do that trading, again, on a 25K, passing the PDT rule. You can day trade stocks, 12,000 symbols, ETFs. You can short any penny stocks, literally everything that you want to do. Let's run this one. So we got 8 accounts, 25. We'll wait for the guys in the back to run it. Here we go. 3, 4, 5, 6, 7, and 8. You are the winners in this giveaway, Trade Pool giveaway. 25K, 8 accounts. You will get it within 48 hours. Don't worry about it. You don't have to reach support. You will get it. We have everything in the back set. Alrighty. That was amazing. Again, thanks so much for our funded traders. Really great session. I love those, just to share the knowledge and the experience, understanding. We all going through the same path in a maybe different ways, but it's the same concept, the same fundamentals when it comes to trading. And it's always amazing to hear about their other stories and to see how they progress from being a losing trader to a winner trader or a profitable trader. Alrighty, going continue to the next session, which is the big debate we've been waiting for. Do you need to trade multiple assets or? Okay, got it. Thanks. So before jumping into the big debate, one thing is, are you a trader who focus on multiple assets and actually trading different assets every single day? Or you're actually more of a one asset kind of guy? Let's say if it's Forex, then you're focusing only on euro dollar and trading it every single day. Or maybe if you are a stock trader, you only trade NVIDIA or only trade Tesla. Or maybe the other guy, which will go to, in stocks, you will go to scanners for gainers and losers and find those top gainers, top losers, and actually focus on that for that day. But tomorrow, there will be a different asset to trade on. So we're going to have a big debate together with Josh and Stefan, each one of them with a different background in trading. One trading mostly Forex, the other one trades equities. And once there will be ready, we will jump to that. Just before the next session, let's do a quick commercial break. We'll take literally 3 minutes and go right back to this session, the big debate. And later on, you have Michael Noss, our own on Trader Pool, and LJ, the 5ers market analyst, talking about the brokers and the prop firm, the collaboration, the correlation between them, or maybe separate ways. So they will cover that as well. So 3-minute break, commercial break, grab yourself something to eat, and we'll be right back on it. Let's do the And we are back. Thanks so much for sticking out, guys. We are going to have the big debate that we just talked about, which is together with me right here is Josh, our own trader pool, and Stefan. Thanks for coming, guys. Here we go.
Hello, Michael. Hello, Josh.
What's up, Kristen? How we doing, cats? How we doing? Doing good. Sorry for the technical difficulties, but I'm glad to be here. Glad to be joined.
No worries at all. It's always happened like this. So, guys, I'm going to leave you to it. Talk about the big debate, the multi-asset versus one asset. But just before that, for those of you guys that maybe missed it, on the 5ers right now, we offer 2.5K account, high stake account for only $12. And on Trader Pool, we have a 50% off on the 5K account. So make sure you grab that. You have a few days for that. Make sure you take that promotion definitely and start trading better for 2026. I'm going to leave you to it, guys. Enjoy, and we'll see you after that.
All right, so we got the keys to the Ferrari, the Bugatti over here, taking it on off. So good to see you again. We first just got together. What was on Wednesday? Started talking a little bit. We, now knowing what we both trade, you Forex, me more so equities, going small and large cap tickers. There's a difference there between, which the big thing is trading one asset versus multiple, and I think too, when I first started was a key was trading everyone. You want to trade everything. You want to go long, you want to short, you chase this ticker, chase that ticker. You just see something moving. You feel like you have to, you feel like you're missing something, and it's having that discipline. But it's true where I think early on, maybe it's a key to have that one asset, where you just trade one ticker and get used to it over and over and over. So you learn how a stock can move and what levels are and learn how to chart. So I think there's a double-edged sword to this in the end that I'll definitely approach, which I'll of course talk about where I am at now in trading multiple assets, but there's always key value in trading one asset. What do you think about it, Bub?
Yeah, well, first of all, I think that all starts from a trading plan because first of all, you got to sketch something that you will do forever. Because trading is not about short term; it's about long term, and you'll need to see what kind of things it will help you become profitable in the market. I don't know if I can start by explaining why I trade one asset and how the decision on how I trade one asset helped me on the long run on my trading path. Because before that, I trade like the full Forex market from major Forex pairs to, exotics to everything I see in front of the charts. Before I was trading the single assets, I was not very, very proud of myself because my job was not so good after all. I asked myself a simple question. And after blowing accounts and accounts and accounts, and after all my money disappeared, I asked myself, why do traders fail? This is the question I asked myself. And after all, it's 2026, nearly. I mean, almost. Yeah?
Right.
These days, most traders have strategies in their advantage. Of course, they have indicators, a lot of indicators, thousands of indicators. But most important, they have education at a click distance. Because, you can just go to ChatGPT and ask how you can trade, and he will give you a trading plan and all way to the complete strategy. And I believe that he can also analyze your charts by just posting an image inside the ChatGPT. So that strong is 2026 in digital manner and how to get all the information you need in order to start trading. But therefore, traders still fail, and they fail big times. So it's not because of the strategy or the plan itself. It's more because we as a traders cannot execute consistently, or we cannot control emotions. We cannot repeat good days after days after days. We are human after all. Yeah. So we are making big mistakes.
Yeah, Michael Noss talks about that all the time on the TTP stream we have Monday through Thursdays, and the days I get to join him, he's just talking about that so often. And so he, of course, has gone to that, letting AI take over for him and having the bots trade for him. Because, yeah, traders, especially early on, you've been through that in the first year or two, and we still, have those issues struggling years down the line of those where the emotions, as you talked about, come over. Because we're not born, especially and or trained and raised to do this. And most, as I always talk about, the mental, the psychological side of things, just getting into that real quickly. All of us go to school, right? We all go Monday through Friday. We went to school and learned something. We got grades, or we went to, and then especially as we get older, we have to get a job, and we're always expecting something. We have to be doing something. And so as traders, we get that way, and we have that mental side early on that, and unfortunately, like you said, we're not programmed. Unfortunately, then we are not doing these things as we should be doing a lot early on. And that's just where you get that point where you move into 2026. It's a different time frame now than when we first started. When we first started years ago, it was a lot different. So things should be a lot easier for traders, and yet you still see traders fail. And to me, that is that mental side where it's so tough to get over. Where I always call it that J.G. Wentworth commercial. It's my money, I need it now. Where traders come into stock trading thinking they're just going to buy something and they're going to sell it. And then you realize, like you even said, there are thousands of indicators out there. There are thousands of ways to make money in the stock market. And you just talked about it, just going back to now, full circle to what you talked about. Having a strategy, having something that you can trade day in, day out, that's the key to stock trading. No matter if you're trading multiple assets or one, there's something, some edge, some sword, some knife, some blade that you sharpen, and you have your edge that you can go back and sharpen over and over and over. And then eventually having multiple tools in the shed, or the toolbox, so to speak, because sometimes those edges may not be as sharp as they used to, and they're not working like they did in previous months or previous years. And so having those multiple tools become huge for you. So as we want to get into that, so Forex side of things, trading one asset, what would you get off into trading, whether you're trading Forex, you're trading equities, you have one asset.
Yeah, bottom line, I needed to sort it all out because when you trade only one asset, you actually reduce the noise in the market. When you reduce the noise, you actually reduce the variables and you actually increase the consistency. Bottom line. In the market, nothing is the same all the time. The volatility is different. I mean, from market to market, you see different volatilities. The news that appears can affect the market differently. So news reactions are different. Session behavior is also different from case to case, from market to market, and also the liquidity. Yada, yada, everything is different. So I was observing that when I was trading multiple assets, and my brain had to constantly adapt to all these changes. I was thinking that I was trading actually focus for opportunities, and that cost me discipline at the end. It's, I don't know, like the saying, when you chase multiple rabbits at the same time. There is a big chance when you chase multiple rabbits that you go home hungry with no steak to prepare with for your family.
Yeah.
But if you chase only one rabbit every day, you become better at it, and at the end of the day, you can provide for your family.
Right. No. Yeah. Well.
First of all, sorry for the vegetarian approach.
No, what's funny because I have dogs. We talked about this. I have dogs, right? So here in the United States, we have squirrels, right, or even rabbits, but we call it squirrel. And so it's like a dog in an animated movie, and it's like us at first, and you're just trying to chase all the rabbits and the squirrels, and you go home without a squirrel or a rabbit, So as soon as you're saying that, I totally get the analogy, 100%, and that's what you're all over it.
Yeah, well, this analogy is also standing for the trading because I had a switch. My brain stopped adapting to all the time and starting to recognize the patterns, actually, if I focus on only one market. Before I knew it, I was actually mastering those patterns, not chasing them, not going through all the markets. I was just letting the patterns to come to me from one single market, and that's what helped me in the market. Bottom line.
100%. I agree with that, depending on, your circumstances and where you're at. But all the time I found myself doing that. Like you said, I called it the squirrel, doing the squirrel, the rabbit, same thing. I mean, we actually have a little rabbit that lives in our, a little shed, little outdoor storage unit that we have. And every time that rabbit goes out, what do you think the dogs do? They just go, and they never get the rabbit. But it's that for sure. And you're all over the place. And I had to learn to tone it down. And I made a checklist every morning. I think that's key for a lot of traders is not only journaling, and we'll probably get into that as well, as going over what you're doing day in out and keeping track of that like it's a system. You have to think of this, I always give another goofy analogy of, if you're trying to build a ship to go to compete with SpaceX or NASA, and you want to get to outer space and you're building a rocket, you saw how many times those rockets went up and couldn't get up and they'd explode. And then they try to land and they're still messing up. And then they're finally getting them and they're finally getting people in them. But that took years and years and years of work. Well, imagine you doing that in the stock trading world, and you have to have these journals in the system. And every day you're in the lab and you're going over your trades, you're going over charts, and you're trying to figure out what's working best, what your eye sees quickly. And I did that early on and found it was just bounce plays looking for one ticker. So I was like, here's my setup. I love to go long. I can only really go long. I don't know what shorting is to begin with. And I found that I was good with bounce plays. And so I'd find that one ticker that I liked the most and would just sit on it and wait for that bounce play and that strategy to form to me. Because the days I figured early, and this is for especially your first early on traders, say you're 6 months in, you're maybe still a year and a half in or 2 years in and you're struggling, and this is hitting to you. This is a reason why we talk about this. This is what we all go at first, that I would want to look and do all this stuff's moving, and it's breaking out, I want to chase it, or this is happening, I want to go after this ticker. I was never that successful versus when I would just tone in and, like you said, eliminate all the noise out there and just stick on one individual chart and trade that chart. And when my trades came to me, it felt so much better. I was like, oh, wow, I waited for a play to come to me. I didn't have to run out there in the playground when all the kids were at recess. I was like, I could go play on the seesaw when there were no kids. I didn't have to go get on the swing set when everyone was out there. I could wait to have my turn. And that really spoke dividends to me, and so early on in your journey, I think that's key, versus to where I get down the line and how trading multiple assets. And of course, being part of Trade the Pool now is huge. Every day you can vigorously look for, 3 or 4 or 5 different tickers and just wait for those setups. Because now I've trained my brand to go, here are the setups I love to trade. This is the setup that works for me. And I can be calm and smooth and steady and relaxed in this trade. And I don't have to worry about, the emotions kicking in. Well, then I just wait for a few 3, 4 tickers. Whether I'm looking at Tesla, I'm looking at SPY, and then some of those days I could be looking also at, at a small cap ticker like AZI. I could be looking at FJET was running or APLD is running. I'll go from small cap to mid cap to large cap, mega cap. You can look at a few different array of tickers. But again, I'm not just throwing a bunch of things up against the wall and seeing what sticks. I know what sticks. So I'm just waiting for whatever that chart is that I like that day to form that chart and attack that chart. And that's huge later on because it gives you multiple ways to trade. But that is the other key that you talked about. Then you do have to worry about the market. What are the conditions for the day? Are we, as I call, running hand in hand, and maybe someone has tweeted something or X or whatever it is now, and everything's cracking together? Well, then you will understand to play whatever ticker you were just looking at with everything else because it's running hand in hand. So that's the key that you have to worry about when you start playing different, indices of the world. And of course, whether someone has said something. But that's why I love my small cap space. When I found that in small cap tickers myself, I just can rely on, which we'll get into, I can rely on my scanners. I can rely on a couple of indicators, and I just go trade that chart because we know, generally speaking, in small caps, a stock that we know that costs $1, $2, $3, $4, $5, $7, $10 has nothing to do with what the S&P 500 is doing. It's on its own. It kind of runs its own galaxy, so to speak, as I always say. So what would I'd get into when it comes to your trading, especially if you're trading that one asset, what would be some key indicators that you like to use?
Well, first of all, you mentioned about the brain, the human brain.
Right. Yeah.
And it's funny thing that I read an article not a long time ago that the human brain actually cannot focus on multiple tasks for a long period of time.
Yeah.
Because you're getting tired, you're getting mental fatigue, and your execution is actually the one that is failing. Again, from my own experience, fatigue appears. Trading is the first thing that suffers. Right. I think that we all had that day when, I don't know, you get sick or you get tired. Your trading is devastating. For me,
one of my dogs, like one of my dogs passed, or you have a family member pass, or you're like you're saying, you're feeling sick. I preach and teach this all the time. I love when I call it relation confirmation. When another trader I've never met has been doing it for a while and successful like you, I get goosebumps because you're saying the same stuff that I teach and preach. And I say this all the time. If your brain, your mindset's not there for whatever reason, your sleep's not there, my man Christian over here is speaking facts.
Yeah, you're talking what I'm looking in the market, right? So basically, I'm trading just the king of the Forex, the euro dollar, the euro USD. And every day I'm showing up. I'm knowing my market because trading for so long, the EURUSD. I know how it reacts on different news. I know what key patterns it has, and I'm just executing by the point of interest that I have from the liquidity that I see in the market and from the reaction that every day it's doing the same and the same. The pattern is very important when you're trading the one asset because you are mastering that pattern, actually.
Yeah, just the stuff I talk about all the time. It's the same thing. I love it. It's just like 10,000. I don't how many hours you have to have. They say 10,000 hours, and you master something. That's key. I mean, I just realized that early on. Like I said, it was one of those things that luckily I hit. I don't think it was really taught. Like you could probably think the same thing. Like you go back to a lot of mentors when you first started. How many taught the psychological, mental side of things, and then understanding that if you would just approach the stock market the same way every day. Like I've talked about this. I've sold lady shoes before. I've been a waiter before. Any job I've had before, I did the same thing every day. Like when I was a waiter at Fogo to show, I wasn't also a bartender at some days, or I did in some days busboy. And I've had those restaurants where you kind of have to go around. But, when I sold lady shoes too at a department store, I wasn't also selling the furniture or merchandise, or I was just always doing the same thing every day, mastering that, right? That's why you kind of do any 9 to 5 job you have, or when you went to school, you're trying to get better at it because you're learning it every day. And that's what you're supposed to do in the stock market, where at first I was all over the place and using all these different indicators, using all the too many different time frames and not just sticking on the one that a lot of, and going back to that, what are traders using? I'm sure if I asked you what moving averages you're using, you're probably using the 9, the 13, the 21, the 50, the 200, something like that. You're not using the 87-day moving average. You're not using the 454-day moving average. You're using what most traders are using. And so I started to adapt to that. And as far as then too, it worked with me, and then mastering those skills of putting the time in day out. So if I would put the time into the discipline of understanding, like if every day, whatever, and then going with small caps, because you are looking at multiple tickers most days, but to hone in on the 1 or the 2 or the 3 that look good. And then to use those indicators that overall started to work, and I see worked at a higher percentage of the time, something that was 50+%, and then the stuff that wasn't, just stop doing that. Again, being your own, trying to be like Michael Noss always talk about, a systematic trader. It's just hard to do mentally. And so I said, if I love Michael Jordan. I grew up, admiring Michael Jordan and his mental state of mind. And of course, follow it up to like the Tiger Woods. And of course, they're great athletes. Sure. Obviously. But that's, to me, what always sets them apart from being the GOATs, and why they are the GOATs, or at least up there with that, because that mental mindset and having to push through the losses and the game losing shots, or you're not always going to make a shot, but it's always the next one, and having to understand that you're just not always going to win. But it's that determination of, I've got to master a skill set, but if I do it over and over and over, that's where I become good. Versus, again, going back to basketball, it's not a game of horse. It's no offense, but the NBA has kind of turned to that. But you don't see them throwing up all these goofy, crazy shots. They usually, like Stephon Curry, I love Steph, he gets to a spot on the court, which he pretty much can shoot anywhere. But a lot of those basketball players are coming off screens and rolls to get to a spot on the court that they have the highest edge to make that shot. Do that in stock trading. Put yourself on the perfect spot on the court to make that shot that you're comfortable with in making, and have that high success rate. You feel comfortable there. Your edge is there. So your emotions don't really kick in. If you do, maybe essentially the trade isn't going your way, and you're not always going to win. Even if, like, I have these setups that I love, that I attack and have a high win percentage, that there's no such thing as a 100% win rate. You're going to miss a shot. You're going to lose. But in the edge that I trade, when I trade, very rarely do I put myself in harm's way, so to speak. So my entry area is very rarely going to, if I stop out, it's not going to be big losses, right? I'm not trading risky setups as far as where that stop loss comes in huge, and if I find those main indicators that I use, but I just use the 90 EMA, I use that. I use the VWAP a lot. I know a lot of small cap traders that trade from $5 to $50 in the mid caps use the VWAP a lot. Some use the AWAP as well, AVWAP. That's fine with me. But we talked about the moving averages, the 9, the 13, the 21, the 50, the 200. Using which one of those you like the most. Usually EMAs we like in the small cap sector because they're exponentially, they can move real quickly. But it's finding that edge, and every day limiting the noise. You said that, Christian, big time. I saw that early on. You're all these different chat rooms, or all these different indicators are going off, or all these different, high of day momentum or low of day momentum scanner, or whatever is going off. You have too much noise going on, so you have to, in those scanners that you're finding, find what works the best. And I've from a lot of traders, I see that. Like I talked to you, I've talked to people at the money show here across the globe now that have been doing it far longer than me. And I keep hearing the same thing over and over and over. And that's essentially just making this journey for yourself more simple. Keep it simple, stupid, and find the toolbox in your tool. Find that tool in the toolbox that you can go back to over and over and over and sharpen it. And once you get that down, you can get to the second and third tool, and then you can learn to trade more than one asset.
Yeah, for sure. And I also saying that trading should be bored. You need to get bored when you're trading, because when you are enthusiastic and all the fireworks are happening in the charts, you're most commonly you're losing into the charts, because it's emotional. You get emotional trading. One asset also helped me with this emotional control, because after a loss, I didn't jump to another asset to make the money back, let's say like that. I didn't chase trades. I simply just look at my setup on my asset, and because of this, I just I don't know, exclude the fear of missing out, the FOMO that most of the traders have, and it's the biggest pinpoint of this debate, in my opinion. My patience increased. My decisions were calmer. And also, if we talk about journaling, because this is another debate, but I'm going through it. Journaling is important, in my opinion, and it's more meaningful if we are doing the one asset, because the wins and the losses come from the same market behavior. They're not from different assets with different rules, with different spreads. The data that you have when you are journaling, it's actually more concrete. And this gives you more real feedback, in my opinion, that works for your environment, that stays the same all and on.
Yeah, I love the quote I saw forever ago. The two most powerful warriors, patience and time. Like that spoke volumes to me, and like we talk about that in the stock market a lot, at least where I come from. Patience spelt with a Y, P-A-Y, right? Patience, and understanding that, and then that what builds in with time, because I've another analogy I always give, and I've said this forever. Me and my wife got married like after being together for 10 years, but you see the couples that rush in, they get married and then they have kids all within the first year, and you see a lot of time, it just doesn't work out because they rush so quickly. Like, if you want to be with each other for eternity, you have forever. Enjoy that time, enjoy the experience. And same in the stock market. I always think about that. I'm like, don't rush. It's not I have to make this X amount of money in X amount of time. You can't have that sort of mindset moving into this. It has to be a mindset of, I want to, again, always back to the analogy, basketball. Like I think about, man, I don't have to be LeBron James, Steph Curry, Michael Jordan, Kobe Bryant. If I could just be on the bench and just get on the team, and then I know I'm doing things right. And then maybe down the line, maybe I get the 6 man a year award. Maybe I make a starting lineup here and there. And then maybe for 5-10 years, I become a starting player, and then I'm a key role player. That, and the time it took a lot of those professional athletes or any of those professions that take 5-10 years to get really good, or 20 years. And, you think of those guys that have been doing, into the stock trading realm for 10-15 years, we go, oh, wow, those guys are vets. They've been doing this for a while. They know what they're doing. Well, if you want to get to that point and you want to be in this for 15-20 years, it's not about, and you ask any of them, it's not, well, I made 4.7 mil in my first year. I made 18.3. No. It's the complete opposite of that. And it's the time you put in. The money comes later. I've seen so many successful traders, and even a great quote from Simon Pegg, the actor, the other day, him asking him in his journey, and just those serious questions for those early people trying to get going in filmmaking. It's the same thing. It's the passion has to be there. If you can get someone, and essentially this becomes a hobby because you love it so much and you just have a passion for it, that trading stocks, like you were saying, it's boring. It's like almost like a hobby is. You just do it because, like a lot of hobbies, like people that put puzzles together or Legos together. It's not, they get to the point where it's fun at times, but it just kind of gets, where you're just working through the Legos and putting it together. It's not like it has to be this, I have to be in a trade and FOMO of missing out of this 100% mover or this 10-point mover or 3 pit, whatever point mover. You just have to sit back and wait for your setups to come to you. And the money comes later. If you can, and that's the thing, you get the hobby going, it becomes something you do year in, year out. And that's where that passion grew for me. And I think a lot of traders, I'm pretty sure, especially the ones I work with, they do a lot of one-on-one work. Everyone has that passion at first. They have that drive that I want to marry you now and be with you forever. And I'm like, well, if you want that, and I know you want a bank, we all do. And that's the thing with social media driven. And this guy's got a Ferrari or Lambo or whatever. And so they see that and they want it now. I'm like, well, if you want that, Just put the hard work in, and I promise you're going to get pieces of it along the way.
Yeah, for sure. Yeah, we can talk about whether the specialization or diversification is more accountable when we are trading one asset or different multiple assets. Because for me, I see trading like not opposite of investing. These are two things that are different, and diversification is very useful when you are talking about investing. It protects your capital over the long run, but trading is different because trading rewards precision and execution, not spreading attention to everywhere. This is my take on. So when you are trading one asset, you actually are performing. You actually reduce noise, like I said. You focus on what really matter, and you can only you always can expand later because with gaining experience, you actually can go further on and take one more asset and one more asset because you have experience with one asset. It's like another analogy, like a pilot, because he learns to fly on a single plane, and he does the flying on a single plane, I don't know, 100 flies, and after that he goes to a different plane to invest his time by flying that plane. So trading is the same. Master one, and after that you can include one more and one more asset in your trading plan.
100%. Yeah. Kind of going to, like, we go back to my favorite. I love bounce plays, and truly just essentially finding old demand areas that become supplies, or old supply demand. You're finding those old supply demand areas and just finding bounce plays off of them. Essentially, a lot of the time, old demand or old supply, I should say, old supply, old resistance becomes, the demand zone, and flip flopping back and forth through those areas. And I did that with small caps, where I'd see a play come up and it fails. It would break out through that area. I was too scared to chase the breakout or take the breakout because it seemed like every time I would trade it, it would fail on me. So I just never liked that, but I'd wait for it to break out and come back down, and we'd see a great bounce play off of the old resistance, old supply zone, and it becomes new demand, new support. And when I first started trading, of course, small caps. It was always, every day different small cap equity ticker, maybe 3, 4, 5 in a day. And then finally in 2022, I started trading large caps, and just took, like you talked about, that same edge that I'd mastered in small caps, and took that, from flying that single, whatever engine, plane or whatever, that smaller plane. And now, I'm taking it to the bigger planes, and then eventually flying the 737, 747s and these jumbo jets. But it all started from flying this little baby, this little nugget, and learning how to master that and flying that over and over and over, and taking that craft to the next level and the next step up. And like you said, when you first start flying, which I'd love to, I even told my wife that in the past week, I passed this place about once every couple of weeks right near me where you can take flying lessons and learn how to fly. It's got a big sign out there, come learn how to fly. It's like yelling at me, and I'm like, I've always wanted to. I wanted to as a kid, want to be a fighter pilot. But that's the thing. You don't start flying in no F-18 or F-22 Raptor, or F-16, F-15. You don't start flying in fighter jets. You don't start with the 747s in the boat. You start with those small little and then in that, when you're not starting with that and doing helicopters and then flying different, essentially things that can fly. You're not doing different. You're doing the same aircraft every day. Like if I go learn to fly, I'm going to be in that same plane every single time. So I'll learn how to master that. And so that's huge early on. If you don't get that down, and I've said this forever, go for a lot of traders that want to go from trading $1, $2, $3 tickers to $20, $30, $40 tickers, or I've had a lot of traders go from that to trading large caps, $500 to $300, $200 tickers, the Mag 7, or they want to go over to futures, or they want to go to Forex. I say, just break a chart down. You see that chart right there? Go break that down every single day and learn how to trade that right there. You do that for a few months on in, and then maybe a year on in. You'll be able to take that over to you'll be able to take it to any other index you want to and trade that. But if you can't break this chart down every single day for the next month, and then 3 months and 8 months on in, you won't be able to go do it again to all those other tickers if you want to trade 4, 5, 6 different assets a day.
Yeah. For a deeper understanding of this meta level perspective, I learned on the hard way that the market does not pay me for being busy. Because bottom line, it rewards me when I'm doing the right choices in the market. It does not pay me for trading many assets. It does not pay me for my activity. The market pays for the results, after all. It pays for consistency. It pays for correct decisions. So my takeaway is that trading one assets made everything simpler for me. Setups are more cleaner, journaling easier. Like I said, trading less is more. This is the takeaway from my side. But please tell me more about trading multiple assets.
Yeah, it's the same thing. I mean, you're all over it, making the trading back to that making trading boring. That's when you start to make it. You good?
I'm good.
I thought I heard something in the background there. Okay, I thought I heard someone else joined there for a second. I was like, I heard something else in the back. Was that you, LJ? I see. I thought I heard something. But no, making it's simpler. That's the process for a lot of traders. I think a lot of people too at first just want to do a little too much and find too many edges in the stock market, where down the line, again, just goes back to, in my opinion, you have social media. When you have social media, and a lot of you guys on the 5ers, you have us at Trade the Pool, and then all these other streamers or traders out there, and they see what the potential is, whether it's they're actually making the money, they're trading themselves, whether it's coming in from the fellowship or whatnot. They just see the money that comes from behind it. That doesn't come right away. It's the time you have to put in. And a lot of people don't want to put the time in. You even said that earlier about our brain. There's studies out that show our attention span as humans is continuing to go down. And we can't, even now, the fact that we are already that way as humans is that we can't do multiple things for a long period of time. And now, in my opinion, the world we live in and all that we have going on around us, it's making our attention span and time go even quicker down. And so you're wanting things to happen faster. You get into a trade, you want it to happen right away. You see a setup, it needs to happen right now, and you can't wait for it to come. It's breaking out, it's moving up, you're missing something. It's cracking down, you have to short, you feel like you're missing something. That's what I feel is that FOMO just continuing over and over and over. I think if you can master that, that's the huge thing for me, that mental side. That to me, the technicals and mechanicals all come in later down the line. To me, at first, it's get the charting down. Understand, can you break down a chart every single day like you talked about? And then if you can go to that same chart every single day and find one edge, use that one edge day in, day out. If you can do that, then it's, to me, the whole mental side. Can you get rid of the FOMO if you feel like you're missing every little thing that moves, and find the edge that works and just wait for that? Then that's where the multiple assets come in years down the line, like myself. Not only trading long like myself, I'm going short. So I've traded both directions with no issue. I have no bias. I wish a lot of referees in sports were like myself and just would trade, truly call it as it is. The chart shows itself, and you trade that chart, whether it's bullish, it's bearish, you trade it, find the trend within the trade, as I always talk about, and then trade that trend. Don't jump in front of the trend. Your friend that's been said throughout the years. And then, of course, as we know, the two most powerful words, patience and time. If you have the patience to stand the time and understand it's going to take months on end of repeating the same process day in, day out, the muscle memory, the brain memory starts to kick in if you repeat the same process instead of doing multiple things. And it starts from, to me, like we've talked about, one asset. But to me, the value when it comes to equities here, of course, like we talked about, Trade the Pool, being able to trade multiple. If you could trade multiple equities down the line, that's the goal for a lot of traders. It doesn't start that way. I've worked with hundreds, and I mean hundreds of traders, and talked to a lot of successful traders. They weren't doing that at first. They weren't trading Tesla the same day they're trading SPY, they're trading APLD, then they're trading BE, then they're trading Walmart, they're trading all these different tickers. They're trading they're finding that one edge in one asset. And then they're making that one edge in one asset to two asset, two edges, right? Three asset, three edges. And then now you're trading multiple asset, multiple edges. But it starts with the one. Getting to multiple is the key. And I'm there all day, every day. Like today, calling out multiple tickers. I look at about 20 tickers every single morning now. 20 different assets that I can go trade, right? I don't have to sit on one said ticker. I'm waiting on these certain assets, these certain tickers that I'm looking at every single day for them to form that chart. And when that chart forms, I can go attack.
Yeah, I totally agree.
How about I was gonna say time of day is key too. I mean, if you want to talk about, here comes Katz. Katz is coming in at the end here. What's Katz gonna start? Is Katz got questions for us?
Most probably.
Unmute Katz. Someone unmute Katz. Unmute him.
Yeah, no worries. All righty, great session, guys. So who do you think won? The multi-asset or the one asset? Let us know in the comment, in the chat, the guys that just listened to this presentation. I mean, it's always interesting, right, Josh, Stefan? the idea is that trading is super individual, and at the end of the day, you will need to find your path and your way in order to really execute the best possible way or to perform in the best possible way. You can be a three-point shooter like Steph Curry, or you can be LeBron James, right? Going into the field, going into the paint. So it's just a matter of your personality together with your maturity, right? When it comes to trading and generally in life, are you 20 years old or 50 years old? How long you've been in the game? A lot of those elements or points will get you to that to that special place that you know if multiple assets or one asset will be the right fit for you. Yeah.
What about you, Mr. Katz? What are you? Are you a single guy or a multiple guy?
You know, I did it all, right? I had many years that I traded top gainers and losers every single day, a different asset. And then roughly in the last 3 or 4 years, I've been doing mostly NASDAQ on futures and Qs and NVIDIA, Tesla. But from time to time, I like to trade those gainers up and down, like VOR that we had last week, I believe. So yeah, but you will find your way. You need to try a lot of try and error in order to really understand that this is the right set for you.
You know, at the end of the day, both trading one asset or multiple assets can be successful. The key is not on the number of assets that you are trading, just to execute on your plan. And then, and only then, the choice of the market or many becomes just a tool, not a limitation.
Sure, 100%.
Yeah.
Alrighty, guys. So first of all, thanks so much, Josh and Stefan, for coming in. It was a pleasure. For those of you listening right now, few things that it's super important for me to update you on. One, you have the promotion on the The5ers. You can grab a 2.5K account for $12. On Trade Pool, you have 50% on the 5K account. Go ahead and grab that. And in the description below this video, you have a link to the starter kit. Basically, we prepared for you 3 elements that are going to shift your trading for 2026 and probably even more. You have a trading plan set for you, funded traders book on the Fiverr side, and also funded traders book on Trade Pool. 3 of those kits will be available for you in the link below. So go to the description of the video, click on it. You can download it right now, and you're good to go with that. We basically took our funded traders, we analyzed all their trading stats, we interviewed them, and put that in a book for you guys. So go ahead and grab that. And of course, the promotional. Before I'm jumping into Michael and LJ to talk about prop versus or together with a broker account, make sure to stick till the end because Saul and myself are going to do another giveaway for the The5ers and Trade Pool, and of course answer all of your questions. So again, Stefan and Josh, thanks for coming in. Lovely to be with you guys, and hopefully we will do more of those in the future. Let's bring out our next guest, Broker.
How you doing?
How's it going?
Good to see you guys.
Here,
There you
here
are.
we go.
There
So
we
we got LJ from the The5ers and our own Michael Nas from Trade Pool. Alrighty, this is a unique one because we never done it before. Talking about a mix or an hybrid between a broker and a prop account. And before I give you the mic, I do want to share that on 5% group, we just launched a broker, which called TSG. Trade Set Go. You can check it out. It's on CFDs for European traders at the moment. Definitely, like always, like the The5ers do, and also Trade Pool, we are very into giving you the best of the best. So the terms and the trading conditions are incredible compared to any other broker. So definitely go and check it out. It's called TSG Broker or Trade Set Go. For currently available for guys in Europe. Eventually, we will expand that too. Alrighty, this is all yours, Michael and LJ. Talk this through, and yeah, we'll see you after this one. Good luck.
Thanks for
Beautiful.
having us.
Yeah,
It's,
for sure.
super excited. So yeah, this is really cool, and it's something that I don't think you probably hear too much in the prop space, right? A lot of prop firms are like, just us. Don't look anywhere else. Don't go anywhere else. Don't talk about anything else. So I'm super glad that we're able to come on and talk about how there are benefits to both sides and drawbacks to both sides and the way to balance both and the way to potentially use both and everything like that. I think it's super exciting. But I think just right off the bat, we should just spend a little bit of time introducing us, because there's probably some people who know me from Trade the Pool stream and know LJ from the Fiverr side of things, and we're kind of mixing the soup right now. So we should just take a little bit of second. So first of all, hey, how's it going? We chatted for like 2 seconds before the call, but I haven't met you before. So why don't you introduce yourself to me and everyone else out there?
Yeah, sure. So my name is LJ. Guys, that's sort of the moniker I've now adopted across the board. But otherwise, you guys might know me as Lockie or Lock. But yeah, I started my trading journey about 13 years ago now. Whilst I was at went to university studying physics, that kind of stuff. Jumped into trading, just trying to put money to better use. I wasn't sure what I wanted to do at university, that kind of stuff. And fortunately, things kicked off. I deferred university, kept trading, and sort of went on from there. So I definitely started from the broker side early on, obviously, with money I'd saved up, that kind of thing, long before the prop game sort of existed. So that's definitely where I started my beginnings and had to find things out. Obviously, these kind of tools exist for you guys these days. Very helpful. Same with trading courses, YouTube, everything out there. There's a lot more in terms of resources than when I began. It was much more raw back then. So, but that's the 5 second, 10 second breakdown. There you go.
And that's funny because you said you started from the brokerage space and I started from the prop space. So I think there'll be some interesting conversations we had there. Yeah, I started probably around the same time, maybe a little bit before, a little bit more gray in the beard. But it was the same thing, but not the prop space as we know it today, where kind of anyone can join. You take the challenge and away you go. But for me, it was at university. I was studying finance, and there was a job fair, and there was a prop firm there, and they would, there was no cost to it, but they wanted to be very selective who they brought in. So I, went there in my suit and tie and talked about all the finance stuff I was learning. And they're like, "Yeah, that's fine. What video games do you play?" And they were more important. They were more interested in that kind of the fast analytical action, right? This was before, like you mentioned before, like YouTube was big and a lot of these things where there wasn't really that much in the world of HFTs and systematic trading and all of this. So it was pretty much, who was the fastest at the keyboard to get, you could actually listen to a number live and hit the button and try to be one of the fastest guys to get a fill. So that's funny that's where I started, again, from that particular space, from the prop firm space. And then from there, I ended up building up the broker space. And now I kind of, I do the two. So it's good. It seems like we're both kind of arrived at the same place, but just took a little bit different routes to get there anyway.
I'll say a quick little thing. What were those games you used to play back in the day?
Well, the one that really got them was StarCraft. I don't know if you've ever
StarCraft. Yeah, okay. Because I was going to say a lot of how I actually. So I still have this. This is an old Halo competition. This is where I built up the first. This is Halo 3 back in the day. Comps. Well, I actually fund my brokerage back in the day. It was that and Dota 2. Dota originally.
Oh well, see, Dota would be closer to StarCraft. And I think there's I think there's something to be said there where there is some parallel. And I think you find a lot of people who are kind of gamers who want to be traders. And the idea is that the thinking of a strategy and coming up with strategy on the fly and that kind of thing, that's the same type of thing is going to happen, right? Where, you have to be able to adapt to changing information quickly. You don't ever get a clear picture. Like if you're, whether it's Halo or StarCraft or something, the other side is trying to prevent you from knowing what's going on at all times and everything like that. So I do think I've noticed that a lot, right? There's a lot of people out there who play games and then they also kind of go through. So, but yeah, it was just hilarious that I went in and I was like trying to talk to them about the capital asset pricing model and like all this fancy finance jargon. They're like, yeah, we don't care. That doesn't help you when things really kind of start happening. It's not going to help you.
Indeed, yeah, I think it's a similar aspect to chess. These kind of things, that was early days very much looked highly upon, that kind of thing. It's those kind of elements or ways of thinking, that kind of thing, that help propel you forward, right? Definitely. So, but yeah, so you started out more in the traditional prop sense then, I guess, versus modern prop sense. Where was the transition point from there to, I guess, broker stuff and then into the modern prop that we have today?
Well, the main there was a bit of a jump there between that and then I actually worked for about 10 years or so in the hedge fund space. So, more in investor relations and not really too much in the trading side of things, but just over there as well. And then by the time, because the prop firm that was at a physical location, as computerization and HFTs and all of this entered the market, a lot of those old school prop firms got cut out, and that's actually gave birth to this model that we have at Trade the Pool and the 5ers, because trying to get someone and saying, no, you can't have a job, right? You have to come in and you have to sit in this physical location and trade, which back then there's no other real option. It just doesn't really work, because how many people are you going to get that are, hey, I don't want you to work. I want you to sit here and I want you to put in 6 months plus, and then hopefully you'll get a paycheck after that. So I think why they went after university students. So as I was away from that space and in the hedge fund space, I didn't even know this place existed. So when I came back, the only option for me was to fund my own brokerage account and start trading that way. And then kind of later on, I just even discovered, and it was mainly just looking at YouTube and social media and everything. I didn't really discover, and it didn't really interest me too much, because I wasn't I was always on the stock side of things, right, from the get-go on. So the fact that there was no stock firms until then just kind of kept me out of the game, but kind of moved in after that. So, and it's because Trade the Pool, I guess, is the first one. It's the simplest way.
Yeah, it really is. Yeah. Something very special. So, okay, so you jumped over from there. You stumbled onto prop. I will say I also stumbled onto the sort of modern prop per se, if we want to put it that way, by chance. Very similar as well. I did, traded my own capital for some time, about a decade at that point before I stumbled onto it. So, do we want to jump into some of the benefits, pros, cons, how that all lays out from here?
Yeah. Well, let's take a step back too, and let's just start with the main differences. And a lot of people will know these already, but I don't think neither me or you are in America. But if you are in America, that's a big proponent, where you've got the pattern day trader rule kind of right off the bat. That's the first thing that kind of smacks you in the face. So if you are under that 25,000, and there's rumors that it's going to change to, I think I read about 2,000 down the road. But as you do that, as you get into that zone, you got to also remember that is a hard, it's law, right? You can't get around it. So if you're talking, intraday trading and fast trading, you have to know that there's that limitation on the broker side. And there's also obviously limitations on the prop firm side. You're not going to just be able to walk in and say, not anymore anyway, say, hey, I'm good at StarCraft, give me $1 million to trade with, right? So there's some challenges and the rules and everything you have to go through. So the fact that they're that different. Even, and we're just talking about just getting started. We're not talking about things that you have to do while you're involved with them, but just to get started, the fact that they're that different, it makes, I think, a lot of people look at it as an and or thing, as opposed to why not both? Why not kind of combine them?
Yeah, definitely. So here in Australia, we have certain rules around leverage, that kind of thing as well, and certain capital requirements, that kind of stuff, especially that have come in, or they're evolving over time, right? They keep changing. So you're definitely able to get that kind of access, whereas otherwise, without having that massive capital backed up behind you, even just to begin, and that's just to get going, right?
Yeah.
And so I think that's a massive barrier right there. Whereas prop does allow you to actually sort of move forward on that, versus if you're going to sit there, stack up that capital just to get going, and then you got to follow all the rule sets, you're going to have a much harder time. It's going to take you extensively longer just to begin, right?
Yeah, and then next on the differences side, I think it's important just to note just buying power, right? The ability to, depending on the stage in your life, right, is you, generally speaking, can get easier access to buying power in a prop account than you can in something else. And that's why I think the biggest draw for most people is, maybe you're able to, let's say you're even able to kind of get over that 25,000 if you're in America. And then you have to kind of look at that and say, well, say I want to make $100,000 a year for a living. That's, am I going to, 4x my account every single year without fail? It's absolutely not. But,
And then
access
taxes,
to
everything
taxes
else, right?
and I was going to get into this in a second, but at the same time, then you're not growing your account. As you're withdrawing funds from your account, it's going back down to that $25,000. So if you're able to make a 500% return consistently every single year, well, you should really be applying in the hedge fund space. There'll be people that will give that, but it's the same thing where if you can get a massive amount of buying power, 200,000 at Trade the Pool pretty easily, and then I think 200,000 or 350 or whatever is the boot camp account there, and so you're just talking the difference between like tens of thousands and hundreds of thousands happens pretty quick, and that becomes a really big difference and kind of a jet engine for growth, because it's good to have your $25,000 account, and we'll talk about, combining them and building that up over time, but you're not going to be able to pull from that and grow it at the same time. Whereas with the prop world, you can get way more buying power right off the bat. And as you prove yourself, you can take withdrawals and have more money added into the account, which is just something that's, again, completely different from the other side of things.
Yeah, precisely. So you're going to be able to get the scale ups along the way, plus redeeming capital. You can partition that to the side. It's going to help you fund your lifestyle, especially when a lot of people start, just like you're saying, building up that base capital to begin with, to get that leverage, that buying power. Very, very difficult, right? If you're working a regular job, something, you're trying to put money to the side. Maybe you've got rent, you've got your general bills, maybe you have a mortgage, that kind of stuff. Very, very difficult to partition enough money to the side to actually have that kind of access, right? So you might pick up a flyer on, say, I don't know, let's just say Nvidia, right? Because hot at the minute.
Yep.
If you're running that on your personal capital and you got $2,000, right, and you've made a 50% return, it's not going to change your life, right? But if you're actually able to access that kind of leverage, that kind of capital exposure, now it's actually making a real difference. If you're actually able to clean up 10,000, 15,000, something like that, and then you can pull that back to your personal capital, you can actually expand, right? So that's the kind of elements that gives you.
Yeah, and that's, again, it's huge. Like, a lot of people say, "Oh, I want to trade for a living." It's like, okay, well, if you're trading for a living, then by definition, you're drawing down your account, and that, again, that might be fine, especially in really hot markets like this, where we're at all-time highs and we continue to move higher. That becomes a lot easier. But then when you're withdrawing and you're also in a drawdown at the same time, then you're kind of compounding things, right? Your $25,000 account, you need to pay rent, and at the same time you're in a little bit of a drawdown. Let alone what that does mentally. Just the actual ability to have the cash is completely different thing. So, and then just to switch back to the prop side of things, and the last kind of difference I have is kind of rules versus no rules. And this is where I think, especially if you are either a newer trader or an undisciplined trader, starting on the prop side makes absolute sense, because there is nobody who taps you on the shoulder in the broker space and says, no, we're taking the $100,000 account back, and you've got to prove yourself before we give you back the $100,000. And there's no one to tell you you're done for the day. So if you say you're past all these differences we already talked about, there is no one who will say, hey, don't YOLO that $100,000 on a single trade in your brokerage account. But certainly you get that in the prop account. So that's a huge difference from both sides. And I think some people see the risk controls as a downside. I would say, especially for newer traders or people with discipline problems, it's going to be the only thing that saves your life. And if you had the money in your real account and there's no one there to stop you, you could be all over real quickly.
Yeah, exactly. I definitely agree with that 100%. So that sort of, yes, you do have set rules, set structures. Perhaps with the brokerage, right, personal brokerage, you can set those parameters yourself. It does give you flexibility, and we'll go into that and how that's beneficial. But trading from the prop side does develop that kind of discipline, right, coming in. So I've seen some people that have wanted to follow and get into trading, and they put in good money to begin, right? 50 to 100 grand that they've saved up, and just think they'll just punch it, right? They see other people doing it. They see social media, that kind of stuff. And they're swinging 20, 30, 40% of their capital base within days or week, right? That's not going to be long lasting, right? Even if they manage to recover and go, ooh, I'm going to try not to do that again. It goes on for a little bit, and then they end up in that position. You run the thing the whole way down, and just like you said, the broker is not going to put any controls around that. You're just going to go all the way down, get your margin call, everything's gone, start again. So prop definitely builds that discipline, work within those parameters. It's much more staggered, incremental, and it's more for that's where you can build into long-term compounding growth, right? Versus just trying to hit for the fences and take it away.
Yeah, and again, just huge differences, but and we've kind of been through all the differences, but then at the same time, it's the same market, right? So you end up going to the same market, even after all these differences. So, I think the kind of the first thing to talk about is that because the accounts are different, sometimes it makes sense when we're combining these accounts to think of them differently and to potentially trade them differently. Like, I know a lot of professional traders who don't even trade their personal account. These guys are, 6-7 figure day traders, and they're not even interested in trading the account. But what they'll do is buy index funds like everyone else in the world, or something like that. And then for the reasons you just mentioned, they're like, I have enough risk in my life over here. Taking additional risk on this side ends up just not being what I want to do. So I'm going to just treat them like completely separate beasts. Is that something that you do, or are you trying to do some sort of mirroring or something like that?
Yeah, that's similar to what I do. So that kind of traditional trope of like a barbell type approach, right? Where you have your very safe, sort of secure, consistent, reliable assets in your portfolio. You kind of, it's got predictable growth trajectory, that kind of thing. And then you've got your more risky or speculative, positioning type. Might even be more than one brokerage account or prop account, right? But you have them on that end, and you know what they're designed for. You know what the parameters for them are. It does have more risk, does have more volatility, but then it balances out the two, right? And you move them in lockstep with each other, but because they're offsetting each other, nothing's going to crumble, right? And so they balance each other out in that.
Yeah, and I think that's one of the best things is in also the risk side of things, but then also the hold time. For the 5ers, I know there's swap fees upon rollover, and then with Trade the Pool, we have the large day trading accounts, but the swing trading accounts are a little smaller and you can't hold through earnings, which means a 3 month would be a max hold. So, if you're looking to complement them, it makes sense that you would say, okay, shorter term trading, day or swing trading in the prop account, and then things that I maybe fundamentally, and again, I'm a CMT and a quant, so it kind of hurts me a little bit inside to say fundamentally, but maybe there's an instrument or a stock or even a commodity that you think, I know uranium was huge in the last couple of years, that you have some fundamental bet on, but you don't have a time constraint on it. If you put it over here, you're like, I like, uranium because I think nuclear is the next power source or whatever it is. I'm going to take profits that I'm hopefully making on the prop firm side of things, open up a brokerage account, and then just start dollar cost averaging into these long-term ideas, because I know I have no risk limits. And if it's something that I'm just planning on buying slowly over time, that's less important. And also I'm don't have a time constraint. So, whether I'm right this year or 5 years from now, it doesn't really matter. I'm just kind of accumulating, hopefully not just one, but these group of assets that I think could perform well. So, and that's a good way to look at them is look at the, the requirements, or I guess constraints you could call them, of one of account, and then apply that and look for relief from that in that different account.
Yeah, I agree, definitely. So if you got like a fundamental macro kind of approach, or some kind of something you've structured out you believe is going to happen, it might be a medium to longer term thing. It could be 3, 6, even up to 12 months, right? One thing you will have that differential of swaps, right? Stuff like that. Yeah. That's going to be very different on your personal brokerages. You can shop around with different brokers as to what kind of swaps either paid to or paid against that you'll get. And then that's going to be different to your prop trading, right? The other thing as well, if you, particularly for swings, obviously the drawdown daily, the rules are very different. So you could actually be in a mega trade, right? And you're up a couple of percent of whatever asset you might be trading, but you have some kind of adverse event, right? Say Trump starts talking about trade tariffs or something again, right? Only for things to draw back, wipe you out, just to recover after that, right? In your personal brokerage, you're going to have a larger degree of discretion as to how long and to what depth you can hold that. So you can offset these things and trade more the real-time, day-to-day, or potentially 1 to 2 to 3 days within your prop, right? Versus longer hold swings in your personal brokerage.
Yeah, and the and that's great, and that's essentially funding a investment account, which is I think one of the best things to do with a prop account. And then I think it kind of puts the prop a little bit more in its place, which should be a job for income, as opposed to a way some people look at it, which is a way to get rich and to make a bunch of money. And this is old trading mentor always used to tell me, is that day trading, swing trading is for income, and then investment is for wealth. And as soon as you kind of separate those out a little bit in your mind, then you're able to look at it as, okay, now let me not look at these as downsides or restrictions or limitations in the account. Maybe it's not the worst thing in the world that I can't day trade my smaller $20,000 brokerage account. Maybe I use that as a benefit, and I take my weekends to research longer term trends if I'm a technical analyst or something like that, and I can trade those. And then kind of leads me to the other benefit, is that in theory you can trade the same assets across different accounts. So like you mentioned, maybe long term you're bullish on the NASDAQ, but you're starting to see Trump walk on stage and you go, oh crap. You kind of can like hedge your life a little bit there. Like if a setup comes to the short side on the NASDAQ or on the S&P 500 or something over there, and that long term you're just buying this thing because stocks kind of go up over time, then you're able to bounce between those and say, okay, maybe I can make a little bit of money on the short side right now, hold it for a day or two, and then take that money that I made from it, withdraw it, and then put it in my brokerage account, which I'm buying not only at a better price now, but I was able to kind of net profit across the whole event, even though it was more tariff stuff where we dropped like 20% in 3 days or whatever craziness happened there.
Yeah, exactly. So you can do that, build up your long-term portfolio whilst at the same time, obviously, being able to be a participant in the volatility for whatever that brings, right? I think the other thing as well, just like you were saying, it also opens up more sophisticated levels to your trading. Ultimately, once you start getting more in depth, things like you were saying with hedging, stuff like options, that kind of stuff, where just like you were saying, as far as stocks, there's not much of a stock offering as far as prop, right? So you're kind of limited there, particularly for options, not really a thing, right? So that's going to have to sit in your brokerage account, but you can start to hedge these things out with your prop trading, adverse events, whether it's a Fed rate decision, when CPI was hot, the thing of the month, or an NFP or anything else, right? And you start to hedge that out, build a balanced portfolio in amongst your long-term holds, your slightly more active medium-term holds. You might have some options plays, as well as your intraday or multi-day trades. Very active trading in your prop accounts.
Yeah, and I think that's a perfect segue to just, the multi-strategy approach of trading. And I don't want to go back into the debate that we had that was great right before we got on here. But, Ray Dalio really popularized and in my work in the hedge fund space, the one thing I picked up right away is single strategy hedge funds had peaks, huge peaks and huge valleys, right? Sometimes they would come out of nowhere. A big example I always use is that buying distressed debt in 2008, which for those trying the markets, the world was about to end, and there was people out there with cash who went to like Goldman Sachs and said, listen, everyone thinks you guys are going out of business, so let me buy your debt at pennies on a dollar, and then later they made a whole bunch of money. Can't really do that anymore. So if that was your one strategy, you made a whole bunch of money for a very short period of time and then nothing after that. And then we had what was just called fund to funds or multi-strategy. And these were funds that invested in different funds that ran different strategies. And the benefit of that is that if you were doing it right, the hope is that there's one strategy that's always working. I guess I could use myself as an example. My swing trades are doing great today because we're up huge. My day trades, not so much because it just didn't work. So it's another way to look at them is instead of looking them as, one feeds the other necessarily or anything like that, I look at them as a diversification, not even across assets, but a diversification across strategies. For, I am... one of the reasons I'm a quant is I am a very bad, especially day trader, really, really bad. So what I do is I look to say, okay, I'm going to, automate some strategies and work to build some systems and use other people's money for those, the day trading side of things, where I focus on the swing trading side of things from the other side. And what I notice quite often is you get a lot of days like this where the market has been kind of ripping. It becomes harder to place trades because you're not getting ebbs and flows. You're not getting, support and resistance because it's just ripping. But I'm okay with that. I'm okay that I'm down a little bit in my day trading account because the swing trading side of things is doing well. And I think that's just a huge benefit across just different time frames as well as everything else we've been talking about.
Yeah, and that goes also back to that psychology aspect, like you're saying, like especially if you're not, you might struggle a little bit day trading, being really active for whatever reason. I think one of the most common reasons is that people get wrapped up in things needing to happen now. And if it doesn't, then I'm out, right? If you've got something like that in the background, you know that today is this is another, just one piece of the larger puzzle, whilst everything else is working in the background, and it's going to tend to complement and enhance even your day trading, right? Because you know that this is still going on. You're not going to crash out. You're not going to go hungry, that kind of stuff. You can just work through it. Say the market wasn't that great today, or it was working great until Trump came out and tweeted, something about China, right? And then that was what wiped you out. But otherwise, you would have been doing well. But if you're solely reliant on that, it is going to be much harder, when you're in it, dealing with it, and then also to recover, of course, as well.
Yeah, and the multi-strategy thing I think helps in a bunch of ways. One is, there's no strategy that works all the time. And the solution for a lot of people is just don't trade in the times that it doesn't work, and that's doable, but it's hard, right? It's hard to know, am I in a trending market or am I in a range bound market, and when are we going to get out of this range and things like that. So it's easier to trade just multiple strategies across it. And also, I know I read in chat as it goes by too, I've seen a lot of people talking about FOMO, right? That's like the most common bad problem in trading. Well, one way to deal with FOMO is to trade more, but because you've got different accounts, you're not just doing the thing that's not working right now more. You can, and my buddy Mitch, who's on stream with us all the time, he does this as well, where you'll see sometimes he gets stopped out of his day trading account, and then he just moves on to the swing trading account. And he doesn't have that FOMO because he's just saying, okay, right now, I think he has like a limit of 3. He's like, I took 3 trades, those 3 trades lost. I'm going to shut down this account. I'm going to focus over here. And it just becomes a little bit psychologically easier to say, I'm not stopping and completely walking away. I'm just shifting my focus into either a different asset class or a different time frame or whatever is working. And that helps, especially, the TikTok kind of ADHD brain to go, okay, I'm still going to get that stimulation. It's just going to be focused somewhere else. So you won't push as hard against your broker or your prop firm, because you can just kind of jump from one to the other, knowing that, okay, the prop trading is just not working out for me right now. So let me just go and research maybe some stocks to buy in my brokerage account, or the other way around. The market as of now hasn't gone really anywhere since October. So, maybe it's more of a time to focus on the day trading side of things and look for some kind of moves that happen over there.
Indeed, I agree. And yeah, like you said, multi-strat in terms of long-term, short-term, in between, as well as multi-asset. And I know, like you're saying, we had the debate before, single, multi. But the point is, I think with trading is that you can make it as simple as you want or as complex as you want. You can really ratchet up that complexity if you wish to. You can get really sophisticated, right? So I think obviously over your trading journey, that's going to unlock more of those components once you build that out in a steady manner, and it all becomes complementary into this overall portfolio that is balanced and really works for you. And just like you were saying, it's that wealth building portion. Because I think at the end of the day, we're all here to essentially make money. People like trading. It's enjoyable. I have a science background, that kind of thing. I find it very interesting intellectually, figuring out all the moving components, that kind of stuff. It's kind of this multi-changing layered chessboard where the rules change all the time, right? It's interesting. But at the end of the day, we are here to essentially make money and hopefully, build a life for ourselves, whether it's, family, partner, kids, whatever else, right? So I think that is definitely something that can complement and help that along the way, particularly like you were saying earlier, as far as transitioning from, say, you're working a job, you go full-time trading on the side, maybe you drop down to part-time, trading a bit more heavily, but you want to fully jump over to full-time, you're going to need that bridge. And I think that gives that security to really move over, for sure.
Well, and that's, before we get real nerdy, I'm gonna drop some quant stuff on people as before we end it. But before then, we also got to talk about the difference of, like when you were mentioning wealth, it's really what got to me, is that there's different types of accounts. I trade, and I know in Australia and everyone's all over is going to be different, but I trade. A lot of my money is in a retirement account, right? We call it an RRSP. I think it's an IRA in the US, and these are accounts that essentially you can't touch until you retire. You put money into it, you get a tax benefit from doing it, and then everything that happens inside of the account is tax free, but you can't withdraw from it till without heavy penalties until you're retired. So there's some amount of, okay, that to me is the easiest split that anyone can do between the two accounts, is that I can't take income from my brokerage account because it's government says I can't, and if I do, I'm going to get really smoked from a tax side of things. Right out the get taxed completely from it. So I'm just going to look at this different, and then I think anything you can do to kind of mentally separate them, I think is a really great way to do it, because then you're not just stacking up on top of strategies, and yeah, I think that's huge. So just like you have to learn the rules of the prop firm, please, whatever country you're in, sit down and try to figure out if you have these accounts where the government's essentially freeing you from the worst thing in the world, which is taxes, to put money into them to, you know, lower your income bracket and things like that. It's you know, just like, again, there's games to be played in the prop firm space because there's rules and there's, you know, trying to figure all that out. It's no different in real life where the government is imposing these rules of these accounts, and make sure you take advantage of them in the best way you can.
Yeah, indeed. So I think so in Australia we have superannuation, very similar, and there's all sorts of deductions if you want to contribute excess on top of, often typically your employer pays a portion in there. These kind of things, and yeah, you do get that lower tax for whatever does go in, and that's the important part as well. Realizing that you're then going to get the gains on that with the lower tax. Essentially, it's the equivalent of making a high return, right, for whatever asset you're trading or investing in. Because you paid lower total fees, right?
Yeah.
And then that compounded is the important part over time, over a decade, 2 decades. That's how you actually reach that wealth status, like we're saying, and get to say whatever your goals are. It might be to buy a house, something like that. You know, you get that deposit, be able to get a mortgage, unlock that kind of capital, and basically push that forward, right?
All right, so now let's get nerdy with it. Let's say everyone just ignored everything we said, and they're like, listen, I want to do the same trading across the same assets, across the same whatever in both. And this is, I left this to the end because do not really recommend. But there is something to be said there, and there are some ways you can kind of help with quantitative approaches and things like that. So let's say you got amazing strategies. You know, you're on fire and you have been for absolute years, and you've got your account, and it's your personal account. And this is kind of one of the things that I was looking at when I was starting from, where I have my personal account. And, you know, within that, as a quant, I don't place the trades, right? I have a robot and it places the trades for me. For some of these people, and for some of the people who are in this situation, there can be a very strong advantage with looking at a prop firm as kind of leverage, right? Leverage plus. Like, say you have a really great Forex trading strategy and it works phenomenally, and you have $100,000 in your account and you're trading it and everything's great there. That's not necessarily a reason to ignore the prop firm space, because if the strategy is so good, and especially you have the proof, you've been trading it for some time, in my opinion, there'd be no reason not to go out there and say, I am going to find technology that makes it so when I take a trade in my brokerage account, that same trade gets taken into a prop account. And now, very cost efficiently, I have gone from $100,000 in buying power to the thing that I know up to $200,000 in buying power right away. And all of the abilities of withdrawing money and growing your account at the same time and all of that still apply. But again, I just want to reiterate, this is only for the guy who just knows that his strategy is good. There are ways to do this where you're looking at it from across the other side of it, where you're saying, hey, this strategy is so good, I want to be able to apply more leverage, as opposed to going and raising money from someone or taking out a loan or doing something that's even more not recommended. You could do that. You could look at a prop firm as a way to amplify, I guess, the success you're already having.
Yeah, definitely. So I think that's the nail on the head right there, right? So you can build kind of a micro fund in between going out to raising funds. Say you've got the track record, or maybe you've got a track record for a period, but it's not being, qualified by like an accounting firm, that kind of thing. You need a bit of a longer time period to go out and raise money, something like that, right? You can keep building that as like a micro fund, keep building your capital under management essentially via prop, also adding the further earnings that you're getting to your personal account, link it all up, and essentially you've got your own little micro fund without having to go, like you were saying, go outside, take on risk of outside money, investors, the legal aspects, all that kind of risk that comes with it, right? But you get the same benefits, the same pros, all of that right there, without the cons, Right?
Exactly. And again, just to reiterate, all of the stuff we said before that, I think applies more, right? And just to summarize, right, I think we were all in agreements the whole way that the best way to combine both of these accounts is to not, right? To split them up the best you can and to think about them differently. Use a prop firm for its advantage for high buying power for short-term trading. Use a brokerage account for its benefits of the exact opposite. You get way less buying power, but you can hold for as long as you absolutely want. And by splitting those out, you generally get the best of both worlds, where you're using one to feed the other and vice versa in good and bad times. But right, there are ways out there. So like for Trade the Pool, for example, we have a partner with Signal Stack, which allows me to send orders directly from my trading view into Trade the Pool. And at the same time, I can attach the same order and I can take the same order in my brokerage account. And that's just one example. I know with the Forex side of things, there's a lot you can do with MT4 and 5 with trade copying and splitting and that kind of thing. So those tools do exist. Just if you're you're essentially applying additional kind of cheap leverage, I guess is a way that I look at it to your account. Just be very, very sure that you have a strategy that works with risk controls and all of that, because if there is a blow up, you've just kind of amplified it. Now, the benefit from a prop side of things, it's not like you put $200,000 in and blew the account. You blew your 100,000, which sucks, but then you paid a fee and that fee gets blown. So as you can go and do those things, again, just be very, very sure. Like the option is there. Just be very sure that it's an option that makes sense to you. It's not just something that you're doing because you have a hunch that your strategy is going to work well.
Yeah, I think it's something that you utilize over time to amplify your progress as a career per se, right? Mm-hmm. And utilize it in that manner. So hence utilize, not exploit, right? So back to what when we had Mitch and Rich talking, right? Mm-hmm. Versus the steady compounding versus hot money. Mm-hmm. The point of trading, you're not here to make hot money, get in, get out, get rich in 2 days, 2 weeks, 2 months, right? You're here to slowly compound that. And essentially the winner in the market is like, if you can survive, right? The longest person that can survive the longest you will make it overall. That's essentially your goal. Survive every day, incremental gains, compounded over time. You'll get there hands down, right? If you risk it all, mess it up in between by trying to overshoot something, blow it up, charge it too hard, you'll be very, very unhappy in the aftermath of that. So better off just sticking to that slow, gradual compounding. And like we're saying, that is slightly more sophisticated, more advanced, I guess. Same once you start going to options, all those other aspects we're talking about. But that's sort of the progression path that you can ultimately utilize once you get along the way, I think so.
Yeah, and that I think we can leave it with one of my favorite quotes from I wish I could remember one of the old trading mentors I had, and he basically said, in trading, your job is to stay alive long enough to get lucky, right? Periodically throughout your trading career, you're gonna hit something, you're gonna get extremely lucky, either through a series of wins or a couple giant wins, but you have to again stay alive for that period of time. So by diversifying your trading strategy and what you're trying to trade, that definitely helps. And just making sure that you're using both of these tools that you have access to.
All righty, guys. Michael, LJ, how was it?
Beautiful.
Great.
It's great. Good chat.
All righty, that's great. Any final thoughts on that? What's the verdict? Are we gonna do both accounts, prop and broker?
I personally would say do both. Definitely. Yeah. I think that's the maximal utilization of what you have in front of you, right? And it's something that didn't exist a long time ago, and now everyone has it right in front of them, and you get the max utilization out of both to build your day-to-day living, progress from working a job into full-time trading, as well as building wealth. I think that's the best option to do that, hands down.
Yeah.
And in a world where the technology is that easy, like, why not? Right? Why not? When you can click one button and send an order out to multiple places, if you're trying to amplify returns or diversify returns by trading multiple assets across multiple time frames. At the end of the day, especially for the low price of a lot of these accounts, it's like, why not? Right? Why not add that to my repertoire? If I'm normally just a swing trader, day trade with a prop account or vice versa. I think it's it just becomes a no-brainer at some point.
Yeah,
I think a
100%.
no-brainer to build your capital under management, no question.
Yeah, and talking about low price, so this is definitely the time to remind everyone that we have a promotion on the 5ers side. You have a 2.5K account, high stake account, that you can get right now for $12 and 50% off on the 5K account on trade the pool side. So make sure you get yourself one of those or at least two of those. And besides that, as I mentioned before about the broker that we launched, so TSG Trade Set Go, you got the link in the description below. Best conditions in town for sure. Right now available for European traders and soon to be all over the place, all over the world. And lastly, you also have in the description below the link for the kit, the starting kit for 2026. This is basically a trading plan combined with a book of our funded traders on Tradepool and another book, funded traders of the 5ers. Tons of information, tons of knowledge and experience that gathered throughout the years. Make sure you click the link, download everything. 100% your trading will be better once you finish reading those and using the trading plan. Michael and LJ, thanks so much for coming in. And we'll definitely see you again. Of course, you can catch Michael Noss on Tradepool's stream every day and LJ as well on the 5ers. So right now we're gonna go to our Q&A, our live Q&A. I'm gonna bring Saul here. You can already start writing the comments, the questions in the chat box, and we will answer that soon. Before that, while you're doing that, let's do the giveaway and run the last one for the day, which is 5 accounts, 100K bootcamp on the 5ers, and another 3 accounts, 100K on Trade the Pool. So Saul, come join me on this one. We're gonna do that.
Hey guys, how you doing? How you enjoying the event? How's everything? So yeah, we got our last giveaway for this event, and then we're gonna take the questions. So start sending your questions. We're gonna do the giveaway, and then we'll go back to answer some of those questions to wrap up the evening.
Alrighty, we're going to start with the 5ers, 5 accounts, 100K bootcamp. Let's see that. Let's roll the dice here. See who will win 5 accounts right now on the 5er side. Okay, here you are.
There you have it.
Yeah.
So guys, as always, allow us 84 hours to receive yours.
48. Yeah.
48 hours to receive those on your inbox. You should have them in a couple of days.
Yep. And let's do the last giveaway for Trade the Pool, which is 3 accounts, $100,000 of buying power. That's a lot to trade with stocks, ETFs. Let's run this and see the 3 winners.
1, 2, 3. There you go.
Here we go, guys. And now for the final show, let's answer some of your questions. You can keep them coming through the chat. Our guys in the back going to choose those, and we will see, and we will answer that. Let's see. Alrighty.
Keep them coming. Keep them coming.
Here we go. Here we go. The first question. Let's zoom in so we can actually see that. Ta-da-dum, ta-dum. Do you have it?
No.
Right here.
Yeah.
Okay. Go ahead, Saul. This is yours.
Does ever increase the capital for the swing trade accounts? That's you.
Okay, that's actually me.
Yeah.
All right, first question, are we going to increase the size of the swing trading account? Meaning you can hold overnight and over the weekend stocks. And the classic answer is, flat answer is yes, we are going to do so. As you know, on Tradepool, obviously on the 5ers as well, we always analyze the data, testing it and see what we can improve and how we can do better for you guys. In that case, we will increase the swing size as well, but we got to take into consideration the risk side of it. Obviously, stocks can easily gap up or down after a big news that just released. Could be anything, and we got to protect the capital at the end of the day. So we will increase that, but of course, with some measurements. Go ahead, the next question.
When 5ers Futures start? I want to say soon.
Soon, it's a good
but
answer.
it's a Q1 next year, so we're a couple of some weeks away. We're final, I would say final stages of getting there. So a couple of weeks more. I don't have an exact date, but we're soon, guys.
Alrighty. I need to get an account from the 5ers to trade and pay for her translate for Michael. For me. Appreciate it. I love being bold. I've been like this for probably 20 years now. So I'm pretty happy about it. When you think about it, most nice looking dudes out there are bold,
Yeah,
Vin
questionable.
Diesel, Bruce Willis, good guys.
I have a question for Michael. So
that's a cheating, right? It's Jonathan from the 5ers.
I'll let you answer that, Jonathan. You've seen us both. We've competed each other, and pretty easy to say
that I won. We're gonna do a rematch for sure, many times more. Next questions, guys.
Yeah, any holiday promotion sale on the account. So that's the promotion, guys. The prices you're seeing there on the accounts on the 2.5K account is already discounted price. It's not the regular price. So from today until January 2nd, you got the 2.5K account for only $12, and you got the 5K account on Tradepool for 50% discount. So there you have it.
Yeah.
On how many 2.5 accounts can I buy at a time today? You can get up to 4 accounts at any given time. No more than 4 accounts.
Alrighty, bring some juicy questions, guys. Let's see what you got.
You want to get that one?
Yeah. What is the most profitable roadmap to get funded, and how to get back from a drawdown? Okay, now we get into the juice, right? I'll start with a quick one, the most profitable roadmap. And I think the guys, when we did a session with the 4 funded traders, Kevin, Will, Sam, and Justin, they answered it pretty nicely. First of all, it's measured of a trading plan, a discipline as well, and focus. Don't try to swing for the fences. Don't look for that holy grail. Just believe in the process, as they said, and then and keep your focus on that. Once you start to go into different directions and trying many other stuff, most likely you will lose the focus, meaning it will be harder for you to succeed. So keeping it focused, that definitely should do that. And of course, the rest of the pie with risk management, right? The right edge and everything around that. And get back from a drawdown. You want to take it?
Yeah, absolutely. A lot of traders think that in order to get back from drawdown, you need to increase risk, increase your lot size to get quickly out of drawdown. And that's actually the opposite of what you should be doing. First, you need to hold in a second and to understand why are you in drawdown. If it's something on your strategy not being executed in the right context, let's call it that way, or it's something you as a trader not executing the strategy properly. So first, analyzing and understanding why is the drawdown being caused. Is it the strategy, and is it well executed? Is it only part of the process, or it's something on the context you're applying the strategy not correct, or is it you not executing the strategy properly? Then you need to reduce risk, reduce lot sizes, going back to no risk, the smallest position available, and try to get back into rhythm and get back into consistency and get back into winning trades to build up your confidence again, and only then to increase lot size again to get yourself out of the drawdown.
Yep. Keep them coming. Let's see if we have another one. One more. Okay, that's yours.
When is the5ers adopting Trade Locker platform to enable us to trade on second time frame to utilize our edge on the second time frame? Okay, I see what you say. Okay, so there's no plans to add Trade Locker as a platform, but there will be some options to add integrations to TradingView, for example, in the future. On TradingView, you will be able to trade on different time frames, but at the moment there's no plans to add in Trade Locker.
Can you explain further what Trader Pool is about? So Trader Pool focus on equities, so you can trade up to 12,000 stocks and ETFs. You can short anything, you can long anything. ETFs means that you can actually, instead of buying gold, you can buy the GLD, or you can buy a triple leverage on gold, or a triple leverage ETF on the NASDAQ, or literally everything you want to trade. And the beauty of it is plain simple. Of course, if you're coming from the Forex side, you can easily, through our website, learn how to do the shifting from Forex to stocks. All you got to do is just learn the nuances of the market. But at the end of the day, a chart is a chart, and the psychology of trading, it's the same. So definitely recommend you to try it out, especially now that we have this huge promotion, 50% off out of the 5K account. That means that you can buy with $29 a 5K account, and that will be enough for you at least to start trading, learn the platform, super easy and very intuitive. And once you're in, you will probably be hooked very quickly and want to continue to trade stocks because it's better.
I don't know if it's better, but I can tell you, the movements you got on some stocks, you can only dream of them on the Forex market. So there's a lot of advantages of knowing how to trade stocks, and there's no better way on doing that than on Trader Pool. So go check it out.
Alrighty, next one. As per your analytics data, what type of trader are most profitable, like consistent, day traders or swing traders?
I can tell on the 5ers, swing traders tend to be more consistent. I don't know if more consistent, but they tend to get to higher accounts. Day traders and scalpers, they usually have some period of success, and then they end up losing the account or going into drawdown. I do see swing traders gaining to higher levels of funding.
On Trader Pool, we do offer day trading and swing. Most of our traders are day traders, so we do see that success. I can definitely understand what Saul is talking about when it comes to holding your position a few days or even more than that. and to be more consistent. But a lot of our traders, basically day traders, and doing pretty good.
So if we wait for confirmation decreases, how to optimize this? I don't think you need to optimize that. I think you need to understand that the fact that you're right, you're giving up on RR, but you will increase your win rate. So that's something just to be aware and to test with yourself to see how affects the performance of yourself and your strategy. So you're giving up on RR, but you're capitalizing on wins. So it should compensate that fact.
Opinion on multi-asset versus single asset trading. Go ahead.
When I started back in time, I used to focus on multiple assets. I used to have like a strategy, and I would look for the signal no matter where. And with time, the way I evolved as a trader, I started to focusing more on a couple of assets. Let's say one asset for me is Euro USD, but with time I added a couple more. And there's no fact that you start mastering a single asset, and you start understanding the nuances of the asset. So you start getting familiar with the volatility and with the volume and the range you can expect, and you kind of understand the price action of the asset, and that for me worked better. But I've seen a lot of traders having a lot of success with multi-assets. For me, it was better to focus on a couple and then mastering them to understand how to play, what to expect from each one of those assets. So for me, like single asset or just have a couple of assets was better than multiple.
Yeah, and since when it comes to trading stocks, you have 12,000 symbols at least that we offer, and obviously I had many years when I traded multiple assets, so jumping from different assets every single day because you're looking for the catalyst, the news. So on one day you have a top gainer, the next day it won't be there, and there will be a different asset. So you always trade in different, basically stocks in play, as we call it. But in time, definitely in the last few years, and I guess it's more about maturity and maybe focusing also on trade pool. So I started to focus more and more on the NASDAQ, like the QQQ, the ETF, or big names like Tesla and Nvidia, and actually trading those mostly. From time to time, I still love to go to the gainers and grab myself the one to trade, but in most cases these days, at least, I'm focusing on one asset, two asset top.
How to stabilize the mental when the price goes back to entry level, that you lose all profit or partial of it. There's two sides of this answer. First, when I guess you're talking about, I don't know, let's say a break and then a retest of an area, and then you look for the continuation. So when you trying to get the break of let's say a resistance level, okay, that resistance level is a new key level, okay. So it's natural for price to want to go back to retest that before continuing up, okay. So first you need to understand that many traders go and trail their stops to break even, okay, and so they're placing now their stop at a new key level, which is naturally the market will naturally want to go back and retest that area. And many traders go out of the trade, get out of the trade for break even just to see how the trade continues in their favor. So first, understanding that when a breakout and a continuation from the breakout really happens, that level of the breakout, the resistance that got broken, becomes a new key level that the market will want to go and retest that. So be very careful before trading your stop very, very fast, because you're going to find yourself many times in that position when you get stopped out just to see how the trade continues in your favor. The second part is, a lot of, if you see, or if you notice that many times that happens to you, try maybe capitalizing, okay, trading, taking profits after breakout, and when you see the retest, then you can look for a new opportunity to buy. So now you already made money and you have a new opportunity to make money again when the retest comes. Okay, so you put yourself in a win-win situation.
Yeah, and I will add just a tiny bit on top of that. If your size is correctly, then in most cases you won't be too eager or too fast to bring your stop loss to break even, right? So if you have the right size, when it will drop to your entry level, you will actually add more to the position instead of putting your stop loss there. So you will be thinking of, okay, I have the right trade. I did my analysis. I entered the trade. Now I don't want to stop out of that trade, but I actually want to take advantage of that trade and accelerate on that, pushing the pedal to the floor, basically. So try to change your perspective of now, not to put your stop loss at break even, but actually add to your position to make it a bigger trade.
How much time we should focus on planning on journals?
A lot, and that's a key for me, at least. Yeah, and especially when it comes to trading stocks, but I'm sure it's the same thing for forex and futures. At the end of the day, the more prepared you are, the better your result will be, right? For everything you do in life, think of it, right? You prepare yourself to a vacation, you have everything set. Of course, you can keep some of it to more flexibility, right? To have a little bit more flexibility. But at the end of the day, if you are prepared with everything that you need, it will be much easier. You won't have to think it over once it's occurring. So be prepared is 100% key.
Absolutely. You know, in all sports, every high performance activity or hobby or whatever it is, you keep seeing high performing sportmen. They keep training and they keep recording everything and they keep learning trade books and all of that. So training is not different. At first, you need to journal a lot and pre-plan a lot and just to learn. And once you become a master of trading or a profitable trader, you need to continue doing that in order to get into your best performing within you. So it's something that never stops.
Alrighty. Anything else?
Less win rate, a greater RR, or more win rate but less RR.
Why not both, right? But all jokes aside, of course, there will be some, play with the when you have higher success rate. In most cases, your risk reward will be lower, and the opposite. It depends on you, right? You can be profitable on both ways, but the stage that you're in will be. You will choose according to the state that you're in. You will choose if you want more higher success rate. If you are at the stage that you want to have more higher success rate or just more confidence in your trading, then definitely go with that. But I had times when I had low success rate, higher risk reward, and the opposite. I know that right now I'm at around 65% and risk reward over 1.34. So it's just a matter of period in time and again maturity or where you at on your path. What do you think?
Yeah, I would say each strategy or approach to the market has different statistics by nature. Of course, aiming for both high win rate and risk reward is ideal. It's hard to achieve. Usually when you're scalping or day trading, you tend to have like high win rate, break even risk reward ratio. When you're swing trading, position trading, you will usually will be aiming for break even win rate, but very large risk reward ratio. So that's something usually it's built in your strategy or your approach to trading. And as long as you're familiar with it and comfortable with, it's natural.
For sure. Alrighty, guys, let's do one or two more and we'll finish here. It was an amazing event.
It was.
I'm sure, I hope at least, you guys enjoyed it. Let us know in the comment. Write down if you enjoyed this event and if you like us to continue to do those. We definitely enjoyed it. And I know the guys that been here. At the end of the day, trading is very solo, right? When you trade in, super solo. But if we can become a community and actually help each other, that makes sense to all of us, I guess.
Yeah, I just want to say, like, guys, there's a lot of, I just want to, of course, thanks traders for coming and for watching and supporting. I hope you had value and good content from this from today's stream. You can always go back. We have the last week of the month tends to be low volatile and less volume in the markets. There's some bank holidays, so it's a good time to go back into the recording of the stream and watch it over and to take notes and to learn and to prepare for next year. Make sure you grab your trading plan from the landing page or the description to prepare your best for next year, for 2026. Get one of the accounts we're offering at a discount as a promotion now to get ready for next year. And of course, thank you guys for coming. Thank you, for all the team. There's a lot of people working behind the scenes to make this kind of events possible. So thank you guys, everyone. Of course, Mike, for being the host, great host. So yeah, let's take last one and we'll wrap it up.
Alrighty, that's yours.
What's the biggest change or innovation we should expect from 5ers in the next year? Actually, next year the 5ers is turning 10. So the company's February, we're going to be celebrating 10 years. So around January, February, and the rest of the year, we're going to be releasing a lot of surprises and features to make traders even better and giving more value to the traders. So of course we're going to be adding futures, but other than that, we have a pipeline of surprises prepared for you for next year, guys. Celebrating, the way we're building the industry today and shaping the industry and impacting thousands of traders worldwide through the years. So next year it's an exciting one for the 5ers.
Yeah, for sure. Trader Pool is also about to launch a few goodies, so make sure you keep update on those emails, social media, and of course the live sessions, live trading rooms on the 5ers and Trader Pool. Thanks so much, guys, for you that's been with us for many hours, and it was for us amazing for sure. And we'll see you on the next time. Take care.
Thank you, guys. Happy holidays. Happy New Year's. See you next time.
Take care.
Bye-bye.